send Shauna an email thanking her. And it's shauna@chrisnaugle.com if you truly want to do it, because she spent a lot of time breaking down yesterday's recording into sections. So instead of trying to watch the whole thing, you can literally just go to whatever section you want to watch at any time, and you can just watch that section, which is, I don't know if anyone knows, that is a lot of work. But she did that because she wanted to make it a good experience for anyone that wanted to go back and watch certain sections. I know yesterday one of the top things was the crypto in the bonus session that we did with Spencer. So you'll see more of that today. Spencer's going to be on today. We've got an action-packed agenda for you guys. We got a lot of speakers, starting with none other than Kevin Shortell, one of the leading, award-winning notes guys in the world, or not the world, I don't know, the country, whatever you want to call it. I got a little ahead of myself on that one, but Kevin knows a thing or two about passive income and doing that through notes. So what we're going to do, we're going to jump right into this, but I also want to start with one quote, and this is an important one that we live by here at Money School, and it says, always remember what need you are serving. Okay, let me repeat that. Always remember what need you are serving. So that need is always solve somebody's problem. And if you do that, your problems will be solved. So Kevin, what I'm going to do is I'm going to stop the share and give you control so you can pretty much do anything you need to do. And the show is yours.
Awesome. Thank you very much. It does say host disabled participant screen sharing.
Try it again.
All right. There we go. Perfecto.
There we are, man. Okay.
Good to go. And thanks everybody for being on. And I really love this topic. It's an industry that, as Chris was saying, I've been in now for over 30 years. And actually, I do have clients worldwide now. I've got clients in England. I've got some over in the Philippines, and I've got some people I'm talking with in New Zealand. So all of those folks investing in notes in the United States, by the way, because of the way our system works, it does provide a great opportunity. And the length of time that I've been in the industry, it's been interesting to see this grow from a niche. And it truly was a niche about 30 years ago. There was just a handful of people in this business back then. And now it's gone to full mainstream in its own asset class. And you can see that reflected very publicly through authors such as Kiyosaki. Whether you like what Kiyosaki teaches or not, he's got a big audience. And part of what he talks about in his latest book there, you can see I lightly underlined that there. It says, very simply, the rich investor money in assets that put more money into their pockets, such as real estate, stocks, bonds, notes, and intellectual property. You never saw that 30 years ago, 20 years ago, even 10 years ago. You really never saw that because notes was considered a niche type of industry. But because of the crash that we had in 2008, which was really a real estate financing crash as well, that elevated this industry to a whole different level and to a whole different audience. I have clients who've never invested in real estate, let alone notes, that have been focused solely on the stock market that are now investing in notes. They understand that what they are buying is an income stream that's backed by an asset in the form of single family home, commercial property, vacant land, whatever that collateral is. And when you have something like that that's backing your investment and it provides cash flow without some of the headaches we were just kind of chatting about earlier, it's really something that all investors should have as at least as a part of their portfolio. Now, of course, some people go into this like myself on a full-time basis, but it is something that really everybody should take a look at. And I did like this quote as well here by Robert. To obtain financial freedom, which obviously is a big thing that Chris is working with all of you on, to obtain financial freedom, one must be either a business owner, an investor, or both. And that's what this is all about, because that generates passive income, generating passive income, particularly on a monthly basis. That is almost the very definition of the note business. So we fit right into that quote there. And I think all of you would agree that that does make sense. So I'm going to be talking about the note business, and I'm going to lay this out. I've got a lot of information to cover. I'm going to try to get everything in the hour here. So we're going to move a little quickly through some of this. I'll slow down on some other things here, but I want to be able to, first of all, explain what a note is, because we might have some people who are, they've never heard of this before. So I'm going to lay out the basics for you, which is important. And then I'm going to lay out for you the overall real estate market, because this is the best opportunity in all of real estate, certainly right now and into the foreseeable future. But I want you to see the facts. I want you to see the numbers behind it. So I'll cover that first. And then I'm going to go down and show you how these work. I'm going to get a little bit into the numbers. And what I really want to end with is pulling up a financial calculator and going through some of the very creative things that can take this business to a whole different realm. I mean, we can buy notes, as I say, right off the shelf, as I like to say, and make 12% interest, 10% interest. But there are techniques and exit strategies within this industry that you can really make an almost infinite return. And what I mean by that is, how would you like to buy a whole note and be able to sell part of that note for more money than you bought the whole note for? And you still own half of the note. I know that sounds weird. You can buy the whole note, sell half of it to somebody else for more money than you paid for the whole thing, but you still own half of the note. Absolutely crazy. When you don't have any money invested in that, you know, you don't need a financial calculator to figure out how well you're doing. So let me start with the basics and jump right into this for those of you who may not understand what a note is. So investing in real estate backed notes, that's the best way I like to put it. We invest in notes, but it's all backed by real estate, which again could be single family homes, which it is for the most part, vacant land, commercial property, industrial property, any kind of property that is out there is ultimately our collateral. We don't own the collateral, but it is something that we can go after if we are not paid. So a note on its most basic level is just a promissory note. You can literally think of it as an IOU. That's all a note is. Somebody is borrowing money and they're promising in writing to pay it back. And they're outlining in the note all of the terms. So in this example here, somebody's borrowing $72,000 from direct mortgage funding at 6.25% interest. The payments are due on the first of the month every month. The monthly payments are $443, etc. That's all a promissory note is. So if you go to a bank to borrow money to buy real estate, you have to sign a note guaranteeing, promising that you're going to pay it back. Now, banks are smart investors and they're going to say, well, your promise is good. Okay, we hope that you live up to that promise, but what if you don't? If you don't, we have to be able to have something to get our money back. And that's where we have a mortgage. Okay, so a mortgage is the security agreement that backs that note. So although we talk about this being the note business, we really don't just buy notes. We buy notes and security agreements at the same time. So the mortgage is the document that attaches that promissory note to the collateral, in this case, a single family home. And that's written, by the way, on all mortgages. There's a type of mortgage called a deed of trust, which some of you are familiar with as well. They're both instruments of security. That's all they are. It's a security instrument that basically says, look, if you don't pay back the note that you have agreed to pay, then we're going to enforce the language of the mortgage. So what the mortgage does is it has all the rights and obligations of the parties involved, the rights and obligations of the lender or the note owner, and the rights and obligations of the borrower. If the borrower doesn't pay, then they can enforce the mortgage to the point where it goes through a foreclosure. And that's really what a foreclosure is. It's just the enforcement of the signed agreement, which is the security agreement in the form of a mortgage. So if we own a note, we own the cash flow, we're really acting like the bank. We're not a landlord. They own the property. We just have the lien on the property. They make the payments to us. We don't get those calls, as Chris was talking about, say, hey, toilet's overflowing, water pipe is busted, heater's not working, whatever it is. We don't get that because we don't own the property. They own the property. Okay, so that's how this works, and that's why it's so attractive to people. Is imagine this: if you can buy a note for, let's say, $50,000 and it's backed by a property worth $100,000, where's your risk? You know, you have minimized, if not eliminated, your risk when you have such a gap like that. And those type of deals, which I'm going to show you, are absolutely out there in good numbers right now if you know where to go and if you have the ability to identify a deal. The ability to identify a deal is, by the way, and I've been saying this for 25 years, it's the most important thing. if you have the ability to identify a deal, the money and everything else is out there, whether you're using your own capital, whether you're brokering a deal to somebody, like wholesaling a deal to somebody. If you have that ability to identify a deal, everything else will start to fall in place. And that's what I help people. I'm an expert in doing that and setting up all of this due diligence for people so they understand what a deal looks like. I'm going to get to show you today how these deals start and how we build upon those deals so we can identify those pretty quickly. So to visualize this a little bit better here, you've got a collateral property and you've got a note owner. The note owner is receiving this positive monthly cash flow from the borrower who lives and owns that property. No tenants, no management, no maintenance, none of the headaches that come along with landlording. And look, I'm not anti-landlording, by the way. It's a great way to build wealth, but there is a tolerance to it. And I also work, I can tell you, I work with a lot of what becomes frustrated landlords at some point in time. And you know what I'm teaching a lot of them to do? Convert those tenants into property owners. Separate yourself from that, still get the cash flow with all the same benefits with that. And I show them how to create a good quality note. Oh man, I've seen people, I'm looking at a deal with a client right now, and the lady who created this note just created a horrible note. It's sellable, everything's sellable at a price, but her discount is gonna be huge. In fact, I'm also going, I'm not really even interested in that. It's just written so poorly. It just doesn't work. So when you create these notes, if you're going to convert tenants over to owners, you have to do it the right way. And keep in mind that you want to build a note that's sellable. The note business today is so liquid. I just did a case study. I did a presentation yesterday for the Noteworthy Convention, which is one of our national industry events. And I went through a deal of a client of mine, brand new to the business. She bought her first note with my assistance. We got her through the whole process. I think it was about the 5th note that we looked at with her. She bought the note, she's owned it for 5 months, and now she just sold the note this month. Okay? So that shows kind of the liquidity and the availability of that. Now, she could have held that note long term. She sold it for various reasons and such that we don't need to go into, but it actually accelerated her rate of return. So by the way, this is all these investments we're talking about here for the note-based investments of real estate and a lot of things that I'm sure the other speakers were talking about is approved for tax shelter accounts such as IRAs, 401ks. So a lot of investors use their retirement money to do these sorts of transactions. And man, when I show you some of these advanced techniques and what you can do with IRAs and 401ks, how would you like to, for example, learn how you can invest and buy a note for as little as $100? You can control a $100,000 note. Hello? $100 investment out of your IRA 401k, and you have about $100,000 in assets in the form of a note.
That's perfect. Somebody yesterday was just asking about that, Kevin. So like,
oh, really?
That's dead on. Yeah. Somebody was just asking about money in a self-directed IRA, and they didn't have a lot in there, and they didn't know how to move that money. So
oh, okay. I'll add that into the end if I can. Yeah, I'll show you that. It's really awesome. And the good thing is too, by the way, we do have servicing companies. Servicing companies might cost you $15 to $18 a month, and they'll collect the monthly payments. They'll hold the escrow payments if it's being escrowed for taxes and insurance. They'll send the late notices if the payment comes in late. They do all of that sort of stuff, and they just then wire the money into your account. So overall, it's a pretty simple transactional a relationship that you have here, and it can be very, very passive. At the same time, if you choose to, you can be active in the business because it's also a way where you can buy what we call non-performing notes. That is another way just to acquire real estate. You know, a lot of people today, and I'll show you the numbers on foreclosures, it's so competitive in the foreclosure market today that small investors are way overpaying for what they have, and their profit margins are coming down, down, down. And if you can learn how to buy non-performing notes and get that unavailable inventory where you're paying 30, 40 cents on the dollar, it's a game changer for real estate investors as well. All right, so current conditions in the market. Does this work in any market? Well, I'm not going to highlight all these. We've been living through all of these, right? I'm just pointing them out to you. We got the COVID, we got the federal government spending money. I mean, we were just chatting and it just comes up. This is on everybody's mind right now of what's going on. And again, a lot of people froze in this thinking, uh-oh, what do we do? I'm just going to hold on to my cash. I'm not going to invest. I'm going to wait and see what happens. And that really is a mistake if you understand these and what to do and how to modify your business, you're going to be much better off. And that's why my clients went smooth sailing right through this, because I explained you're not going to see this huge event. They're not going to let what happened happen before, and there's reasons for it, which I'll go into. So the COVID situation, as all of you probably know, this was the first extension that they did that extended foreclosures and evictions and all that sort of stuff through January 31st. Well, now you know it goes all the way through June. That ultimately is going to be a bad decision by the government. They should have let some of these expire to see what the reaction is. Are people going to be able to make payments again? How many evictions are going to happen? And then they could better handle it down the road. But they chose, of course, to kick it down the can. So we'll see what happens here. One of the things that I have a big eye on is the whole forbearance plans. And these are the latest numbers that have come out in February here. Actually, the report just came out this month, but it reflects back on February. We had 6.9 million people now under forbearance plans. And for those who don't understand what the forbearance plans are, it's essentially a lender saying, okay, we'll allow you not to make any payments right now for a period of time. We'll just tack those on to the end of the loan. So we're giving you a pause on your payments. You still have to pay it back. It's just, we're going to put that to the back of the loan. Well, initially that plan started for 3 months, and then it went to 12 months, and now it's going to 18 months. So you have 6.9 million people that were under these plans that weren't making mortgage payments. And all of those mortgages, by the way, were federally backed. You know, they're backed by Fannie Mae, Freddie Mac, VA, FHA, that sort of thing. It did not pertain to people like myself, investors who own individual notes. We didn't have to do forbearance plans. We could if we chose to. I only have 2 clients that were affected by late payments with their borrowers. Completely different ball game here. But this is future inventory for us, because there's going to be a lot of people that need help, and banks are not prepared to do that. That's what we need to understand within all this. So of the 6.9 million, you've got 42% of those people, their plans have expired, but they are performing. They're showing the ability to make the payments again. That's good news, right? That means it's not going to be a huge crash, because you have 42% of the people able to pay. On the other side, you've got 33% of the people that have extended their forbearance plans. Okay, so we still don't know what's going to happen with a large amount of people there, 2.3 million roughly. What's also interesting on the right-hand side is you've got 282,000 people, which is 4%, that their plans have expired, but they can't make the payments. They're delinquent now. But the banks are working with them through loss mitigation. They're trying to do loan modifications. And the big reason for that is what's different between the last real estate crash and what could be another one here is that today people have equity in their property. Back in 2008, 9, 10, nobody had equity. When the property values just crashed, I mean, here in Florida especially, well, everywhere, but in Florida, our property values dropped in half. You had people who borrowed $200,000 to buy a $200,000 house, and their house is now worth $100,000, and they still owe $190,000. It's very difficult for banks to work with borrowers in those situations. Here, it's just the opposite. You have people who have a $200,000 house and they owe $100,000. The banks will work with some of those people. So it'll be interesting to see what they work out there. You can see the rest of the numbers, and these numbers have changed. This is something that I've monitored since it's been coming out here. So some of these have increased. The number of people in forbearance has increased since November, for example. The number of people who are performing and been removed has increased. And then we also have a decrease on the extension. So it is something that I monitor, because this is our future inventory. If you compare this to foreclosure, this is from Black Knight Financial Services, by the way. We have an increased rate now back in February. This just came out, by the way, March 23rd. So this is the latest data right now, reflecting back on February. We've got 6% of all mortgages that are in delinquency. Now, that might seem like a small percentage to you all, 6% after all. The biggest peak that we had in 2010 with all the foreclosures that we had, the big crisis that we had, 10% delinquency rate. Okay, so this is not 10%, but 6% is significant in this. And how many of that percentage are going to continue to slide down as far as delinquency? In other words, 30 days past due, there's a good chance that people catch up. 60 days, there's a fairly good chance. Now, after 90 days, statistically, the person catching back up is very, very small. And that's where we come in, because banks are not equipped today to handle this crisis, nor are they financially motivated to do so. And that's very, very significant with the Dodd-Frank Act. So year over year, we've had an increase of 83% year-over-year change of total U.S. delinquencies. And look at the foreclosures, by the way, I didn't circle it, but total U.S. foreclosure starts in February, 3,900, okay, that's all. 3,900 foreclosure starts in the month of February across the entire United States. Now, a lot of that has to do with many people being under forbearance plans that we just said, but banks no longer go directly to foreclosure. It's a very small part of what they do with their delinquent loans. The bigger part is they take those loans and they turn around and sell them in bulk. They do that because there's a penalty in Dodd-Frank up to 10 times. I'll do this very quickly. Let's say you're a bank and you have $1 million worth of non-performing notes on your books. The government steps in and says, we're going to penalize you and you're going to have to put 10 times that amount, or $10 million in a cash reserve that you can't lend, you can't touch, you can't do anything. What are you going to do as a banker? Get that $1 million off my books, man. You're holding up 10 million bucks. So what are they going to do? Go through foreclosure? Like in New York, it takes 2 years right now to foreclose in New York. So is the bank just going to hang out and the $10 million is in the account for 10 years? Or how about you bundle that up and you sell that next month? Boom, it's gone. Now you've released 10 million bucks. See, it's a game changer. Okay, so that's really another significant thing within our industry. Talk about kicking the can down the road. March was going to be a very, very interesting month, because as you can see in March there, 27% of all the people in forbearance plans were going to expire. And that would have been, again, I understand emotionally that could be rough for people, but in the bigger picture, seeing 26% and then understanding like, oh, okay, out of that 26%, we did pretty good. We only have a small amount of people that need help. Or is it going to go the other way? Instead, they kicked it down the can to the end of July. So now we're going to see at the end of July, what is that, 25, 30, almost 70%, 80% of all the people in forbearance all at one time are now going to have to start making payments again. So we'll have to wait. You know, they should have taken a little bit of a look at what they meant, you know, statistical sample, but it is what it is at this point in time. So there's never been a better time for existing inventory right now of turnkey, easy to purchase notes, but also a great time to enter this, because this is going to happen. You can see what's happening here. Right, there is going to be a number of significance, which is estimated at about 3 million serious delinquencies according to CoreLogic. CoreLogic is going back and comparing this to the past recession that happened back in 2010, and they're seeing some similarities. And based upon their numbers, that could be 3 million homes. Last time it was upwards of 8 million homes. So not as big as the last significant event, but still very serious. And what we did learn, by the way, in the last event was banks couldn't handle the problem. Federal government couldn't handle the problem. Wall Street tried to come in and handle the problem. They couldn't do it. It ultimately came down to smaller investors who were able to buy these deals, focus on them, and get the loans either paying again or get rid of the vacant properties in the form of foreclosing and getting those going. So a great time to be in this. And again, different this time around because of all of the equity involved in these properties. So it's a fantastic time to be a part of that. So this investment, notes, provides passive monthly income, high return on investments, low risk because we have that collateral backing us, diversification, market resale, liquidity, and without all of those headaches. So for most people, it's an ideal investment. Now, because of the broadness of the industry and the note business, there's basically two major categories, and we can have subcategories, but there's essentially two major categories within all of note investing. And that is, first of all, non-performing notes. We're going to see, as I just outlined for you, an increase for sure, probably up to 3 million. We're going to see an increase in non-performing assets. The opportunity there is to help people stay in their homes by doing loan modifications. We can stretch out the loans, we can change interest rates, we can forgive debt, we can move debt to the end of the note. There's all kinds of things that we can do to help people stay in their homes and do a loan modification. When you're dealing with non-performing notes and you do a loan modification, you can liken that to doing a rehab on a property. When you find a good property for rehab, you don't want the best house in the neighborhood. You want the worst house in the best neighborhood, because you want to bring that property up to the market value from where it is in its current condition, right? You have a broken home, if you will. You're going to, before you buy it, figure out, what is that property worth now? What's it going to cost me to fix it up? And what's it going to be worth afterwards? That's how you do your numbers, right? What's my after repair value? In the note business, the same thing. If you buy a broken note, a non-performing note, you're going to learn, what's it going to cost me to potentially fix that note, get it reperforming, and how is that going to enhance the value of the note? Now, you can keep that note just like you could keep the property, or you could do what? Sell the note, right? Just like you could the property. Now, the difference in selling notes, by the way, you can sell the same note multiple times. In real estate, you buy the property, you sell it once. Okay? In the note business, we can buy a note and sell that note multiple times. Pretty interesting. Okay, so having said that, it can provide high return on investment through loan modifications, as I just said. It also gives you the ability to purchase real estate. Some of these notes, some of these people are going to walk away from them. Some of the people simply can't afford to make the payments. They're going to make a lifestyle adjustment. They're going to move back in with the parents, or move back in with the children. They're going to go back and rent property. They're going to move to a different state. Whatever it is, they're done. And you buy a non-performing note, you can focus on non-performing notes that are vacant if you choose to. You can furthermore not only focus on notes that are vacant, or properties that are vacant, that have non-performing notes, but you could also do it in states that have short foreclosure periods, such as Georgia, Missouri, and a handful of other states that you could focus on. I mean, Georgia takes you 90 days and $700, $800 to foreclose, right? Missouri, 60 days. So there are certain states and certain things that we look at as note investors. We are not limited to our backyard like a lot of real estate investors like to do. Our inventory can be nationwide. We go to where the deals are, and that's what happens. So the ability to create safe, high-yielding seller finance notes after property acquisition. So another great model today, and one really that's hurting the individual investor. You have companies that are putting funds together. They're taking investor capital and they're buying bulk real estate. And when you buy bulk real estate, you get them cheaper. They then fix the property up and they sell them with seller financing. So they create notes, and they have learned through people like me how to create notes the right way. They keep the notes, they season them, as we call them. They let some payments come in for 6 months or so, and then they sell those notes. I'm telling you what, if you build a relationship with one or two of those individuals that are following that model, or one or two of the small companies, or one or two of the bigger companies that do that, that is a game changer for you. I've had so many clients where I said, look, this note that you're buying right now, this is a well-crafted note. They made sure the person had the ability to make the payments. They ran their credit. They did everything they did. They underwrote this thing correctly. It's a good property. They did the rehab. You need to not only buy this note, but build a relationship with this person, because this person is doing this 20 times a year. Just a small investor buying 20 properties a year. And they heeded my advice, and that's the inventory they deal with. They don't even have to look another place. And a lot of times they know what the note's going to be built at before it's even created. So it's a great way to go. All of this without the foreclosure sale competition. There's a limited number of foreclosure sales at the courthouse steps today. Very difficult to purchase at good prices there. And you're not restricted, as I said, geographically. What note opportunities are available today? Well, there's a ton of them. I did a list yesterday for my presentation. It was a longer list than I expected, but these are just what I'm seeing in the industry plus what my clients are already doing. Note arbitrage. Note arbitrage is just simply taking advantage, if you will, of the difference in prices. If I can find somebody who's selling a note and they're willing to accept $80,000, and then I can find a buyer who's looking for a note and they're looking for maybe a 9% return, and that means that they would buy that note for $90,000. There's a $10,000 spread there. I can buy it for 80 and sell it for 90. Well, what if I never even have to buy it? What if I just put the two parties together and make 10 grand? There you go. That's a note arbitrage. Okay, it's done every single day in this business. Again, ability to identify the deal is the key there, and just put it together with a buyer. When you can find buyers today through public marketplaces where notes are traded, it's a great way to go. Turnkey notes. These are well-seasoned notes that have a lot of equity within them, easy to purchase, high yielding, buying partials, selling partials, lease purchase notes, notes in bankruptcies, performing notes, reperforming notes, selling with seller financing. All of these right now are actively being engaged in with my clients, and you can do the same exact thing. And of course, in the final quarter of 2021, we're going to see that. My clients are finding deals throughout all of these conditions. I mean, look at this, paid less than 20 grand for this note, 15.23%. They were in the business less than 30 days. They came to me, done deal in Cleveland, Ohio, all backed by a $34,000 property. This one was the one she just bought 5 months ago and just sold it this month to another client. I put one of my clients together with another client there. $38,500. She got it for $22,500, made a 16% yield on that one. This one, $94,000 property, verified by BPOs and such, paid $25,000 for a non-performing note on this. Worst case scenario, she takes this property back. And by the way, this is, as you can see, done on a contract for deed, which means she doesn't even have to foreclose. She can evict this person out of that property if they end up not having the ability to pay. So again, I can show you example after example, all different types of price ranges, but look at the yields, look at the risk that you have. And it all starts with this, by the way. Okay. This is a screenshot of a deal another client of mine bought in Fort Lauderdale, my hometown there. And I went through this whole deal with them, but this is where it starts. Okay, this is from a trading platform called PaperStack, and that's what you start with. So you simply start to build a case for this deal by looking at the numbers. And the first thing that we start to look at is, what is our risk? Let's identify that first. What's our discount? And then what is our yield? And those are the big three that you look at here. So let me illustrate that by showing you this example here. This is a property that's worth $60,000. Again, all verifiable by BPOs and such. And this is a good example of a turnkey note. There was equity in this property. These people have been making payments on this property for 10 years. I mean, that's crazy kind of seasoning here, but that's what you can find in the marketplace today. They're asking $17,795 for the note, backed by a $60,000 property. Okay, it's a no-brainer as far as risk goes. Now, this was a short-term note, 48 payments remaining. Okay, you can buy notes like this that have been modified that still have 200 payments remaining, but in this case, it was only 48 payments because he had made 192 payments on this thing already. 48 to go. Great starter, turnkey, short-term, 4-year note you got here. The original loan was $48,600. They got it down all the way to $17,000. So that would mean that the unpaid balance is $18,491. So I'm paying less than the unpaid balance, and I'm making 10%. Or excuse me, I'm making more than 10% because the original note, which was written for 240 months, was written at 10%. Now, some of you who are new to this might say, well, wait a minute. Who in their right mind is going to get a loan 192 months ago at 10% interest? This is not a bank loan. This is a seller finance loan. If these borrowers could have got a bank loan, guess what they would have done? Got a bank loan. Okay. They didn't qualify for that. And you know what? They don't care about the interest rate. This is what you'll learn. They don't care about the interest rate. What do they care about? What's my monthly payment? Can I afford my monthly payment? The monthly payment on this is $469 a month. Rent for that same house would be about $1,000 a month. Okay, so yes, they can afford the monthly payment. They're not looking at the interest rate or anything else. So some of the basic numbers that we look at, first one is risk. That's all measured by investment to value ratio. We take the amount that we're investing, we divide that by the value of the collateral that's backing that, and that puts us at 30%. okay? You're only in this value here of this property for 30% of what it's worth. So worst case scenario is you get that property back. How many of you would like to buy a $60,000 property for $17,795? Everybody would. So we can check the box on risk on this deal. The next one, investment to UPB. Well, our unpaid balance is $18,491, but we're paying $17,795. So we're at 96% of the unpaid balance. Now, some people who have maybe a little training in notes are going, wait a minute, somebody told me you never want to pay that high investment to UPB. Well, guess what? They're wrong. Whoever taught you that, they're wrong. One of the biggest buyers in the country that's been around for 40 years, First National Acceptance Company, backed by a bank. They've been buying notes for 40 years, the very infancy of this business. They will pay up to 97% investment to value ratio, or excuse me, 97% investment to UPB all day long on certain notes. Not all notes. What kind of notes? Notes that have at least 30% equity, that have good seasoning within them, and they look at credit scores because they're backed by a bank. This fits that bill. Okay, so who's ever telling you to never pay, that's your discount, they're wrong. This is a great investment because you're making on this, the next one, a yield of 12%. So we look at these three numbers and go, I'm good on my risk, I'm good on my investment to UPB, and I'm making 12% on this. Where could you go wrong on something like that? Well, it could be in the paperwork. So a part of this is, yes, some people look at this and go, well, what Kevin just said, that's pretty easy. I can go online and look at that. Very, very important that you do your due diligence. We're buying the note in the mortgage. What's the language in the note in the mortgage? Have they been assigned correctly? Are all the allonges in place? Are all the assignments in place? Can we track where that deal started? Do we know that this person actually owns the note, or are they brokering the note? Is there a missing signature? There are things that will snag you up in this business if you're not trained properly. So if you're just going on, and I'll be honest with you, I had a call yesterday with one of the owners of a paper stack, and he told me, he goes, Kevin, he goes, I'm going to refer this woman to you because she's looking at this note and it's a non-performing note. And I know she told me she's never bought a note before. And I'm really afraid that she's going to buy this and lose her money because she doesn't know what she's doing. You do have to have some training in this. It is something that you can make mistakes on, like all investments. So this is not just about checking the numbers. There's also the story behind it. And I always teach in terms of numbers and story. So I spend most of my day working one-on-one with clients through Zoom, going through all the paperwork, looking at public records, checking all of the boxes to make sure that we are safe. We want to see payment histories, obviously, as well. Are they making payments? Is it third-party verifiable? What are the demographics in the area? What's the crime rate? What percentage of homes are owned versus rented? All of those sorts of things are things that we have to look at and understand, because it's the totality of the deal that we want to look at and fully understand. If you want to master this business, it's numbers and story and understanding all the documentation that is in place here. And that's what I do with people. This is a good example of one that has been thoroughly researched. A client of mine put this together. I'm using their slides here, but they bought this one brand new to the business. This was the first note I got them into. $38,000 property, paid $23,000 for the note. Yield at the prices, again, almost 16% interest that they're making on this. Rent in the area was much higher than this. So again, it fits all of the same criteria. We run the demographics, we can see the median age, we can see the income in the area, we can look at the appreciation, depreciation rates, we can look at the growth in the area, all free, all online, very easy to do if you know how to do it. Purchased as a foreclosure, it was sold with seller financing. That was the genesis of where this started from. Borrowers have a fixed income that easily covers the payments. Perfect. How do we find out? That's a part of the story, okay? That would be good information to know. Loan payments are less than rent in the area. No additional liens were on the property. The property taxes were paid through ESCO. Property taxes can be a deal killer, a potential deal killer. Property taxes, every state in the United States, jump to the front of the line. If you don't know about it and it goes to an auction, you're wiped out. You've lost your entire investment. And they're making now payments through ACH, through the servicing company, and all the paperwork checked out. Obviously, I had to black out some of the information there, but we looked at everything, the application, the note, we looked at the deed, we looked at all of that, everything checked out, everything looked good. And here's what Leandro did on this deal. Okay, bought this note for $23,000. That gives him the 15% yield. It's backed by the $38,000 property. You got that. Here's what I told him that he can do, and he's looking at doing this. Okay, so this is a image of a screenshot here of a spreadsheet that I have. The current unpaid balance of the loan, $29,900, 129 payments, 9.5% interest. And I started playing with some numbers. I said, here's what you can do. So I pulled this up. I'm going to do this just live for you here. So this is the same spreadsheet. I preloaded the numbers in there for you. And we can toy around with these a little bit. I'll make it a little bit bigger for you. Okay, so this is the note as he bought it up on the top. And then I said this, I said, look, if you want to, because he's got investors that are interested in making about an 8% return. They're down in South America. They're not making anything on their money. They want to invest in the States. Perfect scenario. So I said, look, you could sell 129 of those payments. So you're buying 129, sell the whole 129 payments for 23 grand. Oh no, I'm sorry. This is what he paid. My apologies. He paid 23 grand for the 129 payments, and that's his 16% interest. Sorry about that. So that's Leandro's deal that he bought of the existing note here. What I said was you could sell a portion of that note to another investor and give them that 8% return. And I ran the numbers on the spreadsheet and I said, look, you could sell for 23 grand. The same amount of money that you bought the whole 129 payments for, you could sell 81 of the payments to another investor. They're going to make 8.21%. And you have now $0 in this deal. Take that 23 grand, invest it in something else. You have nothing in this, but here's what you're entitled to. Payment 82 to 129. And it looks like this. So I built these entitlement charts into this spreadsheet here. And the black line is the payoff on the loan at any point in time. Okay, so that's the loan balance at any point in time. And what he carved off here was in red. That's the portion that he sold to an investor, those 80 payments here. If this loan pays off early, Leandro makes the difference between the black line and the red line. So one of my other clients built this for me. They have more knowledge in Excel than I do, which was great. And they built this little slider in here, and we can pick any months. It's at 50 months, so let's just go with 50 months. So Leandro buys this note, he turns around and sells 81 of the payments to another investor for 23 grand. So he's got no money in this deal. He's investing that money somewhere else. 50 months later, let's say the loan pays off. They sell the property, they refinance, whatever. The total loan payoff is $21,714. Of which the other investor, the partial investor, gets 10 grand. There's a difference there, right? We got 21,000 and 10,000. So there's about a $10,000 difference there that goes to who? Leandro. He's got nothing in it. What's his return on that money? You can't calculate it because he's got $0 in this. I mean, it could pay off earlier. It could pay off later. If it doesn't pay off, then he's just going to pick up all these payments. When he picks up the payments, by the way, which is down here in month 81, on month 81, he's still owed on the note a balance of $15,000 to be paid over time. So you can play with this all day long. Let's say you already have an investor and you want to structure a deal like this where you're going to put in this $100 from your IRA and you're going to have this investor put in $22,900, right? So together at the closing, we need 23 grand. Of it, the investor's putting $22,900 into it, and your IRA is putting in the other $100. Okay, so we need 23,000 at the closing table. That's how it's being funded. What's the entitlement? The entitlement is the investor who paid $22,900 is still getting 8% plus interest for 81 months. Your $100 owns the entire back end of the note. By the way, that could be your IRA, that could be your children's IRA, because you can hire them in the business, pay them a tax deductible salary. They can have an IRA. They put $100 in there. They own this note. So for the $100, what are you looking at? It's the same scenario that you have here. This investor, I'll do this one first. This investor in red paid really for the bulk of the note, and they're going to get their 8% return. They'll get payments for 81 months. Your IRA is just hanging out, right? It's invested $100. It's $100 because that's what the IRS says a legitimate investment amount has to be, $100. And there you go. So now if this loan pays off at any point in time, you or your kid's IRA gets paid out. So if it pays out in 50 months, once again, the payoff is still $22,000, of which $11,000 goes to the other investor. Your IRA or kids' IRA went from a $100 investment to $11,000, like that, in 50 months. All secured by the property. So I got the $100 in there. I think my time's coming up, right?
Sorry about that. I was on mute. Yeah, no, you got like, I don't know, call it 5 to 10 minutes left.
Oh, okay, cool. Good, good. Having fun.
We definitely got some questions coming in. So
Oh, okay. Well, let me show you one other thing, and I'll go to the questions real quick. Because the other thing he could have done on this, he's in this for $29,900. You could run numbers and say, let's look at what 34,000 would do. So can't do 34. Yeah, might be a little thin on that, on this particular deal. Yeah, I could do this one, 116 payments. Still a little thin. Certain deals, you know, it depends on how many payments are left on what you can do on some of these things. With 129 payments, he could actually sell the note for a little bit more money than he has in it to another investor. Maybe have to bump it up a little. Yeah, it's a little thin on this one for this particular example. Maybe have to do a lower yield. But if we change these numbers and I had a longer term, I'll just mix it up a little bit here just to illustrate the point, what you can do on certain notes and such. In a case like this, he could turn around now and maybe sell this, a portion of this note, 220 payments maybe, to another investor. No, can't do that. Can't do that one either on that, too small. I'll do a bigger note here. Sorry about that. Let's just do a basic one here. All right, so I just put a little bigger deal on here. He could sell certainly something like this. Oops. Now he could sell about 152 payments to another investor for 80 grand, right? That investor is making 8%. Okay, so you lock in a deal. You either pay the 70 grand or you lock in the deal at 70 grand to purchase the note, which is a good price on this particular note, by the way. It's a reasonable price. And then you could sell that same portion of the note for 80 grand. 152 payments will give another investor 8%. So you either paid the 70 grand, you got your 70 grand back plus 10, or you just locked in the deal under contract. You walked away with $10,000 on a deal you had no money in, and then you own the back end of the note. You basically own the back half of the note, and it works out again the same way. If there's an early payoff or anything like that, obviously there's some huge spreads in here that someone could make. So we go into these deals. How are we getting in? What's the story? Do our due diligence, and what's our exit strategies? And that's really what we're looking at. All right, Q&A time.
All right. So Unanimous said, so if I find an off-market seller that's underwater that I can convince to do a loan mod, is there anything I could do with them?
So if I find an off-market seller that's underwater, they owe more than the house is worth, that I can convince to do a loan mod, is there? Sure, absolutely. We back in 2010, 11, 12, 13, we were buying all of those loans were underwater. And what you can do with the underwater loans is do debt forgiveness. So it's all about the purchase price. So just using simple numbers, we all can do the math in our head. If somebody owes $100,000 on a $50,000 house and they're not able to make the payments on that, they're underwater. Well, if I bought the note for $30,000, could I forgive that extra debt and just modify the loan down to 50 grand? Sure. Could I possibly give me $5,000 and I'll forgive all of that extra, I forget the number I use, 100,000, they owe 50, right? So I'm going to forgive $50,000 in debt, but I only paid 30 grand for the note. And maybe they give me 5,000 or 10,000 to make that other debt go away. Or maybe I just do it without taking any money. And just now I have a $50,000 collateral, I paid 30 grand for it. I'll just modify the loan and structure it out that way. And that's what we did on a lot of them. I'll tell you what, one of the things I'm keeping my eyes on, and oh man, I hope this happens. I did 3 State of the Industry addresses already this year. I'm known for those in the industry because I research all this stuff. And Jared Bernstein, who's the economic advisor and has been for Biden since he was a VP, he's big on this program called Hardest Hit Funds. And he didn't think it went far enough. I went back to his blogs. I mean, I looked at all of that sort of stuff. And what we did back then, and I'm hoping they get this program going again, and there's a possibility they will. Imagine this. So same scenario, $100,000 is what they owe, $50,000 is what the property is now worth, but they're behind on payments. The state, there was 18 states that did this through federal money. The state would pay you, the note holder, 50 grand to forgive that debt and modify the loan. You might have paid $30,000 for that note. You're getting $50,000 back from the state 90 days later, and you now still own another $50,000 note that you paid 30 grand for. Wrap your head around that one. It's called Hardest Hit Funds. You can Google that. But man, I'm hoping that program comes back. So yes, we can help those people.
That's incredible. All right. One of the questions said, could the along be included when buying a note without rewriting all the terms?
Could the allonge be included when buying a note without rewriting all the terms? Yeah, allonge is a French-derived word, by the way. It's from fencing, actually. It means to pass through, allonge, to pass through, to pass on. See, now you'll never forget it, right? Memorization tool. So would the allonge be included when buying a note without rewriting all the terms? Correct. When we buy a note that's already existing, we can't change those terms ourselves. In other words, I can't buy a note and say, hey, borrower, I know you're only paying $700 a month. It's now $800. Can't do that. We're buying the note as it exists. And that's why we have to do our due diligence on that to see if that loan is this or there's been some kind of modification. So when loans are transferred, when notes are transferred, it's simply signed over in an allonge. And just for those who are new to this, it'll blow your mind, but a note closing is very different than a real estate closing. At a note closing, nobody is there, and the only person who signs anything is the seller. When you buy a note, there's nothing for you to sign. I know that sounds weird, but because of the nature of these notes, an allonge is a one-page document with one paragraph on it, just saying, I am signing this over, and I'm endorsing this over to Chris, and I just sign it and give it to Chris. Okay. And then I sign so along with that is the assignment of mortgage. I'm assigning this mortgage also with this note over to Chris. That's it. Chris doesn't sign anything, he just accepts those documents or records security agreement.
All right. Are the positions public knowledge? Like, how do you find out who's in first, second?
Yeah, absolutely. That's where I spend a lot of my time on public records. Let me see if I have my screen still up. No, I don't. I was doing that this morning for another client, going on public records and looking up a lot of this documentation. And many, many times, and I teach this with my clients as well, they'll know more about the note than the person who currently owns it. Because we research and we know what's going on here, because you don't want to get burned in some of these investments. And if you do your due diligence properly, you won't. So yes, you go to public records and look that up. Now, having said that, I'm also working with a client who is buying a deal in Arkansas. And the public records in this part of Arkansas, it's rural Arkansas, you got to go to the courthouse. I mean, there's no getting around. You can't get online. They don't have it there. So we have boots on the ground out there. You make one phone call, I can have somebody go out there and pull the records for us. But looking at the documentation, I recommended to her, I said, you know what, this one's going to be good. It's a land contract. Go ahead and buy it anyway without that. In general practice, though, yes, you're going to look online, but you're also going to verify everything when the note seller provides you the documentation. And they should provide you with all that documentation. If they don't have it, there's a reason. They don't either own the note or they've made some mistakes along the way.
Awesome. And then Ruth said, so what or how do you get us to know more? How long does it take to learn enough to be able to do it? And what do you do for us?
Yeah, take note of on the bottom of your screen there, you can schedule an appointment to talk with me, and we'll just schedule 30 minutes and we'll talk and that way I can spend some time with you one-on-one, explain a little bit what I do. How long does it take to learn the business? I don't know. How long does it take to learn real estate investing? I think people are constantly going, well, you're always learning. Right? I mean, Chris is doing stuff in real estate. It's probably different than what he's doing before, especially lending money and doing all these other things. So it is something that you're always going to maintain a level of knowledge with. But I can tell you this, with the way I teach it, I'm the only one in the business, certainly at my level of expertise, that works with people one-on-one. And that's been a game changer for my clients. And obviously I'm limited on the number of clients I can take because I do work one-on-one with people. They schedule 1-hour sessions with me and we go over everything. And I've been able to take people who are brand new, thinking a loan was being by themselves, that new to the business. You get that little joke there? A loan, they thought a loan was being by themselves. Okay. Brand new to the note business and have them in a deal in 30 days. Now, not everybody wants to do that. I have other people, hey, I'm going through the educational process here, but certainly within with my courses and such, I would say if you wanted to accelerate it, you could go and learn everything in about a month. But again, then it's the actual deals. And what happens to a lot of investors is they learn the business, or they think they do, but then they end up never pulling the trigger on a note because it's different. Like here, when I can show you, oh, you paid 20 and you got this, you got that. When you're actually writing the check, you start to think about it a little bit more. Have I done everything? So that's where I work with people on that.
As a note purchaser, do we have any control of the existing live-in tenant?
Okay, so they're not going to be a tenant, right? They're going to be, well, it could. You could buy a note, and we've done this before. I love notes that, one that popped in my head was a duplex. So you get a duplex that a landlord owns and they're renting. And the amount of rent that they're charging just with one unit covers the debt service. The debt service is the payment on the note. So in that case, the landlord's responsible to pay us. So whatever happens with a tenant, that's on them. I don't care about that. When we buy notes that are existing, the person living in the property is the property owner. Okay. Now, there is a hybrid in there called land contract that'll put us down a side road. So let's just focus on that. So they're not really a tenant in the property. They are an owner of the property. We do have an interest in the collateral value, certainly, of that. Are they taking care of the property and that sort of thing? But it's not something that we really have to maintain that mentality all the time of looking at it. They own the property. As long as the property is there, we're not managing day-to-day activities at all. And there's some properties, people are just paying. They're just paying every single month, and you never look at the property or anything else after that. I think that was the question. I hope I answered that.
Yeah, I think that answers it. One of the things that Stephen and I have created with Money School is called the Private Money Club. It's kind of like eHarmony for people with money and people that need money. So one of the things that we're getting asked, and a lot of people have actually come to us, is what opportunities for me are going to be on the Private Money Club. Obviously, there's going to be private money loan opportunities, private funds that people can invest in the Private Money Club. What's the would there ever be a place for someone like you to sell notes through the Private Money Club? Is that something people are often looking for, is to sell notes, or is there just not really, any need for something like that? So I guess what I'm saying is there one place where people can go buy notes?
Well, there's multiple places that people can go to buy notes, and notes of all varieties. I used to do hard money loans, right? Short-term, high interest rate loans for rehabbers. And that's the note business as well. I'm just creating short-term notes for investors. I get paid back. I relend the money. If I wanted to, and there's some private lenders that might do 12-month loans for rehabbers. Those are sellable notes. It's all just in the pricing and such. So it's not a big jump for money lender to become a note investor, because on one instance you're creating a note, on the other one you're buying a note that somebody else created. It's not a big leap to do that at all. But there's public platforms today. The screenshot I showed you was from PaperStack. They're the best platform out there. I know those gentlemen well. I trained them in the business. I've known them for about 12 years. They built a really good platform from the ground up, handles the closing and everything else for you. But there's also inventory that comes in the form of tapes. That would look like a spreadsheet. Here's one, for example, I'll just pull up for you. And you have to learn, how to look at these tapes and add in a whole bunch of different columns like I've done here to calculate yields and those sorts of things. And it starts there. Some places they sell them on an auction format. Some places they put the prices directly there. And but the availability, is really strong. So I have that, but I also do have some what I would call private inventory. I'm working on I won't pull this one up because it's got some private information, but I'm working on a pool with an investor. It's got about 10 notes, $300,000, $350,000 note. And that's for private inventory, just people I've known other business, most of which I've trained in the business years ago, that are looking to liquidate part of their portfolios and such. And I put them together with other people. So there's private inventory, public inventory. And then again, once you're in the business and start to see who some of the REO companies are, like Odell Barnes company, they buy property, fix them up, sell them with seller financing. You can certainly start to look at those companies as well.
That's awesome. Yeah, I know there's several people that have gone through money school that have worked with you, and we've heard rave reviews for your courses. And one final question is, and I don't know if you have multiple courses, but what is the cost of a 1-month education course with you?
Well, I don't have a 1-month education course. I was answering the question of how long might it take you to fully absorb the information on the educational side is where I said the 1 month. I went from doing 3-day live trainings all over the place. And I still love live trainings. In fact, I have a live one for the first time of this year scheduled so far in September here in Orlando. But I love doing the live classes. Part of the drawback of a live class is that you fill up a legal pad. At my trainings, you'll probably fill up a couple of these at the training, but I'm big on how do you apply what you've learned. That's where it translates into dollars, right? So my courses are online today, which you can stop and start and everything else. But I also don't believe really in just education without the follow through. So my program's education and it's consulting, and essentially working with me on a one-on-one basis is what I do. So I don't really have just a monthly, $100 course or something like that. I don't have that because those they're not effective.
Right.
They're not effective. And I can go into pricing stuff if you want to, but again, I know we're not doing a sales presentation here.
Yeah, and I just put your email up, and I put your link to schedule a time. So anyone that's interested in learning more, I know Andrew already said he just booked his call. Andrew's on our team right here. He was
great.
Very interested. So he just booked a call for next Wednesday. So folks, if any of you are interested in learning more about, what Kevin does, how he can help you in this business and the notes business, and it's fascinating. I mean, think of that. If you're a private lender, and you're part of the private money club and, lend money to, let's just say me, you could literally create a note that then could be sold just like you learned. I mean, so if you had interest in learning anything like that, information's right there. And Kevin, thank you so very much for your time. It's always a wealth of knowledge, and we appreciate you being here.
I appreciate it, man. I enjoy talking about this so much with everybody, and I hope everybody learned something there. So thanks, everybody. Enjoy the rest of the.
Great seeing you, Kevin.
Yeah.
Thank you.
Thanks, Chris. Thanks, Steve, Andrew, Chris.
Very much appreciated. Thanks. All right, folks. So now what we've got going on is we've got none other than my good friend, and I'm just going to put this up there, Chris Ruud. He's here, and he's going to be talking about mobile home park investing. And he, for those of you that don't know who Chris Ruud, and if you don't, it's, kind of, I'd have to ask you, he might be living under a rock. He's pretty well known. He's known as America's #1 wholesaler. He's got wholesale operations, in a lot of the different states throughout the country, and he's expanding rapidly on that, but he's really got a passion for mobile home parks. And I've seen Chris speak numerous times on mobile home parks, and we've actually gone so far as, we are actually creating a private fund for mobile home parks for people that want to get into mobile home parks, because you're going to believe me, when he's done telling you about mobile home parks, or if any of you have researched how Warren Buffett and so many other big hedge funds are diving deep into this space for the affordable housing, you're going to probably want a piece of it. So we actually are creating a fund, should be done in a couple of weeks, where you actually can direct, or you can invest in mobile home parks, get a return from the mobile home parks without ever having to own a mobile home park. Or you might just want to dive right in after you hear Chris and start buying your own mobile home parks. It's funny. We had a mobile home park come up right around our house. Andrew went out and looked at it and sent it over to Chris. And Chris just last night locked up a mobile home park for 30 lots. And hopefully he talks a little bit about that, or Chris, if you can, maybe talking about like the numbers behind that, it'll just blow people's minds. So what I'm going to do is I'm going to not share the screen anymore, and I'm going to let Chris come on and tell you all about what he does.
Hey, Chris, I appreciate that, man.
Absolutely, man. Thanks for joining us. People are probably going to be really, really excited after they hear you talk about this, because every time I hear you talk about mobile home parks, I'm just like, man, I got to get on this. I got to get on this train because it's just incredible. And with what's coming in the next couple of years, 2022, 2023, when this whole thing falls apart, man, affordable housing is going to be where it's at.
Well, you just said something. It's a train, right? It's a train coming that you're not going to stop. The rental market across America and just abroad, the whole world is becoming unaffordable, right? Like it's hard to get something in a decent area that's, even half-assed nice that you can live in with a family that you can even afford these days. I mean, the price of inflation, the price of lumber, brick, I mean, everything keeps going up. I mean, single family home rentals. I mean, a nice brick on slab house in a decent area is, anywhere from $1,500 to $3,500, depending on what area of the United States you live in. And inflation has increased so much, but income has not kept up with inflation. So therefore, a huge gap in what you can get now versus what you could have got 10, 15, 20 years ago as far as rentals, right? And it's not slowing down. So you exponentially compound that problem with COVID-19, people losing jobs, people losing income, and it pushes them down even further on the income gap, losing more income. And then, COVID-19's actually made the price of lumber go up, the price of materials, everything keeps going up. So it's just this huge disparity of what things cost to rent versus what you can afford, what the average consumer can afford to actually pay for it. And that gap just keeps widening and widening if you look at these graphs. So I'm not that bright, guys. I just read a lot and I want to learn. I'm like a sponge, and I just watch and read about what the biggest players in the whole world are doing. Guys like Chris mentioned, Warren Buffett. Warren Buffett's actually the guy that got me interested in mobile home parks. I read an article by him 4 years ago about affordable housing, and that mobile homes and mobile home parks were the last vestiges of affordable housing because everything was becoming too expensive. And at the current rate with the baby boomers and the income disparity gap and everything else that is, and this is like 4 years ago, I read this, that we're going to have a housing crisis and a rental crisis for the next, within the next 5, 10, 15, 20 years. And it's going to go on. And like something has to be done to bridge this gap. And that something is affordable housing, right? And so that made a lot of sense to me when I read that. And I started looking into mobile home park investing. And I bought my first park about 4 years ago, not too long after reading that article. And I was amazed by how cheap these mobile homes were to buy, even, secondhand and still brand new. You can get them brand new for relatively cheap, which we'll go into. And I bought my first park, and I paid $405,000 for a 24 unit in a pretty decent area here in Lafayette, Louisiana, where I'm from. And it appraised for $730,000 as is. So I immediately captured like 300 grand in equity. I was pumped. It took me about 8 months to rehab it because I think there was probably 10, 12 trailers in there that I wanted to rehab, some of which I just pulled out and I replaced with used trailers, which unbeknownst to me, I didn't know it at the time. This all came together, for me as I got into the business and learned the ins and outs, that I was able to use my wholesaling business, which, if you don't know what wholesaling is, basically it's a direct to seller marketing business to find heavily discounted off market properties for motivated sellers. Because that business to get more inventory from my mobile home parks at pennies on the dollar, because I would get all these mobile homes that would come through my wholesaling business before I got into the mobile home park business. I didn't know what to do with these trailers. I would just say, hey, like, sorry, I don't buy mobile homes. Well, once I started buying mobile home parks, I started, taking these trailer leads, and literally I would buy a 2007, a 2010, a 2012, or even a good 1990s model, early 2000. I would literally buy some of these trailers for $1,000 to $1,500 to $2,500. And as I started buying newer trailer parks, I even bought, I bought a trailer last week, a 2017 that's 2.5 years old, Clayton manufactured It cost the 55, 60 grand. I paid 26,000 bucks for it last week, and I'll get 1,100 bucks for that trailer. Then I'm moving into one of my parks. But let me back up. I'm jumping around, but I started keeping some of these trailers that I was getting that were, early 2000, 1990s model, and I hauled it into my park. I'd pay 1,500 bucks for it. It would cost me another 1,800 to 2,000 bucks to move in. So that put me at say 3,500. Then I would put another 2 grand into it just to like refresh it. It doesn't cost much to rehab some of these trailers, depending on how much work it needs. I'd put, anywhere from 2 to 5 grand into these trailers. And I was typically on a lower end park, like a C-class park. I was typically into some of these trailers for 5 to 10 grand. And I was getting 750 to 700, insane to me, because that was a 1 to 1 year payback, right? A 1 to 1 year payback on my money. Nothing does that in real estate. I've been in real estate for 15 years, folks. I've done hundreds upon hundreds of single family homes, wholesaled, flipped, bought and hold. I had a pretty big portfolio of single family homes when I first got into real estate, because I thought single family homes is the way to go. And I literally could not even, it wasn't even in the same ballpark as far as cash on cash returns, right? So I literally had the realization, because I started buying more of these used trailers that would come through my pipeline of my marketing channels, and I kept hauling them in my trailer parks. And I'd buy some for 500 bucks. I'd buy some for, 5 grand or 7 grand, just depending on what I can negotiate it, how it was work it needed. And I was literally getting my money back within the first year. And I was like, dude, this is unbelievable. Like, this is why Warren Buffett, is in mobile home park investing. If you don't know what Blackstone is the biggest hedge fund in the world. They just announced that they bought $500 million worth of mobile home parks last year. I saw an article that they wrote about it, and they're actively looking to pursue that more and to buy more. And, and that's because, if you look at, if some of you guys may, invest in apartments, which I do too, nothing wrong with that. But if you look at what's happened to apartments the past 10 years, is that hedge fund money, big money has driven up the prices of apartments and multifamily so high that it doesn't even make sense to buy an apartment complex anymore. I remember 10 years ago, you could buy a nice apartment complex for a 10 or 12 cap. That doesn't exist no more because of big money coming in and buying them at a ridiculously high rate, which is driving up the cap rate and pushing out the average investor, right? So, guys like me that, or even you guys that are maybe just getting started, maybe you're a small timer, you can't compete with big hedge fund money. You can't compete with that, right? I'm not going to buy a property at a 4 to 5 to 6 cap. Hell, I'm even here in some parts of Miami or California, you're lucky to find a 3 cap. That is, and to me, that just doesn't make any sense, right? And I think a lot of that has to do with hedge funds have so much money, they just need somewhere to place it because it's costing them money to hold on to it. Well, how can a guy or a gal like me or you, who's just getting started, who wants to get double-digit returns, what asset class can you be in, right? I know for me, single family homes just didn't make any sense. I tried that. I tried lower end single family homes. The maintenance, ate my lunch. It just didn't make any sense. Once I got into mobile home parks and I started actually doing more studying, more, researching, split testing, what I was doing and seeing all the cash on cash returns, everything about mobile home park investing is far superior to anything else in real estate investing from a cash on cash perspective. Now, there are some downsides, which I'll talk about, but I'm going to tell you about the upsides first. Historically speaking, if you look at what the turnaround time is on mobile home park investing, the average tenant of a mobile or of a apartment, the average of the country stays 14 months and it moves out of an apartment. The average tenant of a single family home stays in a house 2 to 2.5 years. You know what the average stay at a mobile home park is? 5 years, 3 to 5 times more than the other traditional ways or traditional markets of rental properties, right? 5 years is the average term. I've got people that have been in some of my parks for 15 years, right? They just something about it. They like people like mobile homes, right? And if you think about it, you have to think of the psychology of why they would like that. In an apartment, you got somebody on top of you, you got somebody beneath you, you got somebody on the left, the right, and you're compressed into all this one building, and you can hear everybody to the side, left, right. And I think people, they get somewhat aggravated living like that. They want to change, right? Well, with mobile home, have a 20, 30, 40-foot gap of space in between all these trailers, right? You don't have somebody on top of you making all kind of racket. You have your own parking spot right on the side of your trailer. You have your own space. You got some of these, some of these trailers are 1,100 square feet. Even these single wides, right? So there's a lot of benefits to these mobile homes, right? Repairs. Let's talk about repairs. Repairs are so cheap, right? They're so cheap. Literally, like if you, let's just say, if you have a single family home and you have a plumbing issue, like it may cost you thousands of dollars for plumbing because you have to break into the concrete, you have to break into a wall. It gets really expensive. If I have a plumbing issue at one of my mobile home parks, we just pull the skirting to the side and it's right there. You have a water leak. It could be typically a $5 part, and we have maintenance guys we pay, $15-$16 an hour to fix. I might be all in at $20-$25 for repair, as if you have to call a plumber, it might cost you $250 to $500 just for a basic, change on a part, right? So there's a lot of benefits to mobile home parks. Like if I need to renovate it, let's just say I buy a 90s model mobile home or early 2000s, 20 years old, I want to redo the whole thing. It might cost me 15 grand to do a brand new trailer. And I'm talking, I have a brand new trailer. I'm talking sheetrock and everything, right? And because literally, people think, well, it's trailer parks, it's trailer park trash. It's got this stigma. No, guys, it's trailer park cash, right? It's not trailer park trash. These trailers, they're easy to fix. I can make an 80s model trailer look like a brand new trailer from 2020. Literally, I get, would put brand new cabinets, because literally they just sit on a steel frame. The steel frame's not going to go bad, right? Once you change the subfloor, the biggest expense is going to be your subfloor once that goes bad. Once you change that and maybe you sheetrock and you put a metal roof on, you can put a metal roof for $1,500, right? Literally, you can have a brand new trailer for 15 grand and that trailer lasts you another 30 years, right? You're still going to have repairs in an apartment complex. You're still going to have, if you buy a single family home, typically a single family home, after about 20 years, you're gonna have to gut the whole thing and redo it. That could cost you $40,000, $50,000, $60,000. And here's the beautiful thing about the rents, right? Literally, the rents you get from mobile homes, like you would think, oh, it's mobile home, you're not gonna get that good of rent. Well, I can spend, say, let's take an example. I just bought 15 brand new trailers, right? I paid an average of 44 to 46,000 brand new install. I can get for those trailers and depending on if it's 2, 3, or 4 bedroom, I can get anywhere from $1,000 to $1,200, maybe $1,300 for those brand new trailers in certain areas, right? At a $48,000 expense. Where do you know that you can buy a single family home for $48,000 brand new, brand spanking new, and get $1,000 to $1,200? It doesn't exist, right? It just doesn't exist. It's not out there. And before you have this idea, well, people don't want to live in trailer parks, Chris. I call BS on that. I can show and prove. I have 8 parks, and I can show you that people definitely want to live in mobile home parks. They really enjoy it. They like it. They like the space that it gives. They like the space in between the trailers. They like the community atmosphere. Now you can buy a park that's really bad. They're really bad circumstances, no economic opportunities where they have jobs. I'm very specific on what I buy, right? I always look for, what am I looking for? I'm looking for a bad rundown park area. That because I'm looking for, I can't replace the land or the real estate it sits on, but I can replace the trailers, right? So, what I do is I basically find these areas that are like the last park I just bought in Denham Springs, Louisiana. Phenomenal area, literally $600,000, $700,000, $800,000 houses all around this rundown mobile home park. That's probably from the 70s, 60s, 70s, 80s. Literally every trailer in there is run down. It was all messed up. It was just beat to hell, a bunch of drugs. I went in there and we just cleaned house. Like we started hauling off all the trailers. Then I started bringing in brand new trailers and used trailers that I got from a wholesaling pipeline that we picked up for, 40, 50 cents on the dollar. And we started hauling those trailers in there. I'm literally getting $1,000 to $1,200 for trailers that I'm paying on used trailers. I'm paying, anywhere from $15,000 to $26,000, and for used trailers that are maybe 2 or 3 years old, that I basically get from the wholesaling business, which, the wholesaling business kind of goes hand in glove with the mobile home park business, because I'm able to just source inventory for so cheap, right? And we're actually setting up campaigns, direct marketing campaigns, to find motivated mobile home owners who, they might own their trailer 2 to 4 or 5 years and they want to upgrade to a house. We're picking up those trailers for peanuts. And now we're actively targeting those people so I can source inventory to put in these parks, right? So literally I can buy these units for pennies on the dollar, get almost the same amount of rent that I would for a single family home. To get $1,200 to, say $1,200 for a single family home, you might have to spend $100,000 to $120,000 on a single family home, or let's just call it $80,000 to $120,000 on a single family home to better generate $1,000 to $1,200 in revenue, depending on what area of the country you live in, right? I'm just generalizing here. Excuse me if you live in a high-end area that doesn't, those numbers make sense. I'm talking about an average of the nationwide. You'd have to spend 80 to 100, maybe 130, 140 to get those kind of numbers, right? Whereas I can literally buy a trailer for, I just bought a 2009 trailer that went in one of my B-class parks, and it's in a good area. It's not the best area, but it's in a really decent area. I just bought a trailer, 2009. I paid $5,000 for a 2009 trailer. If you follow me on social media, you probably saw when I posted about it. Literally $5,000. It cost me $2,000 to move it. And it cost me another $2,000 to set up, to plumb it and tie it into the electrical. I'm all in at $9,000. We just rented that thing out for $800. $9,000 investment, getting $800. What does that in real estate, folks? So I'm so excited about what I'm doing. That's why me and Chris, we've been talking about, like, how can we buy more of these parks? Because I'm only one guy. Like, I'm a one-man show and I've done a lot by myself. I own 8 parks, but I need help, guys. I need help. If you want to invest in one of the biggest booms, I am going to disrupt the industry, folks. I'm going to disrupt the mobile home park industry because I'm a seller and I know how to find trailers at pennies on the dollar. I'm setting up this huge funnel to go nationwide. Well, I'm going to start just the South. I'm going to have this funnel that's going to run traffic, and I'm going to target all the people that own mobile homes that want to sell them fast for cash. And I'm going to start buying all these mobile homes for 20, 30, 40, 50 cents on the dollar all over the country. Then I'm going to find motivated park owners that have distressed parks. And there's 67,000 mobile home parks across the nation. There's a lot of them, and most of them are distressed, and the baby boomers own them and they're ready to unload them. I'm going to buy these parks for pennies on the dollar, like I've been doing with other people's money, so I can scale. And then I'm going to put the two pieces together. I'm going to take the funnel that I've got where I'm buying these trailers for $5,000 to $10,000 to $15,000, $20,000, depending on how new. And I'm going to take the fund money and I'm going to buy all these trailer parks for 50 cents on the dollar. And I'm going to take all this inventory and I'm going to dump it into these parks and set them up. And I'm going to be into these units, maybe $5,000, $10,000, $15,000, $20,000 a pop, maybe 25, 30. And I'm going to get double-digit massive cash flow returns like nobody else is seeing. How do I know this? Because I'm doing it on a smaller scale right now, and I can prove it. And I got a model. I just need more scale. I need more cash. That's the only thing hindering me is more inventory, which I'm going to fix that by building out this big old funnel I'm building to target just people specifically that want to sell mobile homes. And I'm going to cast a big net. We're going to target them on, PPC and SEO and Facebook. And then we're going to combine that with buying some more parks. And when I'm finished with these parks, I'm going to have such cash flow animals, and I'm call it an animal. It's not going to be a machine. It's going to be a cash flow freaking animal that I'm going to scale this up to 30, 40, 50, 60, 100 parks in the next 10 years. And I'm going to be at 18 to 22 cap, maybe better, who knows, depending on how cheap I can buy these trailers and how well I can refine this model. I'm going to package this up and then I'm going to sell it to a hedge fund at a 6 cap. And I'm going to, and they're going to buy it all day, twice on Sunday. And we're going to be in this thing for peanuts, right? So don't miss the opportunity, folks. This is an opportunity of a lifetime. If you want to look at maybe partnering with me and Naugle, you can go and check out. Naugle's actually helping me build this out. And hell, maybe you don't want to be into a fund long term. You know, I wholesale and flip tons of properties in the South. I'm looking for more money to flip my properties. If you want to lend to me just on this, I know there's probably a lot of people here that already lend to me. I'm not sure, Chris, maybe you can answer that, but if we, okay. We're expanding our wholesaling business nationwide here too, to flip and wholesale more. So I'm gonna have more opportunities to make money with my flips. If you've already done business with me on the flips, you know how quick you usually get your money back. If I can't steal it, I don't buy it, folks. I am a master negotiator. I'm a master at finding heavily discounted off-market properties. That's not me toot my own horn. That's just me telling you what I can do for you to help you. You will not lose with my deals. It's not physically possible because I buy so cheap. It's not possible. Historically speaking, even when we have the economic crashes like in 08 or even the Great Depression, historically speaking, real estate as a whole has only went down 15, 20%. Now you do have pocket areas like, Arizona, Phoenix that went down almost 60, 70% during the Great crash. I don't invest in those bigger markets. I find very niche markets. I like average income markets, like where housing is like maybe 100. The average house is like 150 to maybe 250. We don't go in those high end areas that are 350, 500. Those are the ones that have the biggest swings up and down with the market volatility. But if you take the average ones where the houses are 150, 200, 225, they typically, historically speaking, only lose maximum of 15 to 20% value. Well, guess what? Chris Rude's buying those houses for 40 and 50 and 60 cents on the dollar, sometimes barely needing any of your work. And Chris Naugle can pit, he sees all the deals we show him. Some of these deals like lead $10,000 worth of work, and I'm buying them for, 60 cents on the dollar. And we put $10,000 into them. We put them back in the market, and within 3 days we sell them. We make, 50, 40, 50, $60,000. If you want to be a part of that, go to the money school. Chris, where is it that he can go to lend to me?
Because of what you're doing, and the of our people that want to lend to you is skyrocketed. Everybody that lends to you, the worst day for all of them is the day when you pay the loan off, and sometimes that's a little too soon. So we keep rolling it. So we created the private money club just for this, but now we're expanding that into the fund and all this other stuff. So yeah, that's how they do it. They just take part in the private money club because we want to make sure that we have good lenders that understand how to do it, that are lending money to your deals. And yeah, I mean, you just sent over a deal, I think it was yesterday actually, or the day before, and that deal's fully funded already. I just sent the notes out yesterday. So yeah, and the person's actually on here. I won't call them out, but yeah, and there's a whole list. I got like a list on my desk of all the people that want to lend on your deals and your deals only. So hence why we're also doing the fund. Mobile home parks are just a massive, massive opportunity. And that fund's going to be $5 million total fund to start. And there's going to be 3 tranches, meaning people can invest for 1 year, which is 12 months, and they'll make 7%. They could do 26 months, which will pay them 9%, or they can go for the gusto, which is 36 months, and that will be a 12% return. So those are going to be the returns on the fund, and anyone can pretty much invest in that as long as they're part of the private money club. Or they can, if the opportunity is there, they can invest directly, or I shouldn't say invest, let's say lend directly to you on these fix and flips that you do. And I don't even like to call them fix and flips because you really don't do those. You do wholesales. You send me deals that need like 5-10 grand. I think you only sent me 2 deals that were true flips. Everything else were just wholesales that like you get in, you paint it, maybe you put carpet in, and boom, it's gone. And your market's so hot where you're buying that like these houses are gone the second they hit it.
That's right. Yep. And guys, it just because I might have missed this, but I want you to understand why I'm able to buy these mobile homes for so cheap. So you got to think of let's just say you buy a brand new trailer in 2021, and let's just say 3 years later, you're ready to sell it. typically speaking, lenders don't want to lend on used mobile homes to a consumer. They only want to lend on typically brand new trailers to consumers. So what happens is that person that bought that brand new trailer and they're trying to sell it maybe 3 to 5 years later, 7 years later, and the trailer's still in excellent condition, they can't sell it to their buddy because lenders typically don't want to lend to buy a used trailer. They typically just want to do a brand new one because they look at it as a depreciating asset. So that makes a niche, right? For somebody like me, who's an investor, who's got cash, who can market to these people. And then they get, so let's just say the mindset is they get stuck. They can't sell it. They have to sell it because they're buying this house. Nobody wants to buy it because none of their friends can get loans for it. So what do? They go online and type in "sell my mobile home fast," right? And then my ad pops up. They call me. The trailer they paid 60 grand for 4 years ago, I'm offering them like 15 grand for. And guess what? They take it, or maybe we negotiated 20,000, right? They take it. Why? Because they don't really have an option and nobody else wants to buy. Or maybe they do want to buy it. They can't get financed because they're a retail buyer, but I have cash. And guess what? If I don't have cash, my bank lends to me on mobile home. Well, I pay cash for the trailers. We haul them in and then we refinance and we pull all the money back out and we put it right back in. Right. So it's just a really good niche. And I'm telling you, there is not a fund out there that's going to be as cash flow positive once I get this machine going. Now, it does take time. It's not like I get rich quick. I got to buy these assets. They're typically distressed. That's why I'm buying them at 20, 30, 40, 50 cents on the dollar. And then, it takes time. Typically a 24 to 30 unit park that's maybe totally distressed and it needs everything will typically probably be about a 1 year turnaround. So you can guess about, for every 30 units, that if it's a total, crap hole, it's going to be about it's going to be typically about an 8 to a 10 or 8 to a year month turnaround. So like say a 60 unit park, it might take me, 20 to 24 months to fix that park. Right now, sometimes I hit home runs, right? And I'll find a park that doesn't need work or doesn't need hardly any work, but the owner's motivated because something tragic happened in his life. Like maybe he's got cancer or he's going through a divorce. Those deals are few and far between, but I do get them. I bought 2 parks last year that home run deals, didn't need any work. And I bought them at a freaking 15 cap as is. And the rents were low. I'm gonna raise the rents. And now I've got this baby right now, spitting money out like an 18 cap. I do find those deals, but the fund will probably be more geared toward distressed parks because that's really where the big swings at as far as, forced appreciation and making big turnarounds on the rehab, because you might better buy a park at 40 cents on the dollar, stabilize within 2 years. Let's say it's a 60 unit. Within 2 years, that park, like for instance, let me give you a prime example. The last park I just bought is a 30 unit. I paid $750,000. I bought all this on my own. Total shit park. There's only 3 trailers in that whole park that we kept. We pretty much knocked out everything. I paid $750. We're hauling in used trailers that I'm picking up for like 15 to 20 to 25 grand used that are maybe 2 to 4 years old, 5, 6 years old max. And we're mixing that in with brand new trailers. We're paying like 45 to 47,000. That, and I'm like average $1,000 to $1,200. That park is halfway done already. And it was about, it's about 6 months. So we've been going real hard. That park will be done within but probably, I would say August, September of this year. And I'm already starting to rent out some of the brand new trailers we put in there. We're getting $1,000, $1,100, and $1,200. If I take that average of 30 units, right? You average that at say $1,100. That's $32,000 in income, gross income per month. I paid $750. Now we're going to be into that. I'm gonna buy about $1 million worth of trailers and infrastructure improvements. Like we had to add some septic tanks. You got to add a pad, the plumbing. We resurfaced the road. We put some lights. I'm into that deal about 1.7, 1.8 million total, getting 30 $32,000 of gross income per month with no maintenance trailers. Part value at anywhere from 8 to 10 cap. What is that value? Let's just say worst case scenario, 10 million. If it values at a 10 cap, which brand new trailers are probably valued more to 8 or 9 cap. But to keep the numbers round, a 10 cap at 32,000 values at what, folks? $3.2 million. I'm into the deal at 1.7 million with brand new trailers. That is a what? That's a $1.5 million equity position. And I'm spitting out 32,000 a month. And I ain't got no maintenance. What real estate apartments don't, single family homes don't. And I'll keep that deal for probably 5-10 years and we'll sell it off to a hedge fund after that.
That's ridiculous.
I don't know what else to tell you guys, folks, but that's what I'm doing. I can prove it. You can come see it. Now I'm going to see something. He knows I do it. I don't
see it all. Why do you think I'm doing this? So,
yeah, I mean, that's about all I got, folks. If you didn't see if this didn't make sense for you, if your hair didn't raise in the back of your head by me telling you all these numbers, these are no bullshit numbers. Some people call me full of shit. I mean, hey, maybe I am full of shit, but then I'm just going to be full of shit by myself and I'm going to keep buying these trailers. I just going to have to buy them slower. But I promise you, by the time the next 4 to 5 years comes, I'll be so full of shit. You'll be looking at me wishing you were full of shit too. And you missed the opportunity.
Joseph just took all the money out of his pocket and said he's in. And there's more than just ones in there.
Go to the middle.
So, okay, we got some questions. You ready for some questions here? Cynthia's got a ton of them. So I'm going to kind of push some of them together. You know, and I know this one, the one, you know, on how you're doing it. So a lot of places just buy the parks for the lots and they do the lot rent and somebody else brings their own trailer, but you prefer to actually own the property, which is the lot rent plus the trailer. Cause you're basically controlling all of it. Correct?
Correct. I like to own the trailers. The returns are just double digits when you do that. If you start trying, see, that's what the hedge fund money is going after. And this is how I want to niche down. The more I niche, the more rich I get, right? The riches are in the niches, folks. Hedge fund money and Warren Buffett are looking for lot rent because it's no maintenance. They have so much money. They can't afford to like deal with a lot of moving parts, right? So they buy lot rents and they're buying the lot rents. If you're trying to buy lot rents, you're going to compete against big money. You're going to have to buy like a 6 or 7 cap. Maybe if you're lucky, an 8 cap. That's a steal. But some of these are buying it at 5 or 6 cap on lot rent. There are benefits that, yes, it's a lower return, but there is no maintenance. You don't have anything. You just collect on lot rent. For me, that's just not enough. That doesn't excite me. Like I'm looking for the double-digit returns, and the double-digit returns for me are owning parks in good areas that I can put new inventory in, like nicer inventory. I don't want to own like low-income trailer parks. My niche is a really bad trailer park in a phenomenal area that I can rehab and put brand new inventory in, where I can get premium rent in a good school district. In a good area that demands strong rent. That's my niche. So lot rent for me, I do own some parks that have lot rents, but I slowly kick them out and I put my own trailers. It's just night and day as far as now. Yeah, obviously if you put a really bad trailer that needs a lot of maintenance, maintenance can eat your lunch, but it's hard. It's just hard about hardening the property. Like we call it in multi. You harden the property really nice. So how do I harden the property? I put in newer, nicer units. These trailers last a long time. I've got trailers in my parks that are 45 years old that we've redone that'll look perfect, right? You just change the subfloor. Yeah, you just change the subfloor. You put brand new cabinets from Lowe's. You put the Formica that are $120, a brand new sink, a $120 vanity from Lowe's. You paint the walls, and they look brand new. And we put the whatchamacallit floors that are freaking their lifetime. Matter of fact, I have them up here. The vinyl planks. The vinyl planks, they're lifetime. They're like industrial grade. They last 30. Like you never change them again. And we put a metal roof, a tin roof, and we're done. Like it. So it's not. It's just a matter of hardening the property. Areas to put trailers, getting a newer, nicer trailer. That is my niche. I do own lower trailers. Lower end trailers and lower end parks. That's not going to be really our model with this fund. We're going to go after the nicer air. We're going to go after the trash trailer parks in nice areas. That's what I'm targeting because that's what I bought. The past 4 parks I bought have been either, I got lucky. I got 2 Grand Slam deals where the owner was just distressed, but he had an awesome park and it didn't need any work. I picked up 2 like that, and I picked up 3 that were actually distressed, totally trashed in great areas. That's typically what we're gonna go after, because that's the big, that's the big home run deals when you're finished with it in a year or 2 or a year. You literally got brand new inventory and you're 50 cents on the dollar on a park that's brand new and cash flowing massively. So hope that answers her question.
Yeah, it does. And some people are commenting on luxury vinyl tile or luxury vinyl plank. And folks, I have it in my house, and I have a high-end house. Like, it's not something that's, low-end houses. It's just something that has a guarantee and it's waterproof. It's, so these are nice. I've seen his remodeled house or trailers. I didn't know they were 45 years old. And a lot of people have that bad mindset where they think trailer home, mobile home parks or trailers, oh, that's, I would never do that. Listen, like, you all heard my story. I grew up in a very small house. It wasn't a trailer, but my grandparents, my dad's parents, their entire life that I know of, while I was on this earth, they lived in a trailer home, period. I spent more time in that trailer home than any of my other grandparents. And I used to ride my BMX. I got to know all the kids in there. Listen, like, judge me any way you want. I wouldn't have changed anything. Like, the thing that happened there, the people that I met in that trailer home park were some of the nicest, people, and a lot of them were older, but they were some of the nicest people that I've ever met. And, the other thing too, that, you all have to understand is, what makes Chris so unique at what he does is, number one, his ability to find these deals. That's number one, because you got to buy properties at the right price. But number two, he's one hell of an operator. He's got an entire team that knows exactly how to do this. He's got maintenance people, service people. Like, that's the golden goose right there. Having that team that understands his business, and then having Chris, who has this giant machine that can find these deals, find the trailers. I mean, like, that would be very difficult. I'm not going to lie. Like, that would be very difficult for someone to duplicate, unless they had deep pockets, and then all of a sudden you're pushing hedge funds, so that's a massive thing. And that's why we're creating this fund. Is, we know some of you, mobile home park investing is probably you should learn from Chris. You should go through his coaching to learn how to do the mobile home parks yourself. Absolutely. And some of you, just like, wow, I can't, the staff, the mobile, their head spinning, but you love the returns. That's what the fund is all about. The fund's already pretty much set up. We have a meeting after today's training to kind of go over some fine details. We'll be ready to rock, I would say, as early as 2 weeks from today with the fund. And there's going to be 3 options. Minimum investment in the fund will be 50,000. And, there's other opportunities though. Like, some of you might say, oh, I don't have 50. Great. Well, the Private Money Club's going to have individual deals, for Chris Rude's stuff that you can get into at $5,000. So that's why we created this, is to not only help Chris scale, but also help all of you make money. Cause, like, it's got to be win-win. Like, I know if I said, hey, we're going to make Chris he's already a multi-millionaire, but we're going to make Chris 100 millionaire, none of you are excited. But if you share in, helping him grow his business, everybody wins. You all make money. And one thing Duck asked is, he said, one strategy in mobile home parks, Chris, is, are you going to finance any of the like selling the trailers to any of the tenants there? Is that something that's in your plan?
So I already have one park that half the park is on a lease option. So I don't do any maintenance on it. The thing about that, though, historically speaking, is 80% of lease options and rent owns that you do, they give them back. So you just do it all over again. But I think, that's not my statistics. That's just nationwide statistic. I mean, that, you give these people an opportunity, they mess it up. But that's not on me, or that's on them. But as far as with some of these newer parks that we're buying and putting in brand new trailers, I was thinking the model is probably going, because I have typically with the banks, I have a 15 to 20 year note on some of these brand new trailers. What I'm thinking we're going to do with these brand new these trailers last 30 years, right? So what we're going to do is we're going to hold these trailers, and it'll probably take about 10 years before they probably start getting somewhat beat up to where we have to like start changing, let's call it 5 to 10 years. Probably after year 15 to 20, and they're somewhat, half-life or beat up, instead of going and doing all kind of maintenance, you then switch over to a lease option on all of these, to where you get $1,000 down, or, you know, $5,000 down as a lease option agreement. And then you lease it to them to pay you for the next 15 years. And then you then push the can down the road for another 15 years, because then you have, because you didn't have really a whole lot of maintenance the first 10 years because they were brand new trailers. But now that they need maintenance, now you've kicked the can where you're not getting any more maintenance for 15 years because they're doing the maintenance and you're collecting a lease option fee. So your cash flow numbers stay really, really high. And historically speaking, you've gotten $5,000 down, 2,500 grand down. So you get that upfront money. And let's just say, you know, half of them give it back within 5-10 years. Your park's paid off. You got the lease option down payment. Then you go ahead and renovate it, put another 10-15 grand into it, and just lease option it again, or just hold it for rent. So it's a never ending cycle. Now you will have to give up some of these trailers though, if they fulfill the lease option, right? They'll take them, but then they don't move them. You just drop the rent from 1,000 to say 400 or 450 or 500, whatever, or 350, whatever the lot rent is the going rate for lot rent. So you didn't lose the total, lost the trade, and then you just charge them lot rent. But then you really have a true no maintenance. So there's so many options, right? There's so many, like, do you have exit strategies with different pieces of the parks? Like with apartments, it's just one strategy. You can't branch off one section of an apartment. I can literally take one trailer or one unit or 5 units and do a lease option. And so it becomes dynamic in the sense I have multiple options, exit strategies.
And I know the one you just put under contract, I think yesterday, I'm confusing my days because of this event, but just the other day, you know, some people are asking, does it make sense to, you know, build from scratch or like new versus used trailers? That one you're buying and you're not building it from scratch, but you're building it the way you want that park to be. You know, we've talked about, because that one's going to be done through the fund, I believe, and we'll firm that up later.
Yeah, we're gonna do diligence on it. You know, contract, yes. Today, it's a 30-unit park in an area right outside of Baton Rouge and Denham Springs. I own 3 parks in that area. I have one in Denham Springs and one in Gonzales. Awesome. The 3 of the best parks I have. That's why I'm willing to buy it. The downside, it is in a flood zone, but we're just gonna put, you know, multiple cinder blocks. Instead of putting the average 2, we're gonna probably put 4 to 5 to get it high off the ground, so we can get a good elevation certificate to get it out of that flood zone. So I'm doing homework on it. I do have it under contract right now. So I'm going to do due diligence on it in the next 2 weeks. I have to close on it within, I think, 4 to 5 weeks. If it looks good, this may be the first deal that we buy, but this will be the problem with this park is it's no income right now. Like, I'm buying a park from scratch it had 30 units on it before, but there's no trailers. It's just a raw piece of land right in one of the best areas, right on the side of the interstate, great school district. The only downside is the flood zone. I got to get with the city and see how to put him, and I want to make sure that I'm really above, because every now and then we get a flood, you know, once every 20-30 years. So we don't want to, there is some risk in everything we do with this, right? I want to sit here and tell you, like, what I'm doing is no risk. There's risk in everything, but it's less risky when it comes to cash flow because it just cash flows so well. So I'm going to do the due diligence on it. I'm going to see what the city requires me to do. Then if everything makes sense, we're going to purchase this park and we're going to slowly haul in brand new trailers and used trailers that I get from the funnel that I just set up for the mobile home park funnel. And we're just going to build this thing out. This park will be worth, this park will probably be worth about 3.3 to 3.5 million when I'm done. I'll probably be into it for about $2 million.
Yeah. I mean, just think of the numbers behind that, folks. Like, you know, it's affordable housing, which we all know is a massive opportunity right now, given what's happening and given what's probably going to be happening here in the next few years, you know, with what we're going to talk about in the bonus session. Not only that, you've got rent, very steady rent coming in from these parks. Not only that, you own the land. Like the last time I checked, you know, any wealthy person you ever meet, he was talking about Warren Buffett, owning land has always been a part of their portfolio or part of their investment plan. You can't ever lose on land. You just can't. Even if it's a flood zone, there's always going to be someone down the line. It might not be now, might not be 10 years, but somebody sometime is going to want that land. And if somebody wants your land and you got a mobile home park, you hold all the chips because you don't need to sell. You've got cash flow coming in. So somebody, and a lot of times it's a big developer, they got to write a big old fat check. Or like he said, you just spin all the parks off to a hedge fund because they're just looking for the cash flow for their investors. And these things do cash flow. You're hearing the numbers. It's just, it's insane.
And Chris,
yeah,
add that real quick, guys, this is a recession-proof business.
Exactly. Exactly.
Where's the business unlimited? We have unlimited customers. I have a waiting list the size of a roll of toilet paper of people trying to get into my parks, especially the parks I own in Florida. Like, it's ridiculous. We have 5 to 10 applications a day. I've been full since I bought it for the past 3 years. The ones we have in Louisiana, we get them rented within 3 to 5 days once they come vacant after we clean them. There is unlimited customer base, right? Because you have to think. And then when economy crashes, I don't want to be in high-end luxury apartments, right? Because what's going to happen, not everybody can afford a $2,500 to $3,500 apartment note. The economy crashes, they lose their job. Everybody still needs a place to live. They get a job maybe they were making 120. Now they're only making 60. They got the income cut in half. When we're going to have a crash eventually. Don't know when, but it's probably coming. It's got to. The historically, you get crash time. So all those people that you got that are paying $2,500, what are they going to do? Or even $3,500, they're going to just drop down to an affordable housing. So I want to be in that bandwidth where there's unlimited customers, and that is going to be the affordable housing range. Yeah, when the economy is booming, all the people like Grant Cardone look like geniuses because everybody can afford a $3,500 a month rent. But listen, there's a lot. In 2008, they had a lot of freaking big time investors that got hosed that were buying high end stuff. I'm not saying there's no money in that. There's money in that, but that's a big boys game. If I want to play in the niches, right? I don't want to play where big boys are playing. They're buying 150, 200 units at $100 million, $200 million, and buying it a 5 cap or a 3 cap. I don't want to play with that. I'm playing in a niche, that $1 to $5 million range. Small money can't get into it because they don't have the big money doesn't matter. It's not enough units. So I want to play in that $1 to $5 million range at 30 to 80 units, 30 to 60 units, where I can crush it, get double-digit returns. I don't want to go play at 100 units right now, because 100 units, you can't get double returns because chasing it. That makes.
Oh, yeah. Sorry, you were cutting out there. Here's another thing.
Any questions, Chris?
Yeah, there's a bunch. So we'll do rapid fire just because we're running out of time. There's another option that I just saw when I was out speaking in PA, and Cynthia's mentioning this, and I think Mary also did, is, we're seeing a lot of mobile home parks start doing conversions into tiny homes. So they're taking these tiny homes, and instead of putting a trailer, they're putting a tiny home on, which is the new rage. What are your thoughts on that?
I think it's a fad, to be honest with you. I mean, I think for now, you take people that live in tiny homes, I guarantee they're going to want more space after they lived in it a couple of years. I think it's a fad. I mean, honestly, I think somebody just said it's stupid.
They're stupid. There you go.
I think it's stupid too. I don't think I think it's a fad. That's long. You look at all the 55 and over communities too that we didn't even talk about. Like, all these 55 and over community mobile home parks are opening up all over Florida. All these baby boomers are moving out of their single family brick on slab houses into these communities that are all brand new trailers that are 55 and over. Like, there's so many more opportunities in affordable housing, and you have space, right? You can get a single family home and have 1,200 square feet, right? Or 800 or 1,000, depending on the size. Like, who wants to live in a 200 square foot tiny home? Yeah, it's cute. It seems trendy, but when you live in that for long enough, I promise you, it'll get old quick.
Yeah, my grandparents never would have stayed in a tiny home because, when I came over there to open presents on Christmas, where would we have opened presents? On the roof? Because definitely wouldn't have been any room for the presents Grandma and Grandpa put under that tree. One thing I always remember is she just loved to give me that Sears book and say, go through it. A tiny home wouldn't have worked. So personal experience on that one. Do you hire on-site managers on your parks, or do you just do a central management like with operations?
So right now we have a central management. It's all run from the office in South Louisiana. We have 3 girls in the office. They do all the maintenance calls, all the collections. Now that's for all the parks in Louisiana. The park we have in Florida, we do have outside management, and the way we structure it is, my systems and team and all that, like every park I buy, if it's outside of Louisiana, we have a partner in that market that I know, like, and trust, that keeps an eye on it. And then we have management on top of that we usually, typically we have to go through 2 or 3 managers before we find a real good manager. And then once you find that real good manager, you take care of them. And we've been having the same manager at that park in Florida now for 2 years, and she's been phenomenal.
That's awesome. And Deanne, one of the things you were saying is, can you do Chris Rude's deals with self-directed IRAs, solo Ks, self-directed Roths? Yes, 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 and more yeses. Most of the people that will lend to Chris for his deals, and they don't lend to Chris, they lend to Chris's company. Just want to be clear, if you learned anything from yesterday, you cannot lend to an individual. It has to be an entity. Most people are doing it through self-directed IRAs. Same thing with the fund. Most of the money that flows into the existing funds that I'm a partner in are all self-directed IRA funds, because that's what people are trying to do. They're trying to move money, get a really good return, and that's how they're doing it. So yes, that's absolutely an opportunity. Cynthia had a question. Do you like single or double wides better?
We don't buy any double wides. I only want single wides. Double wides are problemsome. Typically the crease in the middle, because there are two pieces that are put together, that crease in the middle always ends up having problems, and you don't to buy a double wide. It's almost there's no reason to have a double wide. So if I have a single wide, a brand new single wide that I can get $1,100 for, if I have a double wide, I might better get $1,500 for it. But that single wide cost me 45. That double wide cost me 85. See how it does?
Not worth it.
Not worth it.
You'd never get the money out of that. You just
no. Double wides are for retail buyers that want to live there. They buy it on that. That's why they sell those. But if you're gonna have a park, we do all single wides.
Okay. And then how about opportunity zones? Have you looked into that? Is there an opportunity with mobile home parks in opportunity zones?
But I know there's legislation coming in Florida. The government's going to start incentivizing, I think, mobile home park investors here soon, because there's nowhere to live in Florida. They can't build houses fast enough, and the houses are too expensive. I'm pretty sure government dissents. I read a article where he said to send up housing developments and grants to investors to build out these parks. So that's coming, folks. I mean, it's coming here soon. And I'm not against building out a brand new park from scratch. I haven't done it. I do land development, so I know how to do, for single family homes, I've done land development. I can build out the infrastructure. It's just a matter of putting in the sewer, city water, and the utilities, and putting a paved road and putting your spots down.
Yeah. And also, Catherine, one of the things, the minimum to invest. So there's two. So if you wanted to, through the Private Money Club, if you wanted to just lend on Chris Rude's, wholesale deals, the minimum's 5,000 there. The minimum for the fund, the mobile home park fund, will be 50,000. And that's because it's an SEC fund and there's different regulations. So that's the differences in the minimums to invest. And yes, you can use your self-directed IRA for that. Let's see, we're getting to the end here. Let's see, do you ever target any specific like demographic or population, like veterans? I know you're a huge fan of our servicemen and women. Do you ever like target them or market to them for potential? I mean, is that part of that toilet paper roll?
To rent the units you're talking about?
Correct.
Is that what you mean?
Mm-hmm.
Not necessarily. I mean, we honestly, we just put it on Facebook Marketplace, and we get right now, Jan, my manager, we have like 4 people that just moved out because it was some Mexican crews that were fixing up a bunch of construction work from the hurricanes, and they all moved out at one time. So we had like 4 vacancies at one time. She put it on Facebook Marketplace. She had 100 inquiries the first day to rent 4 of our units. So, I mean, we don't specifically, why would I want to just specific? I mean, look, I'm a patriot. I want to support our troops, but if we do qualifications, I don't target servicemen specifically, because I don't know how I would do that. We put it on Facebook Marketplace, but then from there we qualify them using a software called IDI, which is a skip tracing software, and we do background checks on them, and we figure out what they do for a living, all that. If they are a U.S. serviceman, yes, they will go at the top of the totem pole as first preference to get the unit before somebody else. I hope that answers the question.
That definitely does. And then last one would be, what size lot is optimal for renter's comfort zone?
I mean, with the mobile home park, there's typically about a 20 to 30 foot gap, depending on the trailer park, in between each trailer from trailer to trailer. Yeah, so that's now if you don't have a trailer park and you just maybe want to buy some trailers and put them on a plot of land, typically, I know in Louisiana here, every acre, we can put 4 trailers per acre. So every quarter acre, you put 1 trailer. So you can have 4 trailers per acre if you don't have a park.
And then we'll wrap it on this one. And I'm kind of messaging now, but there's a lot of states and a lot of cities and areas that don't want mobile home parks. They feel like it brings the tax base down, the look and feel. Like, where do you see that going in the future? Do you think more and more people will or more and more towns will start opening up the ability to build new parks, or do you think that's kind of just what there is what there is?
No, I think eventually here that you're going to have to, because there's just nowhere to live. There is a nationwide mandate, like they don't want to let new parks be built, but you're still building them all over the country. They just go outside the city limits. That's really been what they've been, the investors have been doing. They're going outside the city limits, and they're building a park right outside the city limits. It's just really inside the city limit that they're trying to keep them out if they're not already grandfathered in. But listen, there's 67,000 parks that are grandfathered in right now across America, and most of them are distressed, and most of them are owned by the baby boomers, and they're ready to sell.
Woo! Giddy up and go. All right, Chris, this is awesome. I can't get enough of this stuff. Obviously, that's why we're doing a fund to, help you build this thing and do more and more. But if someone was interested in working with you in the capacity of, the coaching to learn how to do their own mobile home parks, I know you have a course for that. And
yep.
How would they go about doing that?
Yeah, they can, like, maybe you don't want to invest in the fund. Maybe you just want to be an operator like me. You want to learn how to do it. You can, I have a mastermind I put on. Chris Naugle comes to, matter of fact, he's coming to the next mastermind. He comes to all my masterminds, but we have another mastermind in Louisiana where I'm actually breaking down the whole mobile home park business at my house in Louisiana in my office the first day. And the second day, we're going to ride around all the parks that I have in the Lafayette and Baton Rouge area. So it's going to be a mobile home boot camp specifically. Chris will be coming to that to help you talk about raising private money to buy your park, to buy the parks. So if you want to come to that, that's $5,000, 2-day event. If you want just coaching, go to chrisrude.com for the wholesaling piece. If you want to learn how to wholesale and flip like me, if you want to be a mobile home park investor, you can go to, I think it's chrisrude, mobilehomeparkinvesting.com. But if you can't, I think that's, I should know that. But if you can't, you can always book a strategy call on chrisrude.com and just say, hey, I'm interested in mobile home parks, not the wholesaling. Or you can just inbox me on Facebook Messenger, right? And yeah, look, I mean, and you can follow me. I give away so many free nuggets every day on social media. I do Facebook Lives every week. You can follow me at Real Estate Rude on Instagram and Chris Rude Entrepreneur on Facebook, and tons of free content there. And like I said, if you want to learn it yourself, just go to chrisrude.com and book a call with me, and we'll see if we can help you.
That's awesome, man. Well, Chris, you know what? If everybody's, hair on their arms or on their head for that matter isn't standing up after hearing about that, then obviously they don't want to make money. And this is just awesome. We keep talking about, what the wealthy do and what the wealthy, do different than everybody else. These are the things that they do. And what Chris does and what Chris has done in the past, he just looked at what the wealthy have done and mimicked it. And here you go. It's a perfect example. Affordable housing. We all know that this is coming. We know it's a big problem in this country. So solve somebody's problem. That's what Chris says, and that's what Chris does. So folks, we'd love to have you part of the fund or the private money club if you want to lend to his deals. And if you really want to get into this yourself, join us out in Louisiana for the mastermind. All the links are up there. Chris, thank you for your time. I appreciate it.
Hey, appreciate you guys. Take care, Chris. Thank you.
Thank you.
Bye-bye.
All right, folks. So what we've now got the next speaker, and I know this next speaker is definitely one that everybody's very excited about. So before we bring on Spencer to talk about crypto, what I'm going to do is I'm just going to pull up a slide so you guys can get some enjoyment here out of this. And I'm having technical difficulties as usual. No, I think I got it. There we go.
There you go.
All right, you can see it. All right. Woo! How'd you guys like that? Now, hey, listen, there's no secret that I'm a cat guy, so we had to do that one. But if that didn't just get you fired up, what Chris was talking about, followed by some awesome music, that guy is a YouTube sensation. And if you don't know, he's blind. So you should follow him on YouTube, and make sure you follow the ones with the kitties or the puppies, or I think there might even be some other furry little critters that they throw in there. So with that being said, folks, anyone that was on the bonus session yesterday, you got a taste of what we're going to do here. This might be one of the most in-demand speakers that we've had on this because of what he's going to talk about. It's something that has been the number one thing people keep asking us about, and that is none other than cryptocurrency. And I'm happy to welcome for the first time to the Money School Essentials Training, Spencer Montgomery, and he is the founder of, and I don't know how to say it, so I'm going to let him tell it, but how do you say it, Spencer?
It's Uinta Crypto Consulting.
Uinta Crypto Consulting. So I'm going to stop the share here. And what we're going to do is we're going to get right into this. And he's going to basically blow your mind, teaching you about cryptocurrency, something that we all need to learn a heck of a lot more about. So Spencer, the floor is yours, man.
Thank you, Chris. It's a tough act to follow Chris Rude and then that wonderful break that we had. So I will try to do my best. I will hide this. So everyone can see my screen? Chris?
Yep, we can see it.
All right. Well, today I know that there's been a lot of, cryptocurrency has been all the rage, all the buzz. So today I'm going to take a little bit of different approach and talk about the 3 mistakes that investors make when they invest in Bitcoin and cryptocurrencies. So I've only got 30 minutes, so we got a lot to cover. So we'll get right into it. But who am I? Chris did a good introduction. I'm the founder and CEO of Uinta Crypto Consulting, where I help educate individuals and companies figure out what is crypto, what is Bitcoin, and what they should do with it. I bought my first Bitcoin in 2016 at $640. I had no idea what I was doing at the time and cannot believe where I am today. I was Microsoft's blockchain evangelist in the Bay Area. So I got to speak at conferences and help Microsoft's partners and customers understand what their blockchain strategy was. In 2016 to 2017, I ended up turning $13,000 into 1.2 million, and I'm going to go over how I did that. And I've taught thousands of people and influenced millions of dollars of crypto investment. But why do I love crypto right now? And why should you care about crypto right now? But first off, you can get 8.6% interest on your cash, your US dollars, without having to put it into any volatile cryptocurrency. That's completely liquid. That's first and foremost. The second, you can expect, and I expect, a minimum of 2x return in the next 6 to 9 months. I'm actually expecting more like 4x. And you can expect, and again, I expect a return of 10 to 20 times in the next 5 years. Your money is completely liquid, and you don't need $50,000 like investing in that fund. You can start with $10, $100, a couple $1,000. So that's why I love crypto. We'll get into more of that later. But I want to just kind of give you what my story is. So how did this all come about? Well, I started out as just a lowly sales executive working at a startup in San Francisco. It was actually my dream job. I was the account executive, I was in sales, and I was the 120th employee. So I thought I was super early. And we were growing like gangbusters. In 2 years, we grew from 100 employees to just around 400. And we got acquired by Microsoft for about $400 million. And I'm thinking, I made it big. Like I'm getting rich here. Turns out my stock options weren't worth very much. I think after taxes and everything, I made maybe $20,000. I'm like, there is no way I am getting rich and building wealth on this strategy. So I had to figure out a different way to build wealth. So I'm living in San Francisco. What do I decide to do? I start with investing in the stock market. You know, real estate in San Francisco is super expensive in general. So I didn't think that was really in the cards for me. And my dad had done stuff in the stock market. So that's where I went. And what did I do? I went into everything. I started with stocks. And what stock do you think I bought? Of course, I bought Apple stock. And then I wanted to be a little bit diversified. So I started getting into ETFs. And then I wanted bigger returns faster. So I got into options. And I go to YouTube and I look up find Option Alpha and I spend 18 hours going through all their content. And I find articles on Seeking Alpha and I sign up for newsletter like Tiki Tawari's The Palm Beach newsletter. And I go to Reddit channels and podcasts. I'm literally listening to like 4 hours of podcasts a day on my way to work, on my way home to work, YouTube channels, etc. And what were the results? Nothing really worked. I was all over the place, and what meant that my profits and my losses were all over the place. I remember when I first got into this, I made 4,000 within the first 2 months, only to lose it and lose another 10,000 over the next 6 months. Nothing was consistent, and it was just so frustrating. I don't know if you guys are familiar with it. You're trying to figure out how to build wealth, and all of your strategies don't seem to work. Well, as I learned the stock market and I learned about how the economy works, how the Federal Reserve works, and I eventually got introduced to Bitcoin and Ethereum. And I wanted to learn about it. But at the time, this is in 2016, I didn't have all the podcasts, all the articles, all the YouTube videos. I had to go learn it the old-fashioned way. And what's the old-fashioned way? I had to go find people that knew their stuff. Fortunately for me, I'm working at Microsoft, and they had a blockchain team. So I went and found the guys that were working on this team, and I was like, you guys got to teach me. You guys got to tell me everything that you know so that I can figure what this is all about. And long story short, I eventually became Microsoft's blockchain evangelist. So they didn't really have a presence in San Francisco, and so I got to be kind of their boots on the ground, speaking at conferences. And this really required me to spend countless hours reading articles, going through trainings, finding mentors, learning it well enough to present to other people. And what did this mean? Like, I became an expert. I was able to be like, know this better than most. And that's how I was able to turn $13,000 into 1.2 million, was mostly because I knew it better than most people. And what changed? Well, I like this quote from Peter Lynch. He says, your investor's edge is not something you get from Wall Street experts. It's something you already have. You can outperform the experts if you use your edge by investing in companies or industries you already understand. And for me, it wasn't that I already understood it, but I took the time to understand it and to become even better than any of the Wall Street or crypto experts. And then for me, I'm the kind of guy that I can't help but share what I know with everybody that will listen to me. When I got my first pair of Lululemon pants, I had to tell everybody about it. And so it was the same thing with crypto. So I got to speak at conferences. I went to conferences in Washington, D.C. and Peru. I'd go on podcasts and YouTube channels, and I post every day on LinkedIn trying to kind of get the word out. And I wrote an ebook and had this newsletter, and I've been able to help a lot of people understand and appreciate and make good money in cryptocurrencies. I've literally helped thousands of people make millions of dollars. But as I've done that, I've realized that there's 3 big mistakes that almost every single investor makes when it comes to investing in Bitcoin and cryptocurrencies. And I want to give you a time-saving investment approach. So mistake number 1, here it is. Mistaking information for education. What does that mean? Well, it means you don't go to articles, you don't go to podcasts, you don't go to Twitter, you don't go to Facebook and Slack groups and YouTube videos and different events to figure out the secrets that's going to give you your edge in finding profits in cryptocurrencies. Why is this? Because this is what everybody else does. And do they have consistent profits? No, because they're trying to take the advice from not the Wall Street experts, from the crypto experts. This gives you a false sense of confidence, and it does not result in consistent profits. Yeah, maybe you get an idea and you're maybe making money for a month, but you want something that's going to give you consistent and high profits that you can count on. Because the information you're getting, you have no idea if it's good or bad. It's still just a guessing game. Good example here is Peter Schiff. For all those that you know Peter Schiff, he's a gold bug. He tweets this out earlier this week. He says, Fed Chair Powell said Bitcoin is a substitute for gold, not the dollar. He's wrong. Though Bitcoin has little in common with the dollar, it has even less in common with gold. He also said Bitcoin isn't a threat to the dollar. on that, he's right. So he's basically hating on Bitcoin. And if you've trusted Peter Schiff in the past to invest in gold, well, if you read that, then you're like, well, I better sell my Bitcoin. And then on the other hand, you get a guy like Vijay Boyapati, who says Bitcoin is the new monetary good that will primarily disrupt its closest monetary cousin, gold, and is significantly superior to gold along all the attributes that make gold a good store of value. Long-term target, 300,000 to 1 million. So you read both of those and you're like, who's right? I don't know. And so again, you don't find your edge in crypto on Twitter or in any of those, the articles and YouTube videos, because that's what everybody's getting. You get it in the crypto education pyramid. What is that? Well, it is all of the fundamentals of understanding cryptocurrencies that include understanding blockchain, understanding economics and fiscal policies, understanding what DeFi or decentralized finance is, understanding concepts like adoption cycles, law of supply and demand, and how to read charts and all the indicators. Like, there's so many things that are involved in understanding crypto. Like, there's 5,000 different cryptocurrencies. There's hundreds of exchanges that all have different components, different fees. I mean, understanding blockchain in and of itself is difficult, let alone economics and government regulations and the concept of mining versus staking. And then the strategies of holding, which they call hodl, or swing trading, day trading, using leverage. Like, there's just so much going on that it's no wonder that you need to have the fundamentals, which I've put together in what's called the crypto education pyramid. An example I've actually had as a client of mine, he did it. He had the time, he spent 100 hours studying crypto. He listened to the podcast, he read the articles, and he had I think he had about $200,000 to invest, but he wanted to I'm going to put 15,000 and buy 1 Bitcoin. I said, hey, you might consider going through this education pyramid, understanding the fundamentals. So he goes through it, he double checks his investment thesis, and by the end, he realized the prudent thing for him to do was to invest not just 15,000, but the $200,000 that he had. And what do you think happened? Well, he turned that $200,000 into over $500,000. Had he mistaken his initial investment as education, he would have only made 30,000. He only had like 50,000, but because he educated him, gave that solid understanding, he made real incredible returns. So now you're probably thinking, great for that guy, but the opportunity has come and gone. I'm too late. Well, let me tell you the secret and the mistake number 2. Thinking you are too late. I literally can't tell you how many people think they're too late. Almost every person that bought Bitcoin or any cryptocurrency for the first time thought they were already too late to the game. I know this because I've talked to thousands of investors, but not only that, I too thought I was too late when I bought Bitcoin at $640. Ethereum was at $12. I thought I was too late because Bitcoin was just at 246 months prior and Ethereum was at like $2. Like, why would I think I was not too late? Like, literally, this is when I purchased the end of June, beginning of July of 2017. And the only reason that I was able to have the confidence was because of that Microsoft. I had access to people that knew it far better than I did. And so I had the confidence to just dip my toe in the water and put $5,000. Let me take you on a journey of how I took 5,000 to 1.2 million, because it sounds easier than it really was. So I've got my investment, it's at $5,000. Now, 4 months later, I'm at the end of 2017 and my investment has gained 50%. That's a good return for anybody. And I'm thinking maybe I should sell. Well, I was fortunate enough to get Chris Bernitzky on the line. Chris Bernitzky is the author of Crypto Assets. He's been in the space since 2013, 2012, and he spent 30 minutes with me. By the end of this conversation, I realized, okay, we're still early. I'll keep my money in, and I'm actually going to add another $8,000. We'll see what happens. Well, another 5 minutes go by, and now my $15,000 has turned into $70,000, and I'm like, I have got to sell. This is like life-changing money. Fortunately for me, I was able to go represent Microsoft and go to Consensus 2017, where I met Tur Demeester, Melton Demirs, and guys like Whale Panda on Twitter, who again had been in the space for a long time. And they're like, listen, you don't realize this, this, and this about crypto, about how we're still super early and about how like where this is going. And they convinced me basically to keep it in. So 3 months later, I'm now worth 150,000. And again, this is like literally, I'm 27 years old at the time, thinking I have turned $13,000, $15,000 into $150,000. Like, this is life-changing money. And I get introduced to Trace Mayer. And if you don't know who Trace Mayer is, this guy bought Bitcoin at 15 cents. He's now worth hundreds of millions. I think he's actually now worth $1 billion, but at the time he's worth hundreds of millions of dollars. And for some reason, I had a mutual friend, he agreed to go to dinner with me. And then he invites me over to spend 2 hours at his apartment and is telling me kind of some really crazy crypto stories. And again, why we're still so early. Long story short, I continue to keep my investment in this. My investment turns to 200,000 by September. I join a group called Cluster Capital. I meet and attend conferences like Ethereal SF, where I get to meet Mike Novogratz and Alyssa. And my investment portfolio is worth $500,000. And every time I'm thinking I need to sell, they tell me, Spencer, we're still super early. You haven't thought about this type of indicator, or you haven't heard about this type of use case. And eventually I turned that $15,000 into 1.2 million. And again, I got to speak at many conferences and network with a bunch of people that eventually gave me the indicators and insights that I knew that I needed to sell before Bitcoin and all the other cryptocurrencies crashed by 50 to 90%. And I was able to retain all of that. Well, what I realized is that it wasn't about really having key insights. It was having guides and mentors that helped me zoom out and realize I wasn't too late, and that I'm still not too late, and that I shouldn't prematurely sell. Because even today, it's just like what Vijay Boyapati said, that Bitcoin is the new monetary good that will primarily disrupt its closest monetary cousin, gold. And the long-term target of Bitcoin is really 300,000 to 1 million. So you're looking at Bitcoin at 50,000 and you may have made some money, or you're trying to decide if you need to get in now. And when you realize that if Bitcoin were just to equal the market cap of gold, Bitcoin would get to $500,000 to $600,000 a coin. And when you put it into that perspective and you stop looking at where Bitcoin was a year ago and look at it to where it's going to go, then you realize you're still very early. And I love this chart. So this chart shows if Bitcoin were to follow previous cycles, where would Bitcoin go this year? So the orange line is Bitcoin over the last, I think it's like a year and a half. And if it follows the average of the previous two cycles, we could be seeing Bitcoin reach 387,000 in just another 2 months. Or if it kind of takes a little bit longer, maybe 286,000 by October. We're sitting at 50,000 now. That's 4, 5, 7 times than where it's at today. So if you had access to a mentor and that insights that you didn't have available, you just weren't counting on podcasts and articles, you probably could see how you could make some meaningful gains. Which brings me to mistake number 3, an all or nothing mentality, right? Like, people see me and they find out that I have 95% of my wealth in cryptocurrencies right now. And they're like, you're probably going to tell me that I need to sell my 401k, I need to get out of all my stocks, sell my real estate, and get all in. And I'm like, don't do that. You can get into serious trouble by doing something like that. And so then they ask, well, like, what do I do? And the things is, well, you shouldn't stay on zero. That's first and foremost. And secondly, you shouldn't go all in. Like, I have a different risk profile than most and different understanding. So that's not going to make sense for everybody. What does make sense is to find an allocation that fits you. It's all about finding the right allocation for you in your situation, because everybody's risk profile is different. And your risk profile is dependent upon your income levels, your debt levels, how much debt you have. Do you own a home already? Do you have kids that you need to provide for? What's your age? Are you young and have time on your hands, or are you older and looking towards retirement? What are your needs for retirement? What is your risk profile or your tolerance in general? And what is your spouse's risk tolerance? Like, all of these kind of go into what makes sense for you, right? Like, a college student has nothing but time is going to have a higher risk than someone that's already in retirement, or maybe a single mom with 2 kids that's trying to make ends meet. Well, whatever your situation, let me consider this. And I think I may have talked about this yesterday. If you just take 1% of your investable assets, let's say you have $100,000 to invest, and you just take $1,000. The worst case scenario, that 1%, maybe it goes to zero. Maybe the worst case scenario, Bitcoin gets banned and it goes to zero. You're left with $99,000. That's going to do nothing to change your financial life. But if it really does be considered better than gold, and we're seeing public companies buying Bitcoin on their balance sheets, basically because they believe Bitcoin is a better version of gold. When the mass population comes to this understanding, and Bitcoin goes not only to 100,000, but reaches 300,000 to 1 million, that $1,000, that 1% could then become $10,000 to $20,000, which then is like 10 to 20% of your investable assets. That is a meaningful difference. And even you can look at this report by Fidelity that shows if you compare a typical investment portfolio that has 60% stocks versus 40% bonds, you get an expected return of about 6.8%. But if you put 1% in Bitcoin, that's almost 8%, 2%, 9%, 3%, 10%. Like, that's a meaningful difference without having to put yourself at risk. And so if you had an allocation that you knew was customized to your situation, how many of you see you could comfortably invest in crypto? Because that's what it's all about. People hear about crypto and they think, first off, fear. They fear that they're missing out and everyone's going to get rich without them, but they also fear that if they do it at the wrong time, they're going to get burned and they're going to lose all their money. And that's really what I'm here for. And that's really helping you understand what the 3 big mistakes are. Mistaking information for education, thinking you're too late, and having an all or nothing mentality. So if you do want to do something more, I'm happy to help. I have a course. I would love to kind of be a guide and a mentor. And again, the reason that I'm so excited about crypto right now is because you can get 8.5% interest on cash without having to even buy Bitcoin or Ethereum or all these volatile cryptocurrencies. Like, you could literally put your cash in a crypto bank and get 8.5%. I'm expecting a minimum return of somewhere between 2 to 4 to 5x in the next 6 to 9 months. And long term, I'm expecting still a 10 to 20x. So there's still so much opportunity. I want to just kind of take a moment and open it to answer some questions.
Holy crap, man. Like, it's all I can say. Like, I don't know why I don't have more questions. I mean, we're kind of answering some of the questions as we go. Literally, like, I just went to my, Andrew here in my office, my educational engineer, while you were saying that, I was saying, I need some coffee. And he didn't answer me. And then he flashes his phone. He's buying more Bitcoin. He literally is buying more Bitcoin right now. And yeah, I mean, a question's coming up. How do they reach you? How do they like learn more from you? That's something that keeps coming up. And then I'll get to Cynthia's questions in a second.
So,
there it is.
So here's my email. You can even use this link to book a call with me. I'm actually going to do a giveaway for this group. My course is typically $1,500, but I want to give a course away for free. And so for everyone that books a call with me in the next 2 weeks, I'm going to do a drawing and give one of you guys the course for free. And I'll give that information to Chris to announce at the last session tomorrow. But yeah, schedule a call, send me an email. Happy to help you. Really think that there's so much opportunity here. And that's really what made me do this in the first place, is I saw there's opportunity and there's nowhere to go to get help and to have a guide and a mentor to walk you through it and make you feel comfortable. There really isn't that out there. And so that's really what I'm here to solve and here to help.
Spencer, you don't even know. I mean, we have been being asked, and we've been doing this 3-day and our 2 days for a while, and we get asked every time about Bitcoin. And I'm like, I'm not an expert. I know nothing about it. And I've been seeking and searching, and my whole team's been looking for somebody that will do crypto the way you literally just did it. And folks, I want everybody to know, I met Spencer at a very high-end mastermind called the Power Room out in Utah. And, he started talking, and I knew right away that he wasn't your, and I don't want to say this the wrong way, but your atypical crypto guy who's trying to sell something or get you to invest in him so he can buy crypto for you, and that's all I'd ever seen. I literally not long ago had somebody walk into my office trying to pitch me on this guru sitting in front of his computer who's buying crypto and how I should invest in that. And I'm like, get out, there's the door, see you later. And I have been trying to find and learn more about this, but I couldn't because it was always somebody trying to sell something. What you just did, what you just demonstrated there, especially like that timeline, that's insane how you showed that. And then, like take 1%, like who wouldn't do that? Literally, like I don't know anybody on here who wouldn't and shouldn't do that. Like that, it would be almost terrible if you didn't do something like that, just to kind of get your feet in and then learn the right way to do it. So I'm sorry. I know there's questions. You literally did such an amazing job. I'm speechless.
I appreciate that. So what I saw is that people wanted to get into crypto and the option was to figure it out yourself or give people money. And the problem with giving people money is they take 20 to 30% of your profits. And this way you don't have to trust your money with anyone. And you don't have to give them any money. You don't have to worry about them running away with it. You can just educate and do it yourself. And that's what I'm enabling people to do.
I love that. That's the money school way. It's all about taking control of your money, and knowing it yourself. So that's awesome.
And Stephen, if you could you, I typed in the link wrong. Could you type in the link so everybody can set up a time to win that free training? But let's get into some of the questions. And Cynthia has a lot. Now, Cynthia has been part of this. Cynthia, please correct me if I'm wrong. Is this your 4th time doing the money school 3-day? I think it is. And she's always very active, has great questions, but she's very involved in Bitcoin. So her questions are good ones. Do you think the so-called technicals are accurate enough to pay attention to?
Yes and no.
Okay.
They are for long-term, like long-term perspectives, yes, but they can be very tricky for trading on the short term. Like you just can't predict something like Elon Musk coming out and saying, I'm buying 1.5 billion. The charts would never have given you that kind of indicator and caused the price to just skyrocket. So use technicals for a long-term basis. Don't use them on a shorter term basis unless you really know what you're doing.
And what else you just demonstrated, and right to what Cynthia's question is your answer is what you did is you just bought. You didn't buy and trade and trade and trade. Maybe you did, but really what you demonstrated there, you just bought it and you just held it to where it is. And I think that's the best play. If we really think it's going to go where, some of those predictions are from, the people that you learned from, then why wouldn't you just buy it and, buy the dips and then just keep holding it? Like, it just seems like such an easy, long play and one that just makes sense in the world, and just ignore the dips, right? Or buy the dips. That's
it's actually easy to ignore the dips. What's hard is to realize when your capital has like 3x and you're like, well, I need to sell. It's the sitting on it and realizing, like, having that fundamental understanding and conviction that allows you to let it ride for so long.
I would have had a hard time with that. And I watched that thing and I'm like, yep, I probably would have sold too. And if it, you had those people kind of in your ear, that thank God they were there at the right time to tell you not to sell, because that would have been a massive mistake. But you know what? It's just inherently what an investor wants to do is, buy low and sell high. And, when you go from, I can't remember what it was, 9,000 or 10,000 to, 700, like, how do you not want to sell? That's crazy. Yeah. Who are some of the gurus that you still listen to today?
So, I also have a list of Twitter followers. I can send that again. If you send me an email, I'll send you that list.
We'll send that out in the recording today. We'll send, because I know that this is a topic that everybody wants to get more. So we'll send that out when we send you the recording tonight, Stephen. Just make note that we got to do that.
So, but just in one name that I really like, a guy named Dan Held, Peter McCormack. The problem is though, you get people that are like so one-sided and religious against only Bitcoin or not Bitcoin. And so I really try to have a really balanced approach. I just like money. And so I'm going to go and find wherever there is opportunity to get money and not try to get into like the political or the religious kind of concepts of Bitcoin versus other coins. So that's just one thing to watch out with a lot of these big names.
And another one is, what is an efficient way to borrow against your crypto? So if somebody had money in and they wanted to borrow it, is there any efficient ways to do that? Or borrow
Absolutely.
against it?
Yeah, so you can buy Bitcoin and then use that to take a loan at 35% to 50% loan to value.
Right.
I've done it. I've loved it. That's actually how I'm going to pay my taxes this year, is I'm going to loan against my crypto.
Well, Spencer, you kind of heard me talk out in Utah and what we do with privatized banking, which is the essence of uninterrupted compound interest. I mean, my mind is thinking, okay, I take a loan from my banking policy, I put it into, that account, that 8.5% account, and then I use that interest to then slowly drip in and just keep on a systematic basis buying into it, even if it's like fractional shares or something else. I mean, I got a lot to learn. I'm so uneducated with this, but I mean, that's where my mind went immediately. And somebody was asking, where is the best place to buy Bitcoin? Like, she sees a lot of apps, and there's too much info out there. So like, do you have a suggestion on where we could buy it?
So there's first of all, I would just say, just don't buy it on Robinhood. There's some.
Well said. Don't buy anything on Robinhood for that matter.
Well, the reason for Robinhood is if you buy Bitcoin on Robinhood, you can't then transfer it or send it to anywhere else. So it's locked on their platform. So you couldn't send it to a platform like Coinbase or BlockFi to gain interest. So that's, again, I'll cover it in the course, but Coinbase is a good way. They do have high fees. There's other ways to buy it on Coinbase that you can get lower fees. Yeah, I mean, you just want to stick with really reputable firms. So Kraken and Gemini, Abra, those are kind of the ones that I stick to.
Yeah. And folks, just to say what Spencer already did, just to reiterate it, he's giving away a free course, a free coaching course. It's right there. There's the link. So you guys all should be doing that. And, a lot of people, there's a question here, and this is too deep for how much time we have, but are there different types of Bitcoin or just Bitcoin? Clueless about this. I mean, anonymous, I don't know your name, but you really need to set up a call to kind of learn, because there's a lot to unpack with this. So, what he's showing you is kind of what I always say, the pimple on the elephant's ass. That's the equivalent of what we're doing here. So you definitely need to get a little bit of knowledge with this, but why not just try to get a free course? I mean, he offered that, and I didn't know he was going to offer that. I truly didn't. Let's see, it's like dollar cost averaging. How do you purchase over time? That's a good question. I mean, is there a way to dollar cost average in and just systematically buy into fractional?
I love that. I love that concept. And you can do it through apps like Coinbase or Gemini.
Anonymous, you and me are going to be doing that exact same thing. The difference might be I'm going to be doing it for my banking policies. All right, Keith's been super awesome on this 3 day. He said, with Bitcoin's volatility, what are your thoughts of the buoyant currency NDAU within the crypto market?
I'm not familiar with NDAU, so I'd have to look it up and get into it. I mean, again, there's 5,000 cryptocurrencies, so please don't hold me responsible for all of them.
No, actually, it's good that you don't know them all, because that means that you're really focused on the ones that are working for you and the ones that your mentors have taught you about.
Once somebody asked, outside of ETH or Ethereum and Bitcoin, what other crypto do you think has great upside? Literally, I mean, there's a lot of different answers. You go onto Coinbase, they probably have 25, 30 coins. Any of those have the potential to 2 to 5x in the next 9 months. And it's because we're still so early. The adoption rates of these are still so small. Think about the group here. All of you guys that are attending this, you guys are ahead of the game in wealth and finance. And I'm guessing most of you don't have it or don't have a really expertise in it. That's how early we are. We're still less than 10% adoption across the US.
That's crazy. I thought it was way more than that. Let's see. Is there a difference between crypto and Bitcoin? I think that's
so crypto is just the general kind of bucket term. Bitcoin is just one specific coin. There's many others.
And is there a cost to scheduling a meeting with you?
Nope. The call is free. Just book a 30-minute call.
What prevents the government from seizing crypto by forming its own wallet and mass buying and then converting to fiat currency? Great question.
So if they were to mass buy Bitcoin, that would cause the price to go up.
Yeah, that'd be a great problem.
That would be a great problem to have.
Not good if you don't own.
Right. And then they could then try to They could sell it, which would cause a dump on it, but they wouldn't put I mean, that's not the way that they would ban it. They could put penalties. They could tax you more heavily by buying Bitcoin to de-incentivize you to do that. But you have to realize, like, this is a worldwide currency. This isn't just US. Like, there are countries across the world that are dealing with massive inflation, and they see Bitcoin as their savior of money. And so, yeah, maybe there might be some negative pushbacks if the US government comes out and tries to de-incentivize it, but you got to think more larger scale, longer term.
Yeah, and I think that's the name of the game right there. All right, so let's see, what's the next one we've got?
Oh, I noticed the reason that the link didn't work in on the screen is there's a typo. It's not intra crypto, it's into crypto. So
Oh, whoops.
I'll just type that one more
Yeah,
time.
type that one in so that we get it. A couple of people were doing that. So let's see, Mark, Mark is another, he's very good with crypto. He's been doing this for a while. Do you hold your Bitcoin on cold wallet or on an exchange where you purchase the Bitcoin?
So a cold wallet, for those that don't understand, is like holding it on a USB drive. And I have had it in the past. Right now, I like to hold it in exchange like Coinbase because I actually feel more comfortable with them storing it than myself. I know that if basically if Coinbase goes down, the whole system's going down, and they're not going down, right? Like, they have their shit in place. They know what they're doing. You can trust them.
Perfect. All right. Best way to buy Bitcoin or this? I think we've already said that.
Yeah, dollar cost average is really the best way to do it.
Okay. Is it safe to buy Bitcoin through Cash App?
Yes, they have extremely high fees, and that's the only issue. And I don't know if you can withdraw your Bitcoin, like you can send it to other places. I'd have to double check. But again, the great thing about Cash App is it makes it super accessible to many people. So if that's the only way and the easiest way for you to do it, do it. The main thing is just to get off 0%. That's really my mission. I don't care how much you buy, just get off of 0.
Yeah, good one. If you borrow against it, so that earlier we were saying there's places where you can borrow against your Bitcoin. I would assume there's interest that's charged on that loan that you borrow.
Yes. Yeah. So that can be somewhere between 8 and 10%.
Okay. So Cynthia, that right there would answer the income tax thing because you could write that interest off. Do you think is there anyone, if you want to say it, that you think is full of crap that's out there talking about crypto?
90% of people.
Okay, that's an easy one. All right. If you have $10,000, would you do all Bitcoin or all Ethereum or 50-50? That's a great question.
So again, it all depends on your situation, your scenario, your risk profile. For me, I am actually probably 70% Ethereum, 30% Bitcoin, because I think that there's higher upside in Ethereum, but that also comes with higher risk. But I have a risk profile that I'm willing to take that bet.
All right. Joseph had a question. What do you think of Tron? Oh, I love the movie Tron.
So that kind of gets into, that's not one that I'm going to recommend to people because I don't know enough about it. And I know there's a lot of hypers and speculators and like pump and dumpers around that coin that I like to only recommend the ones that I know that you can't lose on long term.
Yeah. And that's, anyone that's really good at what they do, they won't know everything out there because they're so hyper focused on the ones that they're good at. And that means you've got yourself a good coach and a good mentor when you find somebody. When somebody knows everything, they don't know everything. They just say that they do. So that answer right there that you don't know is the greatest answer you could give. Should I move my holdings from the app crypto.com to hard wallet?
Again, that's book a call and we can have another conversation about that. But again, it's everybody has their own preferences. Crypto.com is a pretty good wallet.
Duck wants to know if anyone wants to learn how to dismember someone slowly. I think we're going to have a digital course on that coming soon to the next 3 day. Mark Perry is asking, do you have a specific strategy to purchase Bitcoin in your QRP? Oh yeah. So QRP would be a qualified retirement plan.
So you can buy Bitcoin with a qualified retirement plan using a self-directed IRA. There's like Kingdom Trust is a platform that people can use to buy Bitcoin.
Bitcoin IRA is another one.
Bitcoin IRA. Yeah, there's several different things. So
yeah,
definitely look into those.
Yep. Let's see to the bottom here. That was a lot of questions. Sorry, it's taking a bit. Are there any other investments that would cause an issue with someone also investing in Bitcoin?
No.
Are you familiar with Weiss Rating Crypto Newsletter?
I'm not.
And okay, that one, yeah, anyone from New York would love to watch Duck dismember Cuomo. So I think we'd all be in on that one. Good group right here, Spencer.
That's hilarious.
Listen, if you could just in the chat, if you could just put in the proper link, or maybe you already did and I missed it, but we want to make sure that they all have the opportunity to schedule a call with you. I think you're going to be a pretty busy man for the next couple of weeks. So I hope you cleared that calendar up. There's his link.
I did.
Folks. He's got a clear calendar for you guys. And listen, Spencer, like this was phenomenal, to say the least. Your transparency, the way you just explained that, the way you actually went through and presented that, defied everything that I would have thought someone talking about crypto would have done. So I want to commend you for that. I want to welcome you to the Money Multiplier family, and I'd love to have you back.
Appreciate that.
Not only on the next 3-day, but also I'd love to have you on the Wealth Webinar Series to bring what you just did to a whole lot more people than the 3-day event. So thank you.
Let's do it.
Chris, I'd also like to invite you. We could talk about when, but get you to our 2-hour group coaching for our MSTV Premier and Private Money Club members. I mean, that would be spend 2 hours of just Q&A about crypto would be absolutely awesome. So let's get that set up, Chris, if that sounds good.
Thanks, guys. It's been a pleasure.
Thank you, Spencer.
Thank you, Spencer.
Appreciate it.
We'll see ya.
All right. Bye-bye. Oh my goodness. Steven, was that not just like literally Andrew's over here. He hasn't been quiet all day long. I'm like, is something wrong? Like what's going on? He's over here buying more crypto. Like he literally held up his wallet. He's buying more crypto now. So folks, I hope you really love that.
I text my brother and said, I think you've been right over the last 3-4 years. He's been telling me about crypto for years.
Yeah, for I don't know how long it's been, but I mean, I've been saying I know nothing about Bitcoin, nothing about crypto, and like I gotta learn. And I've tried learning, and every place I've gone has always been like the 90% he was talking about, where it's somebody trying to pitch something, or it was always somebody trying to get me to invest through them so they could make the money and give me some fixed return, which you just saw Spencer show what he did. And if that isn't enough convincing that like this is the dollar cost averaging option, and the other option that I got to learn a lot more. I mean, I should be booking a call right now, is that 8.5%, because I've heard about that over and over, where you can make this great interest rate in a totally liquid account, which makes sense. I mean, the liquidity aspect. And I'm thinking instantly when I heard that, I'm like, arbitrage. Joseph's ears perked up over here. He heard the same darn thing. He's like, wait, we can make the 4% guarantee. Plus we move it over to this, we make that. And then we dollar cost average into Bitcoin. I mean, my head is completely spinning. So where do we go next, Stephen? What do we do next?
So Jack Bosch with Flipping Land is, seems like he's got a couple things happening that are conflicting. So he'll be on, we believe, here in a few. So we're going to bring Bo in now. And awesome. So we're kind of missing a schedule. We're backed up a little bit. So we're on schedule. We just skipped a speaker, but we'll get him on, I believe, here in a few.
And I hope everybody's okay with that. What we did while Spencer was going is we did not want to cut that off. Matter of fact, I wasn't going to allow that to get cut off. So we went about a half hour over, which kind of bumped our next speaker. And I felt bad, but that was just too good not to hear. So we just had to do that. So I apologize for that. I hope everybody was okay. We're just shuffling things around a little bit. So we're going to be bringing Bo on here. He was scheduled to kick off at 1. Is he on yet?
But Bo's coming on. He said he's logging in. He's traveling. So he's got the setup. He's logging in now. He said, give him 2 minutes tops.
Somebody just said,
any more fun videos?
Yeah, I think I do. Do we have any more fun videos in there, Andrew? I'm trying to think if we do or not.
One more. He said 2 minutes. He'll be on.
2 minutes? All right. If I got 2 minutes, yeah, I can certainly find a fun video. You guys want something fun? I got it for you. Just give me 1 second to pull it up, and then we're going to have some fun with this until Bo comes on. I hope you guys are ready for this. Yeah, I just got it. Let's see. Hold on. I got it. We do spend a little bit of time kind of trying to find interesting things. This one's probably pretty damn good.
I'm gonna say we got a winner.
All right, yeah. Winner, chicken dinner. All right, so let's see. Share. Boom.
This is the checkers game where grandson and granddad will bond.
Is that playing on my screen yet or no?
This is the kitchen where the new boyfriend will unofficially become family. These are the Verbo vacation homes waiting for your family.
Sorry, I'm gonna move these things up.
They froze a mannequin. Freezer fraud. That's freezer fraud. Quit yelling. I'll fight you. I'm gonna do a fight. I'll fight you. Really? I'm not scared. I'll flick a plant into your eye. This is the kid's couch, and that badger's skin is now on my neck. I'm disappointed in your wrist size. Mom, I have to tell you who's awesome.
Hold me.
All right, man.
Hold me.
Come on.
Hold me.
Are
Hold
you
me.
serious, man?
Hold me.
I mean,
Hold me.
just run toward the other side, then I will pitch it to you. I thought there was an angel on top of the car, and it was just a mutant goat. Ricky? Where's my bunny? Ricky! I meant to tell you, I forgot what I was gonna say. I better sit back down. Crimson de Lowry, the Earl of Transylvania. Fresh mountain sweet roll. Cankle, chafer, swell crotch. I might need to use the bathroom like about that much. Uh-oh. What are you talking about, worms? Seriously. Quit it, guys. Oh no, quicksand. Ah, quicksand. Ah! Could I wipe you? Wipe me? Egg Todd! Egg Todd, it was you! You're going back to your hole! Her heart is fictional. Hey, listen to this fable. Then I said, Cheryl, I think you reversed over the pumpkin. You want me to compute? Everything's worse under a lens. I'll do anything you're asking. Do you have a knife on you? No. I like to pretend I'm a creature of the night. More flavorous. The amazing Zazu. Audio tone golem. Oh, you can feel the wind, man. Oh, the wind. The wind, the wind. Yeah, literally zero wind. Y'all know I used to babysit? I want the Papa Duke's rotten enchilada. Yeah, I'm gonna make love tonight. Hey, guy, I don't know your name, but here's some paper. What are humans? We don't know. I made the children cry. You need variety in cheesesteak. Hey, that pottery class, like, it is so fun. You ought to be in it. It's like a fun waste of time, you know? Jazz fingers. X-rated kissing machine. Tetrario typhoid. Just wood sack. Hey, I'm pretty human. Handsome. Kill it! When you're on a team, what is happening? Lost a quarter in my foreskin. Will y'all get my dad? Sorry, I was talking to a bat. He's gonna be okay. I really like this. Hey, Snow Blood, Tan Joey, Little Toe Cancer, let's go. No! The slime! The slime! No! No, Odin! Odin, I'll be fine! Yeah, I get it, he's tall and a star and married to a goddess. I'm like, what does he do in the bathtub? What does he do in the bathtub? That is a beautiful crane. That's the XJ8, XJ10. I'm gonna get a crane. Colonoscopy. Go ahead. Huxley Ice Fish. Quizlin Magoo. Governor Gucci. You are locked in a zoo. What do you do? Hunt. A zoo's got zebras, right? Taco Bell potato pale. Equinus decay. Tumor stuff. Street cat. Sponge clump. Glands. Bean money. Enema. Wooden shoelace. Tra-la-la-la-la. Don't be a tool belt. A what? A tool belt. Like, be yourself. Oh, okay. Not a belt. Mild Whisper James. Socks. Buck Tasty. Drizzlin' Flamenco Baton. Shalimar Slimps. Johnny Marvelous. Hey! His dumplings are down too low. Jeez, how doesn't he get that those dumplings are too low? His dumplings are dangling there. We all know what I do when I go home. You always have got good burps. Do I really? Yeah? You really think I do? Uh-huh. On a scale of 1 to 10, easy. I have to survive. Guess why? I'm pregnant. I have to survive. It was made out of cedar. I know that wood. I was thinking maybe I could read you some Bible verses. Okay. Yo, guys, Johnny Appleseed had a really thin thigh bone, a puny thigh bone. I'm so humble. Good job, man.
Alrighty. I'm in tears right now. Yes, I am. Some of you may or what? Damn it. Come on. Now what happened? Time out.
I'm one of those guys.
No,
I'll do whatever you want me to do. Brock.
Oh my God, my computer was frozen. All right. We're just buying a little bit of time. I don't watch football much, but if football was like that, I'd watch a heck of a lot more of it. Anyway. Did anyone like that, or did everybody think that was just ridiculously stupid waste of time? Either way,
perfect little break right there. I love this.
Little break. Sometimes, hey, listen, when things don't go exactly as planned, be cool. That's what I've always been taught on speaking or at events. Just be cool. And that was pretty cool. I'm not going to lie. So what we're going to do now is we're going to flip things around here. We just finished with him. We're jumping over to Bo. So I am ready when you are.
Hey, how's it going, guys?
Awesome. There you are. How are you?
Yep. I got on just in time to hear you say ridiculously stupid waste of time. And now I'm really curious on what I missed.
Something good, man. Really good. Some bad lips, whatever you call it, syncing.
Oh, okay. Yeah. Seen those. All right. Let me see if I can get my slides up for you here. Give me just a second.
Good thing.
Yeah, I know you're traveling, Bo, so thanks for still hopping on. I think two workshops ago you were in Hawaii.
I am. My trips just line up with your guys' events for some reason. So it just always works out that way.
We planned it that way.
Yep. Are you able to see the slides here?
Yes.
Okay, great. So yeah, just in the few minutes that I have with you guys, if you can, and hopefully the audio is working okay and everything. I just wanted to show you guys exactly who Seed Capital is, and then really explain exactly what you can expect on the terms as far as the funding goes, and then have questions people have them afterwards as well. So for those who haven't heard of Seed Capital, we do this for a lot of big companies. Subway, 7-Eleven, FedEx, Mako, Meineke all use us for this. We've done over $2 billion in this type of funding to date. We've funded over 30,000 small business owners, entrepreneurs. People use this money for all sorts of things in their business. We do, of course, have a perfect A+ rating on the Better Business Bureau as well. So we're the very best at this specific type of funding. And we just have one funding type that we focus on, and that is unsecured revolving credit. And so unsecured, of course, just means you're not putting your personal assets up as collateral against the funding, right? So if, heaven forbid, if you were to go out and default on this money, the banks can't come after your home or your savings like they can with other types of funding. And so that's why banks are just a little more hesitant about unsecured money. They typically want to give out these small, average right now is about 15 to 20% on unsecured money. So it's just like the cards that you have in your wallets right now, right? It's the same thing. So what makes us, special or popular with these small businesses is we have the ability to come in, we can look at hundreds of banks and take the very best, maybe 4 or 5 banks at any given time for your specific situation. And then we combine those banks together in a way where they don't interfere with each other at all. And so the end result of all that is we're able to get people a lot more in this type of funding than they would ever be able to get on their own. Typically, we're looking at anywhere from 25 to 150,000 per individual. Again, depending on their credit situation. We'll show you what that looks like in a second. But then more importantly, we get much better terms on all of this money. So everything that we get for you is going to be 0% interest for at least the first 12 to 18 months. And then, even after that, when interest does kick in, it's not backdated or retroactive or anything like that. And we have ways to keep it a bit below the national average, even when it does kick in. Usually, certainly not 15, 20%, usually, 8 to 12%, something like that. Okay. And these numbers are per individual. So a lot of people come to us and they have a spouse or a business partner who maybe also has qualifying credit and they like to go through together. And that is something, each individual can have access to this. Okay. One of the big questions that we get asked is, what can the funds be used for? Is there like a specific use that they're tied to? The short answer is you can use the funds for really anything that you want related to the business. And I'll show you a couple of the, more popular uses that we get. We see a lot of people using this for things like marketing expenses, training, education, coaching is a big one. People investing in their business that way. A lot of people who come to us have some existing, they might have some high interest debt, maybe on credit cards or some other form, and they're using this to, take that debt and roll it over onto these new lines at 0% interest. People loan it out like a hard money lender. Flipping properties has been a big one, especially the last 5-6 years. We have a lot of people who use this money to purchase, fix, and flip properties as well. Okay. So one of my favorite things about this is the qualifications. It's just very simple. We don't need to show the banks your business plans or financial statements or anything like that. This really just comes down to your FICO situation and what your credit looks like. And so, usually we like to say about a 640 or above means you've got a pretty good shot. There's not a line in the sand there as far as credit score goes. I actually had a 583 that got approved last week. That's one of the lowest that I've seen. But sometimes like a 700 will get denied. It really just depends on the content behind that score. So we look at things like, bankruptcies. You don't want to have any bankruptcies within the last 7 years, nothing that's still reporting. If there's collections, judgments, liens, things like that on there, some of those may need to get resolved. And we can, we have a way of seeing all that. Also, your credit inquiry activity. So this just matters for the last 6 months. And you can have some inquiries on there and be fine. But if you have an excessive amount, there's some situations where we may need to wait for them to fall off. So those are some of the things that come into play. And we found, most people that we talk to don't necessarily know all of these details about their credit situation. And so the nice thing is we have a way where we can look at this instantly without giving you any kind of a hard pull or inquiry or affecting your credit in any way. And so the way that we do that is through this website here. It's called creditnav.com. And you can access this, on any device pretty quickly. It just takes a couple minutes to set up an account here. And again, this is a soft pull on your credit, not affecting you. There's a lot of websites just like this. You guys might have heard of, Credit Check Total or Credit Karma. Credit Karma is a little different because they only give you 2 scores, but Credit Nav is the one that we prefer. Again, it's all 3 scores, a very detailed report without affecting you. This slide right here that I just pulled up, this is my last slide. This is a good one to, take a screenshot of or to write down this code here, and I'll explain what that means. But when you go to Credit Nav, you're just, you're creating an account, and you'll see that they want to charge you $1. And all these sites, it's $1 for 7 days, you $30 at the end of the 7 days. So you just want to make sure that you cancel within those 7 days. This is the code that's going to give you that $1 trial. Otherwise, they just go straight to the $30. So you'll see below where you put in the credit card info, there's a place for the promo code. You want to use trial 801. That's our code that's specific for this event. The casing doesn't matter. It's just all one word. So that lowers it down to $1. And then once you have that created, you guys are welcome to reach out to me. I always let you guys put my phone number in the chat there so people can call or text me directly. And then what we need from you is just your password on Credit Nav. So set up something generic, like password 1 that you don't mind giving to us. And that way we can log in, look at your report, and give you a very detailed pre-approval and let you know how much you would be pre-approved for. So you can, use that information to make a decision on it. Or if you're declined, we can tell you exactly why, so you know what's going on, with your credit, if you want to get those things fixed and come back and work with us in the future. Okay. So yeah, I think that covers everything. If you guys want, I'm happy to answer some questions if there are any.
Yeah. So folks, this is basically a way where you can create some additional credit, some additional money to do the different things we've been talking about. Day one, we talked about all those lines of credit. Well, Bo is the one I was talking about, where you can create that line of credit secured. Are they secured or unsecured, or are there both options?
So everything that we get for you is going to be unsecured credit lines.
So these are those unsecured, credit lines that you can use. Very easy. We've had a ton of people, do this, and they're very easy to get them approved and go from there. So this would be great for, filling that gap funding. If you got a real estate deal, or, if you go to the bank and you need to come up with that extra money, this is what you'd be using. Cynthia asked, are the scores the bank give you accurate?
It's a great question. If you go to 10 different websites or 10 different, banks where you have credit cards, you're going to see 10 different versions of what your scores are. So they're usually pretty close. They're usually all going to be, in the ballpark of each other. So yes, that doesn't mean that's your exact credit score, but what your bank is showing you is going to be pretty close.
Okay. Does anyone else have any additional questions? And Stephen, can you put up the link there? If you could, because I'm talking and doing this, it's just tough to do it.
Yeah, I got you. I'm just it'll be up in just a second.
Yeah, I'm having computer issues too. I don't know what the heck is going on these last 2 days. So luckily, we've got multiple computers connected to this. So what a lot of people don't know is I've lost internet a couple times and been bumped off and had to come back on each time and re-log in. So I don't know. I think.
I can't vouch for the Wi-Fi here either. This is one of the quickest setups I've had to do. But if you guys want, I'm happy to give my phone number out, or if you guys have it, you can put it there in the chat. If anyone wants it, it's 801-706-1473. And that you're welcome to text me directly on that as well.
Have interest in seed capital, getting an unsecured line of credit, I know you said it earlier. Where are you at again?
So, I'm in Arizona today. Yeah, we're out of Las Vegas and Salt Lake City, but today I'm in Arizona.
Fantastic.
Yep.
All right, Bo. Well, thanks. You got a lot of things planned for the day. I appreciate.
Yep. We're headed out on the boat here in a few minutes. So, but no, thanks a lot for having me, guys. I really appreciate it. Your students, your audience are always great to work with. So I'm excited to talk to anyone who had questions visually. Sorry.
Yeah, the last thing I'll say too is, all of you have access to MSTV, and Bo does have a full presentation. I know the internet, at least on my side, was cutting out here and there when Bo was talking. So if you happen to experience that also, I'm not sure if it was me or where, but his presentation is in there if you want to rewatch it. It's in MSTV, or just pick up the phone and call Bo. He's great to work with, and he can explain it to you. And I just put the link over there, prequalifyme.com, and just put in trial 801. And that way you can go ahead and pull the credit. It'll let them know, and then they'll get you in and everything. So it's good stuff.
Okay. All right. Thanks a lot, guys. Appreciate it.
Thanks, Bo.
All right. Yep. We'll see you.
All right. So I'm just answering one question here, Stephen, and we'll jump right into the next one. And we've got Matthew coming up next. So it's the credit pull.
Yeah, absolutely. And while you're doing that, I've been getting a bunch of emails and stuff. So, we've been talking about the private money club, throughout the last couple of days, and kind of a lot of people asking, well, how do we get into the private money club and whatnot? So we have it, we're onboarding everything right now. The way it's going to work, just so everybody knows, is it's going to be run through the Slack app. So there's an app that you can download on your phone or on your computer, or go on their website, called Slack. And it's what the majority of large corporations use for internal discussions. You'll hear it in the news all the time. There was an internal discussion on the company Slack app, and it's used by NASA. And the reason why all these corporations and companies use Slack is because of the protection and the security of data. So it's very, very secure. And the reason why Chris and we decided that to run Private Money Club through the Slack app is because of that security aspect of it, because you are sharing personal financial information, bank account information. You're sharing detailed information on, houses that you have contracts on, and numbers and things like that. So we didn't want any of that to be able to sneak out and not be secure. So it's run, and it's very, very secure that way. So, I can kind of give a quick little example of it, Chris, if you want.
Yeah, I mean, we got time while we're waiting for Matthew to come on, and then I'll do an intro for Matthew, but we got plenty of time. So yeah, let's do that. Because I know a lot of people are asking about it, and it's definitely going to be one heck of a platform.
Yeah, let me pull it up. So first off, just to cover the basics, you do have to be a member of MSTV to be part of the Private Money Club. And you also, so being part of the Private Money Club, you're also going to be an MSTV Premier member. So MSTV Premier members, keep in mind, get the 2 hours of coaching from Chris, myself, and our special guest each month. So each month we bring in somebody from our network. So as we were talking about earlier with Spencer, we'll have Spencer come on, and it'll be me, Chris, and Spencer spending 2 hours with you with no agenda. So there's no presentation, and we don't come in with anything except our notes and our knowledge. And it's purely driven by you, the member, the MSTV Premier member, on that coaching call, just asking questions. And it is set up not like this at all. You actually all can turn your videos on and turn your microphones on the entire time. So you see everybody on the screen together. It's, all of us, you can see everyone's videos. And that way we're having more of a conversation. It's more like a live in-person networking event with with an expert that's specifically there to answer your questions, and you all drive the conversation. So the 2 hour coaching calls by themselves are just unbelievable. But now that we're incorporating the support into it, the Money Mentor coaching into it, the Private Money Club into it, it's just making it better and better and better. So, and on top of everything that you get with MSTV, standards. So it's really cool. So I'm just pulling up. We created a really neat little guide that just explains a little bit about the Private Money Club. So let me just pull that up. All right, my computer's working again now. Give me 1 second. I'll pull that up.
A heck of a couple days with computers and internet. I mean, there's storms throughout the country. It's just been.
Mine's just running slow right now for some reason. I don't know if.
Is it a Mac?
It's coming.
Shots fired.
All right, so here we go. So let me share my screen. Let me make sure I can. Okay, can you see that, Chris?
Yeah, it's a little weird looking though. Can you make it bigger or? Yeah, actually there, that looks better. Or maybe just do instead of just showing it that way, is this a PowerPoint? Can you just do the whole thing by sharing it?
If I zoom out, does that look better?
Yeah, that's too much. There we go. That's good.
Okay, so Private Money Club, this is what we've been talking about with where the magic happens, where, you take the both sides of the coin, and we bring people with money, lenders together with borrowers that need the money for different flips. And then what we're doing is we're just adding the layer on there of including all of our expert investor, owner operators, people like Chris Rude that you saw earlier, the West Coast Income Fund that Chris is a partner in, the new mobile home park fund that Chris is a partner in. So these kinds of deals that we're going to bring here on top of the direct relationship of borrower, lender, lender, borrower. So it's going to incorporate this additional area. And, I just uploaded actually yesterday, a mobile home park here in Florida, which I don't know if Chris Rude's going to buy or not, Chris Naugle, but I know he's working on it right now. But if Chris Rude doesn't, that would be available to someone within the Private Money Club to say, okay, let's do it. It's a almost $1.2 million deal. You can get in with $300,000 down and then finance the rest of it. But it's 18 pads. It's 100% rented out with an incredible track record of having 100% rents, which most parks in Florida do. It's in a really good area of Florida. And it has an on-site manager that's already in place and already has been managing the park for several years. So it's a turnkey property, turnkey deal that's ready to go. So that's uploaded in Private Money Club, waiting for somebody to go in, just as an example. So we bring in things like that. Jack Petrick will have his deals in there. If you were on this last month's 2 hour group coaching, you met Jack Petrick, and his videos are in MSTV as well. So Jack is uploading all of his deals inside of there, and he always has new deals. So people that Chris, myself, that we're personally investing with, that we've, again, this is do your own due diligence, do your own homework. But these are people that we are investing with, that we're involved with. So we're just letting them share, hey, maybe this is something that some of our members might be interested in as well. So we're allowing you to do that. And again, going back to, investing in a deal like that, like Chris said, with the mobile home park, 7%, 9%, or 12%, depending on the term, the length of terms that you invest with. so these are going to be deals that have set terms a lot of times, or deals you can go in and purchase the whole thing and become the owner operator yourself, or private money lending where you set the terms. What is that interest going to be? How long is it going to be lent out? How is that money going to be lent out? Am I going to charge any points on that deal? That kind of thing. So all the different ways that you can invest are all going to be brought right into here. So just to kind of give you and we can send this out to you so you can take a look at it. But right when you log in, why we're using Slack and why we're using it. So this is what I was just telling you a little bit about. It's going to be a $9.97 annual membership. But again, right now we are going to include it, at least for this next quarter, included with the MSTV Premier coaching. So if you join us with MSTV Premier, you are also going to get this included with it free of charge. So you're going to become a private Memory Club member with it. So you'll waive that $9.97 first year membership by joining us with MSTV Premier, or you can do this just by itself, which really wouldn't make much sense. But we're going to do some advertising just to do this alone through Facebook and whatnot with our marketing team. But those of you on this are going to be able to get it included with that special invitation. So those invitations and details will be coming out this week. We just have our technical team setting up the payment page and everything so we can accept that, as well as on all the onboarding. So you'll get a series of emails of what to do to join the private money club. So, how to log into Slack for the first time. And you do have to qualify. So attending this 3-day, you're going to have to sign something that says you watched all 3 days, you educated yourself, especially yesterday on day 1, which is basically the 4-week master course. We're going to send you another version of the 4-week master course we want you to go through. And you're also going to have to go through the the perfect loan proposal training as well. So those will be some prerequisites before you get into private money club. And that's just to protect everybody that's in there. We only want educated investors, whether you're a borrower or lender, we only want educated investors within the private money club. That way everybody's on the same page and everybody knows what to expect on these types of deals. So you can kind of just see, how active do you plan to be? So once you're in, getting started, and we'll hold your hand if you need help with this, but it's very easy. What you do is you just click and you create your profile. So you put your picture on there, what your name is, and then let us know, why are you in the private money club? So are you looking for, you can see there's gonna be 3 different statuses. So are you a lender with private money available? Let me see if I can zoom in a little bit more too. Okay. So are you a lender with private money available? Are you looking for a private investment manager? So these are people like Jack and Chris Rude. So they have opportunities available. So you can check those out. If you're a lender, but your funds are currently already extended. So you already made a loan to, 1 or more people and you don't have any money right now ready to go. Well, that might be somebody that a borrower can keep an eye on, because once you get your money returned, like we were saying, the worst day on a Chris Rude deal is when Chris Rude returns your money. So as soon as that happens, you set your status to private money available again. So a borrower gets alerted of that and they can reach right out to you and say, hey, I got my next deal ready. I need to get it funded. Do you want to talk about it? And then if you're a borrower, of course, if you have a deal, you need private money. That way, private lenders that have money, they can start looking through those perfect loan proposals and they can start doing their due diligence. And if they like what they see, reach out to you directly so you guys can start creating those terms and how that loan's going to look. And then if you're a borrower, but you already have a deal in progress, you don't need any money right now, that's going to let the lender know, hey, this is a guy that's out there. He needs my money, but he's currently doing deals right now. So as soon as he's done with those deals, I know he's going to be ready for his next one. Or maybe they have a deal that's coming up. They're just waiting to finish the other one. So you guys can go ahead and start negotiating and, again, getting those terms set up. So that way everybody sees right in your profile exactly what your status is and what you're trying to accomplish. It just makes networking that much easier when you're talking to all the different members. And it just kind of just talks a little bit more about the statuses and how they work and, what to expect in there. So, we have little tips in here on how to get started. And then there's different channels. So this is just navigating the Slack app itself. So these channels are where the deals are posted. So all of our general announcements. So if we do like a specialized training on something, or if Jack has a new project coming out, we'll let you know about it in the announcements. And then if you have a deal, you need money, put your perfect loan proposal in there. People can go in there and start looking through your proposals. If you have money, you need a deal, let people know on a post, what are your terms? Hey, I'm looking to get 12%. I'd rather do deals that can be paid back within 6 months or 4 months, or I'm willing to invest up to 12 months. Hey, I'd rather do, quick term, maybe 300 to 400,000 deal, or hey, I'm willing to do homes up to 1.5 million. So whatever it is, tell people about yourself. Tell them what you're looking to lend your money on, or what you're lend your money on. Introductions. So when you first join the group, who are you? Why are you there? Again, just highlighting who you are and start networking with other people. If you're looking for partnerships, this happens a lot. I think we were talking about earlier, actually, on one of the other deals. But let's say, let's say that, I find a deal, but maybe I need an active partner on that deal. I don't just need somebody's money. I want somebody that's actually going to partner with me. So, hey, how's that going to look? I'm looking for a partner on this flip, or I'm looking for a partner on this 18 pad mobile home park that I was just telling you about. Maybe you don't want to do it yourself. Maybe you want to find a partner for that deal. Hey, let's both throw in, 150,000 towards the down payment and partner on this. So you can start creating those partnerships in that channel. If you have private investments, you throw them in there, and then all the Q&A. So, hey, any kind of questions that you have, myself, Chris, Andrew, our entire Money School team is going to be in monitoring the Slack. So if you have questions, you throw them up there. Chris or myself gets alerted. There's a question, we go in there and answer it for you right away. So you have all the support and coaching you need right inside the Private Money Club Slack app as well for you. So that's just a little highlight of what we got going on. So, you'll receive this when you get enrolled, and we'll definitely, like I said, be letting you know more and more about it. But anything you want to add to that, Chris? Is that coming?
Yeah, definitely. I mean, like, for example, here's a perfect loan proposal that I'm holding in my hand. This is a real deal. This is one of our members for MSTV Premier. And this deal is going to be one of the first deals, along with 3 other Chris Rude deals, that are going to be hitting the Private Money Club. So we didn't just create this thing and then just like hope that we have deals, and opportunities there. We actually created this, and we've been holding back some of the deals, waiting for this to go live, so that the people that get in, it's kind of like first come, first serve, but the people that get in, you're literally going to have several deals to look at right out of the hole to decide. And then the beauty is I can't remember, I think he said it, we do educate you on how to do the private lending. We do educate you on how to be a good borrower. It's, you can't be a good borrower or a good lender if you both don't know what each other expect. And that's what the training does. It teaches you both sides of the coin and shows you exactly how to protect yourself, how the borrower will, obviously build a better relationship. So we've thought this through for way too long, to be honest with you. I mean, COVID sidelined this thing, and we literally have just been thinking about different ways. And this platform, just so everybody knows, at $9.97, I can almost guarantee you that the price will go up. I don't know when. I don't know when, because we're going to eventually open this up, or we're going to have real estate investors putting deals on there that, you would have the opportunity to actually buy instead of just lend on. We're going to have way more than what we have today that's going to be going on this, and the price will go up. But just like MSTV, if you get in early, you're grandfathered. We're not going to increase the price for anyone that gets in early. So it's kind of like, this is definitely, the founding members.
Yeah, no, you're absolutely right. I mean, I just talked to Kevin right after he was done speaking, and we're going to talk this week about getting his private notes that he sells through students or himself into the Private Money Club. So we're setting that up this week. So just like you said, Chris, MSTV founding members paid $190 for a year. To get that exact same thing, you now paid $997 for a year. So this will be exactly the same. It's $997 or included now with the MSTV Premier, but that will not be forever. You'll be a founding Private Money Club member. You'll be a founding member. You'll be grandfathered in for it for the rest of your life. However, everyone else in the future will definitely pay more and more as we, grow and grow with it. So we appreciate, and we always take care of, our people that join us, especially our founding members. And if you've been following us for a while, you realize that that's just the way we've always done it. So it's just going to get better and better. And, whenever, like Chris Rude, just as an example, Chris Rude might maybe raise funds other places on deals. But for instance, he's told us, hey, I'm going to give first dibs to the Private Money Club members first. So if we fill it up through Private Money Club, nobody else outside of there will ever have an opportunity. Now, if we have a $5 million fund, we don't fill it up with Private Money Club, then yeah, but you'll always have first dibs on any opportunities that we're bringing in through our network, at least.
And the other thing that's important is every one of you need to understand, like when and if some of you are new to some of this terminology, believe me, like I told you from day one, it's like drinking from a fire hose. You got to get around the campfire a few times. Stuff that's been around for a very long period of time. taught you. So of course, some of this sounds new, like private fund. You know, what is this private fund? What is this mobile home fund? Well, in your 401k, you have mutual funds. Those are publicly traded mutual funds, and they're all registered with the SEC. On the other side are private funds, okay? Funds that are only available to friends and family, funds that are called Reg Ds. They're still filed with the SEC. So when we launch our mobile home fund, you'll be able to Google the name of the fund. You'll see the SEC registrations, which for those of you that don't know what the SEC is, it's the Security and Exchange Commission. The big boys up top in the government that nobody wants to ever have show up to their door. Yeah, that's them. So the fund is registered with them. All of our private funds, because they are friends and family, will only, and I'm going to repeat this, only be available to private money club members. That's it. That's only people that are going to know about our funds outside of our existing clients. And so we're making this such an exclusive thing where pretty much any opportunity that we have, this is where it goes, because that's what we want to do. We want you to make money. We never get in the middle of your deals. So let's just say you're on the private money club and Chris Rude's deal gets posted and you get your first in, you're like, I want to fund this deal. I have not, like, only thing we're going to help you do is structure the deal properly. We're going to give you the tools and the resources to structure the deal. Then we get out of your way. We don't want a piece of the deal. We don't get paid from Chris Rude at all. Chris Rude doesn't give us any points. He doesn't give us any percentage. It's your deal. That's the whole point. It's cut out the middleman, cut out the in-between, kind of like Spencer was saying, everybody wants you to invest through them. Then they take your money and go and buy crypto and they give you something, but they make 30%. We're not in the middle. There is no middleman. This is a direct source for all of you. So with that being said, we have an amazing speaker on next, somebody that the first time I saw it blew my mind. Literally, this is something that I never in all my years and all the people I knew existed. Matthew taught me something. And ever since then, Matthew, I mean, I don't know what the list is, Matthew. I'll let you kind of do that. But ever since then, Matthew has been helping our money school students left and right. And I get a list of all the people that he's helping, and it just keeps growing. Pretty soon, I'm not even going to look at the list anymore because it's too long. But this is a massive opportunity. We talked about home equity lines of credit. These are home equity agreements. So Matthew, how are you today?
I'm very well, Chris. Great to see you again.
You too. You too. So you know what, Matthew, I could do a good job of explaining Quantum RE now, but you do a far better job. So you got all the time. There's no rush today because this is such an important topic that just, it's all you. You can explain it, give them a little background on yourself, kind of, you know, what your prior life was like, I guess, before Quantum RE, and let's roll it.
Yes, wonderful. Great. Well, thank you again for having me back on. It's always great to be here. So just a whistle-stop tour of my background. So I'm originally from the UK, moved over here about 7 years ago. My background's very much sort of entrepreneurial, you know, finance, technology, but always wanted to get into real estate. So over the years, I spent a few years working with Richard Branson, which was a fantastic time. I wish I knew now, or wish I knew then what I knew now. So I would have had much more, you know, got a lot more out of it. But when I moved here, one of the first things that I did was set up a real estate crowdfunding company, which is really the intersection between, you know, finance, real estate, and technology. And this was hot on the heels of the changes in the Jobs Act, which enabled you to advertise offerings online to the general public. So it's a big step. And since then, the crowdfunding legislation has just grown and evolved to something that's very exciting today. But the first thing that I did when I got here really was just dive into real estate, because it's something that I had always wanted to do. And very soon we stumbled across this really interesting asset class, which was called shared equity. So I came across it at one of the very early crowdfunding conferences, and it was very much a concept then. And the idea was that if you're a homeowner, you've got an asset, which is the equity in your home, and there are investors that would like to share in that equity appreciation. Because at the moment, And then, as it is now, the only way you can unlock your equity would be to borrow money. So it was this incredibly interesting concept of creating a new way of accessing equity in people's homes that would create a new type of investment for all of those investors that wanted to be able to access property that was not for sale, as well as helping homeowners who couldn't borrow money. So that's the sort of the overview. And really, 3.5 years ago, we set up Quantum RE, and our objective is and was to make home equity accessible, investable, and tradable. So what we're going to sort of focus on today is really how this works for homeowners, and we'll touch on how it works for investors as well. But I'll spin over to the presentation. But really what I want to talk about is how we can help homeowners unlock equity without taking on more debt. And that sounds pretty straightforward, but for most people, or for many people rather, it's quite a challenge psychologically to try and connect the fact that you can unlock equity without actually taking on more debt. So if we look at the size of, or rather how much equity there is in residential property in the United States, excuse me, and this needs to be updated for the latest figures, but it's easily over $19 trillion. So just think about that for a moment. There's $19 trillion. Now, the last stimulus package, I think, was it $1.9 trillion, something like that? So imagine something that is 10 times that size. That's all of this value and wealth that's locked up in people's homes. And there's nearly 15 million homes in the US where the homeowner has 50% or more equity. So if you think about the amount of wealth that is trapped in home equity, it's huge. It's an unfeasible number. And the real problem is, for many people, if you get to the point where most of your wealth is trapped in your home equity, how do you get hold of it? How do you access it? And traditionally, the only way to do it is through debt. But even though interest rates are very low at the moment, and home equity is at an all-time high, it's actually remarkably difficult to borrow money. And that's because primarily because of the impact of COVID, but banks and lenders are increasing their requirements that they need for you to qualify for a loan. And in addition to that, even though the interest rates look very attractive, there's nowhere near the same amount of money going out. So it's actually far more difficult to borrow money. And so the homeowner's dilemma is that I've got the bulk of my wealth trapped in a single concentrated non-financial asset. So that's going against everything that every financial advisor will tell you. Every advisor will say, don't put all your eggs in one basket. Make sure that you've got some cash flow coming in. Make sure you've got a mix of investments. But hang on a second. What tends to happen is most people find themselves in a position where they're house rich and cash poor. The bulk of their investments or the bulk of their wealth is in their home equity. And the other interesting thing is there is this psychological attachment to home equity where people feel that they just don't want to touch it because they've been told generation after generation that home equity is sacrosanct, that they mustn't touch it. And the reason for that is because the only way you can access equity right now, apart from a home equity agreement, is through taking on more debt. So we need to find another way. And the home equity agreement is that solution. So the way that it works, first and foremost, is that it is not a loan product. So that's the first sort of deep breath moment. It's not a loan. It's not a home equity line of credit. It's not a reverse mortgage. And the way that, or the reason it's not a loan is because our investors want to get their return on investment, not by charging you interest, but by taking a share of the appreciation of your property. So their investment horizon is much more long-term. They don't need that cash pay every month. They don't need the interest payments. And so what the agreement says is that in exchange for a cash lump sum that our investors will give you, the homeowner, you will undertake that when you sell your property, which can be any time in the next 30 years, our investors will get back their original investment together with a share of the amount that your house has gone up in value. So that means that we are sharing in the appreciation. So it's much more of a partnership approach. We still get a good return on our investment if your property appreciates. But in the meantime, you can get up to $500,000 of cash that has no monthly payments ever, no interest. It does not appear as debt on your credit report, so it doesn't impact your debt to income ratio. There's no income or capital gains tax that's payable at the moment that you receive your capital. And you can use the money on whatever you want. So you can use the money to pay off debt, to pay down credit cards. Most importantly, you can use it to invest into something that provides cash flow or provides alternative sources of wealth, so that you can diversify out of your home, out of your single concentrated asset. And you can use it to remodel your home, to add value to your property, to invest in other properties, or to put it into some of the incredibly interesting programs that you have heard about today and we'll hear about tomorrow. So what we're talking about here is really a way of unlocking equity that is trapped in your home and in giving you the freedom to use that in whatever way you want to benefit you from increased cash, from the ability to diversify, or just to pay down some of that expensive debt that you may be carrying. So these programs are available through our own investment partners and through partnerships that we work with in 19 states. And they operate in 10 and 30-year durations, but we're seeing much more flexibility. So we are in the process of launching our own fund, which should be live in a few weeks, and that will give us much more flexibility. So we will be able to provide a really competitive product that competes head on with everybody in the marketplace and gives us much more flexibility in terms of who we can work with, where they are, the amount that we can invest, and the terms that we can invest. But the important thing is, in most of these states here, programs are available, and the amount that we can invest goes up to $500,000. And in states like California, for example, we can go up to a maximum 80% of the current value of your home. So there are, we can untap or unlock a good amount of the equity that you have. A lot of the questions that we get really is, well, who are your typical customers? And as I said before, really, it ranges from people that simply don't qualify for a loan. And it could be that you have self-employed income. It could be that your credit score is 2 points below the minimum credit score required. It could be that you just don't have the income verification. There are people that are unwilling to take on more debt. So there are many of you out there, I'm sure, who just don't like the idea of borrowing money on your home equity because you don't like the risk associated with the fact that what happens if you miss a payment? What happens if you can't meet those payments? Your home is at risk. And there are other people that simply look at the equity in their home as an asset, and they need to diversify out of it. I don't want to have all my money trapped in the bricks and mortar of my home. I want to have the freedom to do things, with this capital. The process is very straightforward. It normally takes 3 to 4 weeks. The underwriting is much easier than it would be if you were borrowing money. We tend to focus on the property, the equity, where it is. We need to make sure that you can continue to pay your existing obligations. But other than that, normally the application process can be completed within 3 to 4 weeks. Just really in summary, the main questions are, I listen and I've heard everything what you've said, but this is just too good to be true. You can give me capital with no monthly payments. And as long as you understand how our investors get paid, the fact is they do get a solid return on their investment, but they're willing to wait because the investors that we have are all long-term investors. They're pension funds, they're endowment funds, they're hedge funds that have a long-term capital view. And so the best way to get over this particular question is for you to understand that it's a good trade for both sides. There's capital coming to you without monthly payments and without immediate tax implications, and there's a return on investment for our investors. So after you understand that, you can see how this really is just another way of unlocking the wealth that's in your home. There is no catch, there is no magic. It's a straightforward trade. Our investors are cash rich and house poor, and you are house rich and cash poor. So that's the trade. So that means that it's a bona fide transaction. And then the questions normally end up, well, why wouldn't I do this? And the only reason that you wouldn't want to do this is if you don't want to share in some of the potential future value of your home. So for those of us that are wedded to our equity, come rain or shine, then this is something that psychologically you probably will have difficulty doing. But for most other people who just see the equity in their home as a source of wealth that's trapped, this is a great way of unlocking it without debt, without monthly payments, without all of those obligations, giving you the freedom to do with your wealth, and giving you the ability to do really, whatever you want with it. So that's, I'll sort of pause there. I mean, here are some contact details. There's a free guide that you can get just by clicking on that link and giving us your email address. And that guide is really, it's a document that explains how they work. And if you want individual quotations, then we have a calculator on our website. And most importantly, we have human beings that are able to pick up the phone and talk to you and explain how this works for you, because everyone has a different set of circumstances. So that's it.
Human beings to talk to. Wow.
I know. It's revolutionary.
All right. Yeah, we got lots of questions. That you always get tons of questions with this. Should we dive right in?
Sorry, at that point, my mouse decided to become non-functional. So yes, I'm going to play tricks with you, says the mouse. Yes. Yeah.
So one of the things I know, and I'm just going to ask a general question that a lot of people wonder is what happens if, in a couple of years, the real estate market goes down? How does that affect because if they're sharing in the equity on the upside, that's great if we're in an appreciating market, but if the market goes down and somebody has to sell or something happens and, there's a lot of things that can happen, how would that be handled?
Well, it's a risk to us, frankly. So because this is not a loan and the amount that you repay is entirely dependent on the value of your home, we do run the risk of not making a great return or actually losing money. Now, to protect ourselves against that, we build a little bit of a cushion into the agreement. So when we value your home, what we'll do in some cases is start the clock ticking at a slightly lower valuation just to build in a bit of a cushion. But ultimately, if house prices fall considerably and you sell your home, because you're free to sell your home whenever you want, there's no restrictions on that, then we do run the risk of losing money. But the important thing is you are free to buy back this agreement or refinance this agreement at any time. So even though they have up to 30-year durations, if you decide in 6 months that the money was very useful and you've made a fortune on this new investment and you want to pay back the home equity agreement, you can do that without penalty.
That was good because Kelly had asked that exact question about whether or not it can be bought out. So we got that one out, and the answers with the question. So the anonymous said, what if you graduate to the big sky? Do you enforce to the heirs to sell? How does that work in the event of probate or a house being, going to the heirs?
Well, again, the important thing is that you have the option of transferring the agreement to your heirs. So whoever inherits the property, they can continue with the agreement. So naturally, it normally does terminate on the death of the last surviving signatory to the agreement. But you can opt at the beginning if you want to transfer this agreement to your inheritors. Now, that's quite important, because if you compare that to something like a reverse mortgage, for example, with the reverse mortgage, then the last surviving member of the or borrower, when they pass, then the reverse mortgage comes to an end and the property has to be sold. So there's a lot more flexibility with our programs.
Great. Let's see. So if somebody decides that they don't want to sell their property, like how would that work? Like, let's say they get to the 28th year and they're just like, we just love this house. We just could never think of selling this. Then what?
Well, I think really we want to look at options for you. So the first thing is there's still equity in the property. The chances are there's a lot more equity at that point than there was at the beginning. So we'll be able to look at, can we help you refinance this? Can we help you extend the agreement? If there is enough equity, you could buy out the first agreement and start another agreement. So it doesn't, there's no sort of sword of Damocles that sort of falls on that precise day. And obviously we will be talking to you as we get closer to that point. In 30 years time, it probably won't be me that's doing the talking. It'll probably be somebody else. But the idea is that the program's there, we still have that asset. It's still appreciating. It's still very useful to our investors. So if there's a way that we can work with you to satisfy your needs and our needs, then that's our primary objective.
Awesome. And a lot of people, when they hear this, our minds, it's just inherent. It goes back to always thinking about, well, if I want equity out of my house, I got to take a loan from the bank. So one of the questions is, are there any fees or points, or what would someone end up having to pay in order to work with you to do this?
Well, yes. And the answer is yes, there are. And I think most people are pleased to hear that, yes, there are points and charges, because that makes it much more in line with what they would expect. But the charges are once off. So there are two types of setup costs that you will come across. The first is what we pay out of our pocket to get the agreement in place. So things like appraisals and title searches and title registration fees. So we pay for those. So if the agreement completes, then we take those out-of-pocket expenses out of the amount that we give you, but you don't have to pay for those up front. And there's a 3% fee, which is effectively our cost, or that's our administration fee. So if we were to invest $100,000 as an example, then you would receive probably around 96,500 after costs and expenses.
Okay. And then Matt had a good question. He said, what is the split of the partnership on the agreement? Is it 50-50, 60-40? And eventually when the property appreciates, let me read this right, 50-50 split of the eventual property appreciation, or does it vary? This is in reference to when the property is hypothetically sold, how much of the appreciation can you keep versus what you have to pay back to Quantum RE?
Great. And this is exactly the sort of question that we want people to ask, because that shows that they're sort of saying, well, hang on, okay, I get this now. Okay, what's in it for you? Exactly. So it's a multiple of whatever we invest. So the more we invest, the bigger the share of the equity that we take, because obviously we're giving you more money. So we need to make sure that there's more chance of us getting that back. So the rule of thumb is, for every 10% that we invest, we'll take a share equivalent to 3 times that amount. So if we invested 10% of the current value of your home, not 10% of your equity, it's 10% of the value of your home, when you sell your property, we would get back our original investment together with 30% of the increase in value. So we're getting back more of our share of the equity than our original investment. So that gives our investors the incentive to make the investment. But the important thing is you keep 70% of the appreciation. So we don't take it all, we just take a piece. Now, if we were to invest, say, 15% of the current value of your home, then we would take 45% of the increase in value, in addition to the return of our capital. Now, what that means is that we are literally sharing in the future appreciation. But so are you, because we're sharing, because you're also sharing as well. So the important thing is, as the house goes up, you get some, we get some, but the exchange for that is you've got a lump sum of capital that you can put to work that hopefully can make you more money than the appreciation and the cost of money is going to. So hopefully you can make more than it's costing you.
Yeah, well, I think you'd have to screw up if you didn't. I mean, especially over a long period of time, it'd be hard not to use the equity to make more money.
Let me tell you something very interesting. It's very interesting about the tax implications. Now, obviously, caveat, do your own research. But from a tax perspective, because this is a future settling contract, it's an option agreement. And the important thing is we do not go on title as co-owners. So it's not a tenancy in common. We don't own your property. Our agreement is recorded as a lien, but there's no ownership transfer. Now, because the agreement settles at some point in the future, what that means is that there's no immediate income or capital gains tax liability. But when you sell your property, if you have a capital gains tax liability at that point, you can offset the cost of the home equity agreement against your capital gains tax bill. So what that means is that your real capital gains tax bill, or the real cost of the home equity agreement, can be a lot less. So in certain states like California, for example, where the capital gains tax bill can be quite large, you're effectively paying your home equity agreement with 50-cent dollars, because if you can offset one against the other, your bill to the IRS is going to be lower, which means that your real cost, could be much lower than you thought.
No one's ever asked that question. That's the first time I've heard you explain that. That's pretty fascinating. I never would have thought of that. Like
it depends on there's lots of good things about these agreements. So obviously your audience is much more sort of sophisticated than the average homeowner. So it's worth one doesn't normally bring this up early in the dating process, because it tends to it's quite it's relatively complex, but I'm sure most of your guys will understand that. But it's a real benefit, because the tax benefits of these types of agreements are really useful.
Yeah, and then this is the question that comes up every time, and the one that I hate. Jake said, what if your state is one of the ones not available? Is this a state decision or a service not there yet? Like, what's the reason why people in Texas or Hawaii, can't use this?
It's a combination. So we're looking at this from an investment perspective. So there are some states where the house price appreciation is not attractive enough for the investors to want to go in. And that's, I think most people will have a rough idea about where those states are. There are other states where house price appreciation is much higher, so that's much more attractive to investors. So this is a program that is, as I said, available in a number of states, but those states are really driven by house price appreciation. The other part of the answer is there are some states where it's actually very difficult for us to do this type of agreement because of the state legislation. And Texas is a great example with the homestead regulations. It makes it difficult for us to enforce the lien should we need to do that. So really, the challenge is, you can't really sort of push a square peg into a round hole from an investor perspective. So even though we would love to be able to offer in Texas because it's a booming economy and there's some fantastic real estate there, it's just something that's very difficult for us to do. So the answer is a two-part answer. Hopefully that answers the question.
Awesome. Cynthia said, if you intend to use the money to fix your home up, do you use before or after valuations to determine the amount?
Again, it depends on the agreement. So there are some agreements that we have where we can strip out the additional increase in value that has happened to your home because of the work that you've done from the money that we've invested. So we can, as long as it's a material amount and as long as we can prove that your house has gone up by a certain amount because of the investment that you've put in, we can strip that piece out of our calculation. So that means that you wouldn't be charged for the benefit that you've given us by spending the money that we invested. And as I said, it depends on the programs, but as these programs develop, these are real, these types of questions become very important. And it is important that we have an equitable, if you excuse the pun, an equitable approach so that we don't, have, two bites of the cherry, even though we would love to.
Perfect. All right. Another question was about Texas. You don't know of any other companies like Quantum RE that do offer this in Texas or Hawaii, do you?
Well, we work with all of the companies in this space. So we have our own capital, but we also partner with all of the other companies, because if we have a homeowner that we speak to that we can't help because we don't operate in that particular state, we will always work, with the other companies and try and find a home for that particular customer. None of the companies that we work with operate in Texas because that problem is a common problem for all of our, for all of the people that operate in this space. It's not just us.
Good answer. Shauna said, what happens if you don't sell your house by the 30th year?
Again, I think it's the obligation becomes due. So in other words, the agreement says, this agreement runs for 30 years. At the end of the 30-year period, it needs to be settled. So that obligation becomes due. So, as I said before, we'll try and work with you because it's not going to come as a surprise to anybody. So, we'll know as we approach that anniversary, then we're going to be talking to you to find out what plans you have. And if you want to stay in the property, then let's see if we can find out a way to satisfy our investors and the obligations that they have and your obligations, and find a way for you to stay in your home, but still, settle the obligation.
Great. Is there any special considerations that need to be done with the homeowner's policy?
No, we don't require earthquake or flood insurance. We do require that the home has homeowners insurance.
Still there?
Yes, I think I am.
Oh, there you are.
Yep. Sorry. Yes, I need to put another dollar in the internet meter.
We've all been having that problem the last 2 days. I guess they're just trying to really take advantage of that little ticker there.
Yes, that's right. It's the. Hopefully everyone's out having lunch or something. So I've got a bit of a window where no one's, no one's watching Miley Cyrus on YouTube or whatever. Yes. So there's no sort of special requirements, and that works both ways. So it doesn't affect your insurance, it doesn't affect your existing mortgages, but obviously, as we're now partners with you in the property, we need the insurance to be up to date, and we can help you with that. So we have relationships with a number of insurance companies, and we always try and help out as much as we can if there are challenges outside of the agreement. And we come across that a lot where, there are some wrinkles in the title perhaps, or, there are some things that we can help you with outside purely of just getting this agreement in place.
Perfect. And then what would happen? This would be a bad situation. What would happen if the house went to like tax foreclosure?
Well, again, we can potentially help because our programs are not loans. We help people and have helped people historically get out of foreclosure. Now, it's very difficult to get out of foreclosure by borrowing money, because if you're in foreclosure, normally nobody wants to lend you anything. But if you have enough equity, then we can raise enough capital to get you out of your your tax lien or your tax foreclosure problem. So the answer is, if there's enough equity in your property, potentially we could invest more to solve that problem. If there isn't, then the home will need to be sold, and then we'll take our chances along with you, because we're going to be in a junior position to the existing lenders. So we don't have a great deal to say in the matter.
Okay. And then can you have we've gotten this one before, it's a good one. So let's say somebody's got a home equity line of credit out and they want to do this, like how does that work?
Well, it works as long as the math works. So the overall exposure, so the combined lien to value, in most cases mustn't be more than 70% of the current value of the home. Now, it can go up to 80% in California, but 70% is the best rule of thumb. So if you look at the amount of investment that we put in and you add that to your home equity line of credit and your existing mortgage, as long as that is not more than 70%, then that works. What tends not to work is where you have a home equity agreement in place and you then want to go and borrow more money, because that doesn't work for us, because that can start eating into our equity position, because the lenders always have preference over us because we're equity holders. So one of the rules of the agreement is you cannot increase your borrowings without our permission. In most cases, if you want to refinance what you've already got, that's not a problem, but you need to speak to us anyway, because we need to sign a letter and send that to your mortgage company, giving them permission to, for their lien to be senior to ours.
All right. Yeah, that's a good one. A lot of people wonder that. And let's see, then when a refinance takes place prior to the 30th year, can the agreement be satisfied at that time?
Yes.
Equity?
Yeah, so you can refinance your property and buy out the agreement at the same time. And people do that because what we do is we help people in some situations get back on their sort of their 2 feet from a credit perspective. So they may have the income, they may not have the right credit score, so they can't refinance at the rate they want. If we're able to unlock equity that puts them back, pays off their credit cards, reduces their debt to income ratio, and puts them back in the prime position to be able to borrow money at the rate they want, then they can take advantage of that and then buy us out at that point. So that could happen within 6 months or 20 years. But at that point, you have complete flexibility to buy us out.
Yeah, that's fantastic. And I'll never forget, Matthew, when I first heard about this thing, it was on my podcast. I was just blown away. It's like, when I first heard of privatized banking, the IBC concept, I was blown away. And these things aren't new. They've been around for a while. But, the problem is, what you do, what we do with privatized banking, it's not something that mainstream finance can make a bunch of money. Like banks wouldn't do this. It's people just, like somebody just commented, my parents' house could have been saved,
Yes.
There is so many things out there that we don't know, that you don't figure out unless you hang out in the right circles. And,
Exactly.
like Matthew, it just was meant to happen, like to get you on here. I know you've helped a ton of our money school students, and I've talked to many of them and they just loved your staff. I mean,
thank you. And it is, I think this is going to become far more prevalent in the very near future. So what we're doing is there are more companies coming into this space. It's becoming a little bit more competitive for the consumer. So that's great because when you first open up a market like this, no one really knows what direction it's going to go. And everyone's sort of feeling to find where the edges are. So the proposition to the customer starts in one particular place and then evolves. So what we're beginning to see now is new companies coming in where more money is becoming available at more competitive rates. The sharing ratio is going to go down. The amount of equity that we can invest will go up. So this type of program will get better and better. The more, the longer the longer we continue with it. What we're doing is we are launching a fund on our website in the next few weeks, so people can actually invest. And this is not a pitch for that, but I'm just saying that the way that this is evolving, rather than it being just the opportunity for hedge funds and family offices, it will now be available for accredited investors to start with. So we're opening up the investor side. And then later on this year, our trading platform will launch, and that trading platform will allow people to invest in individual properties and buy fractions of these home equity agreements and then trade them. And again, the reason I'm mentioning that is because home equity, as I said at the beginning, is an $18 trillion asset class. So if we can find ways of making that accessible and tradable, then it opens that whole world up, which benefits investors and benefits homeowners. So as this emerges, we're going to be at the sharp end, which means that we're going to see the most blood, unfortunately. But all the guys that follow on behind us will open up this marketplace. So my prediction is, in 3 to 5 years' time, this will be a mainstream product. We're doing the pathfinding stuff, but banks and the institutions will follow on because it's such a big market, and there's so much potential demand and potential returns involved.
That's awesome. And right as you were saying that, I don't know if it was intentional, but Mark, and he's been on other 3 days that you've been on, he was asking about that investment opportunity. So you just delivered there, and you said in a couple of weeks. Is that a Reg A, Reg D?
No, it'll be a Reg D. So it's going to be about a month or so. Okay. But it's building on. It's a fund that we're going to launch really just to prime the pump. So it's only going to be to accredited investors, but it will be a fund that has an existing track record, which is audited, has existing assets under management. It's got these are seasoned, so you can actually go in and see that these things have happened. They are paying off. So we've waited a couple of years or so before we launched the fund because we wanted to have that foundation. The plan before the end of the year, however, is for people to be able to buy and trade fractions of individual homes if they're accredited or non-accredited, and that will be under Regulation A+. So that's in place. So we have all of the relationships and the regulatory partners in place to enable us to do that, and that's what's taking the time.
Yeah, and I'm glad you went into that because I've been trying to drip out some of this terminology. Most people are familiar with a mutual fund in the sense of that's what they can invest in their 401k. So I'm trying to get them used to the private world of investing, which would be the Reg A's, Reg A+, the Reg D's. And each one, it's just a regulation in the code, right? That's all. And
yeah, it's an exemption. So these are really, and they all came out of the Jobs Act. Regulation D was available before the Jobs Act, but the Jobs Act, which is Jumpstart Our Business Startups Act, was passed, I think it's around 7 years ago. And what that did is it created a variation of Regulation D, which enabled you to publicly offer or generally solicit, which means that beforehand you could only talk about this behind closed doors, to people that were that you had a previous long-standing or significant relationship with. So that changed. Regulation A+ also is another exemption, which means you don't have to register the offering with the SEC. So it doesn't have to be a public offering, but you can still offer shares to people that are not accredited. It's the next stage up from Regulation D. So there's more filings. You have to have your offering qualified by the SEC, which means they've got to read your offering and make sure they're happy with it. With a Regulation D offering, they don't have to qualify it. So you can offer investments under Regulation D without the SEC giving you their stamp of approval, but you do have to record the transactions to a certain extent. As you can imagine, there's lots to it.
And I'm glad this question just came in. I was wondering why nobody asked this, but if I'm currently paying back on a HELOC, would I even qualify for this? I likely have little equity now because the HELOC, right?
But we can use a home equity agreement to pay off a HELOC. Yeah. So the thing with a HELOC, one of the expressions my colleague came up with is, does your HELOC have you in a headlock? So what happens when the HELOC resets is that, rather than paying a few $100s a month, suddenly you've got a couple of $1,000s a month you have to pay. And that normally comes at precisely the wrong moment. So you can use a home equity agreement to, I see you're writing that down, aren't you? Yes.
I love it.
Yes, you can. That is my gift to you, and because it wasn't mine anyway to give. But you can you can use a home equity agreement to pay off a home equity line of credit. So that means you're moving money from your equity account to pay off your debt account. And that means that the HELOC disappears, all the monthly payments disappear, and you've simply traded some of your home equity, to pay off your debt. So that's ideal for many people, because when they took out the HELOC, the world was a rosier place than it is today.
Absolutely. And folks, like one of the other things too, if any of you are remembering yesterday, I was doing all those examples about your lazy money, sitting on your couch, eating your potato chips, drinking your soda. And then I showed the examples of how to put that money to work. But remember, there was always a cost for that capital. Imagine those examples with no cost for capital. The cost comes at some future day on some future appreciation that doesn't even exist today. Literally, like quantum is essentially coming in and banking that the house is going to appreciate in the future. It has nothing to do with your current value. Well, it does, because that's your equity, but they're looking for the future appreciation, which you don't even have now. Imagine being able to use money and you don't owe any monthly payment on any of those examples. You don't have any debt. And the only thing you're sharing is something that doesn't exist today.
Yep.
That's the way that I've kind of explained this. And, I think it goes, that's why I like that. Does your HELOC have you in a headlock? And it does a lot of people.
I wish I'd thought of it. That's right.
That's a good
But
one.
I use it frequently and claim it's my own. I find that's the best way to get along in life, is just,
And then just own it. Once you pull the equity, can you do it again and again as equity rebuilds?
No, you can't, through the one agreement. If you wanted to take out more equity, you would have to pay off the first agreement with another agreement. Now that can become expensive because of the amount of cushion that we build in. You'd have to sort of pay that off as well. So it's not designed to have this sort of drawdown facility. So that's why what we recommend to people is, if you have a certain amount of equity, try and get the most out at this point, because the way these are structured, they're not really designed, to be instigated over and over again.
Oh, this is good. Oh, one more came in. Can you make a deal against rent? Oh yeah. Nobody asked about rental properties. Wow.
Yes.
Cynthia, thank you. Yeah. You know where we're going with this one.
Yeah. I mean, and the answer is yes. We can invest in rental properties, owner occupied properties, single family, multifamily, condos. So really anything up to 4 units, whether it's owned by you or whether it's occupied by you or not. So we will invest in rental properties. So it is really helpful or useful if you're a small portfolio owner, you've got a number of properties where equity has built up because you've had them, for example, over a number of years, but you can't borrow any more money because your rent roll won't support any more lending. We can unlock some of your equity, give you a cash lump sum, which you can then use possibly to buy more properties.
You guys think in the future you'll open this up for commercial properties bigger than 4 units?
I think no is the short answer. And the reason for that is because,
Probably smart.
well, I think there's such a massive opportunity with residential. I mean, as we said, trillions of dollars. There's much more motivation for homeowners, and commercial transactions tend to be very individual. So each commercial deal is a standalone deal. So if you're looking at things like malls, for example, where you've got triple net leasing, you've got a number of different moving parts that really don't support this type of equity approach. This is a cookie cutter approach. So in other words, if you're a homeowner, then this is the formula. For commercial property, we'd have to have, all sorts of different formula, and the motivation just isn't there. So we get asked that question a lot. And really, I think we want to stick to our knitting, and just because there's so many other benefits that this brings to homeowners.
Yeah, no, that's a good one. I mean, sometimes you just got to stay in your lane, and that's the smartest way to do it. So Matthew, this has been awesome. Real quick, I'm going to post the contact info. Oh, Matthew, one other thing nobody asked is there, when they go to this website, can they get is there like a calculator to tell them?
Yes, there is. So there's a calculator that gives you an approximate indication of how much we could offer based on the information you put in. So you put in your address, the current value of your home, and how much you owe on it. And then we'll tell you how much we could invest. Now, there's no credit check or anything like that involved. It's really just a straightforward calculator. We are rebuilding and improving the user experience, and that'll be rolling out again, over the next few weeks. So that there'll be far more information that we can give you about your particular home. But at the moment, yes, it's there, and there's also a free guide that you can download, and that there's other information. There's podcasts and videos, and a wealth of information that you can sort of go through if you want to find out more.
That was fantastic. And one thing, I want all of you to wrap your head around. Imagine if someone on here has a bunch of debt, high interest rate debt, like credit cards. So let's just picture 20%. Imagine being able to extract the equity out of your house. You pay off the credit cards. You take the monthly amount you were given to the credit cards. You start a private bank or do one of these other amazing things, maybe a dollar cost average into crypto, whatever these things are. And you have no monthly payments for that. Imagine that, like picture, sometimes it's best to kind of envision what life could be like by just changing one thing. And Matthew just gave you an unbelievable resource through Quantum RE to be able to tap into that equity without being in a headlock from that HELOC. I'm going to keep saying that. It's so cool. Yes. But anyway, Matthew, thank you from myself, from the staff, for being part of this. You bring such value in something that so many people need and can truly change their financial futures with.
Well, and again, it is a real pleasure to be on. And so, please feel free to reach out. And we've done hundreds of these. So in other words, this is, we have all sorts of programs. We've got some very experienced people to help you navigate. And so it may be new to you, but it's not new generally, which is, I think, a really good thing. So there's lots of, all the bumps and wrinkles and banana skins have all been, ironed out and stepped on. And I think I've overextended my metaphor there, but it's something that we can offer today. So, don't hesitate to reach out to us.
You got it. Well, Matthew, thank you. And we'll be seeing you on the next one.
Wonderful. Thanks again.
Okay. Bye. All right, Stephen, how we doing?
I think we're doing awesome.
I do too, man. This has been an action-packed day. I mean, literally, we were talking over text with the team, just being like, this is ridiculous how good this information has been today. And that's from us. Like, you got to understand, when we build these folks, like, we know the speakers, but the way we organize it, and all these speakers are bringing different information. Kevin's presentation was different. Chris's was brand new. I'd never seen that before, talking about mobile home parks like you did. Spencer, brand new. Bo was the only one that was the same, and Matthew, kind of every time he does it, it's a bit different. And it's just awesome that you guys are getting this information, because, and I think all of you are thinking what I am. I wish I knew about this stuff sooner, but it doesn't matter whether we know about it sooner or, now, because you got to make sure that you don't ever catch yourself in this situation when you seem like, you got to make a decision, but then you start saying, well, maybe I do it. Maybe I don't, maybe I will, maybe I won't. Don't get yourself in that situation. The information you're getting, there's a lot of it. And some people are saying, it's like drinking from a fire hose. There's so much, my head's spinning. Don't let your head spin. Pick something that is applicable to what you can apply now. If you got a ton of debt, this would be something that would apply. If you have money to invest, the Chris Rude, the mobile home park, all that stuff, the private money club, all those are great opportunities for you. And tomorrow is going to be a lot of the same. But what we're going to do now is I'm going to turn it over to Stephen, and he's going to kind of do a little closeout for the day and tell you about a couple other things. And then we're going to go right into the bonus session. And I can't believe it, Stephen. This is the first 3-day we've ever done. Look at the time. Look at the time. What does that say?
Well,
we're on time. How?
How? Because we skipped the speaker.
We're trying to actually make it seem like we were on time. We would have been a half hour over if the speaker came.
Half hour. Jack Bosch would have been at least another hour. That guy creates all kinds of questions.
Oh, I know it.
But no, so Jack, obviously we didn't get to him today, but we're in the middle of working on getting him on tomorrow. So just plan on going long tomorrow, I guess, right?
In worst case, let's just say we can't fit it into the busy agenda tomorrow. What we'll do is we'll have Jack do a private recording of what he would have done, and we'll email it to all of you so you have it. I mean, listen, like when we say we're going to do something, we do it. And if it doesn't happen, we find a workaround, right? Because you got to be cool and you just got to make things work. And hey, that was the first time Spencer came on. And you all, I know you would have been probably upset if I cut him off mid in your questions, and we made a decision, and that's how it worked out. So Stephen, from here, like, take it home.
Yeah, awesome. So I just, talking about the Private Money Club over the last few weeks, and just everything that we've been doing on the private money lending side and all these passive investments. And, now that we've been doing these virtual workshops for, over, almost a year now, I guess, right out a year now, this is the 6th virtual one that we've done. It's really given us a good idea of what people are looking for and what, how we can bring the most value to you. What are you looking to accomplish? And, what I found, which is a little different than a lot of done in the past, is in the past, I've worked with a lot of active investors. So I've worked with people that are starting wholesaling businesses or getting into flipping for the first time, or looking to just kind of expand their businesses and add on rental properties and grow their portfolios using the BRRRR strategy, the BRRRR method of acquiring long-term hold properties. And so I've dealt with that a lot in the past. And over the last year to a couple of years now, I've really learned a lot more about the passive investing side, especially since I've met Chris and really have dug into infinite banking and how to keep money constantly moving at all times. And, I've always known that's the key, but I've never really seen the whole thing happen where it all comes together. So I've really dug in over the last couple of years now, especially over the last year, working with our money school students on the passive investing side of things. And so one request that we get very, very often, especially when it comes to the Private Money Club, is, okay, I go into the Private Money Club and I want to lend my money on deals that people, borrowers that need money for deals. But how do I do that? Like, what's the best way to structure the deal? How do I evaluate and make sure it's a good, it's a good deal for my risk tolerance? How do I make sure that I'm following the correct steps every single time to protect myself, where if something does go wrong, I'm not going to lose out on my money. My money's always protected at all times. So what we've done is we've decided to put together a new coaching program. It's called the Private Money Lending Coaching Program. So it's plain and simple. But what it's going to be is it's going to be a 6-week coaching program. So once a week, we are going to meet for about 90 minutes. And during those 90 minutes to 2 hours, it's going to be myself and Irving Moya, who you guys have met on some of our past group coachings, and he's been on MSTV with us. So myself and Irving are going to spend 6 full weeks with you and basically teach you everything you need, from becoming somebody that knows nothing about private money lending to be able to go into the Private Money Club at the end of the 6 weeks and having the confidence to lend your money to somebody on your first deal. So everything start to finish that you'll need to make that happen is going to be included in this private money lending coaching program. So the 90-minute weekly coachings are going to be a group coaching. So it's going to be through Zoom virtual. We are going to give you action assignments after each one of the coachings. So you will have work. This isn't once a week you show up and you learn. This is once a week you show up and you learn, and then you spend the next 6 days doing what we tell you to do to get you set up. So again, at the end of the 6 weeks, you're out there and ready to deploy your money to your first deals. So that's all going to be, we're going to give you all the samples and examples of contracts, of promissory notes, of mortgages, of everything that you'll need to do. So you have an idea, and then we'll show you how to have those papers drawn up through an attorney and have the borrower pay for all of it. So it's not coming out of your pocket. So we're going to show you all this. I did have I was going to share my screen real fast. Chris, is there something you were going to show on here real quick?
No, I was just showing, these are just the sample agreements that you're talking about. I was trying to time it as you're talking. I missed it a few times, but I did my best, man. Did my best.
No, that's perfect. Yeah. So those are going to be some of the four. So we'll go through those, exactly what needs to be on them. But I just wanted to share this too real fast. This is just going to be a basic outline. And we do have a workbook that's going to go along with it. So you'll actually receive a workbook so you can follow along with the trainings each week. You'll be able to take notes and fill in. And again, all your assignments and kind of homework are going to be on there also. And then of course you'll have that built-in private money club that you'll be a part of that you can log in and have borrowers evaluating perfect loan proposals and be ready to lend your money. So if you take a look real fast on my screen, these are going to be the basic trading topics of what we're going to be going through. So, how to become the bank and determining your lending criteria. So what kind of lender are you? What is your risk? What are you willing to accept? And let's focus on those kinds of deals. Is lending right for you? Is this something that you want to do on a regular basis? Do you want to stick with, commercial properties? Do you want to stick with residential properties? How does that work? Different sources of where you can find money. So again, things like self-directed IRCs, your specially designed whole life policy, privatized banking, lazy money through employer sponsored plans, through HELOCs, through money that you get from Quantum RE with Matthew. So where are you getting this money that you're lending out? And then again, like we always talk about, going out there and being able to educate your neighbors, your friends, your family. Hey, I'm personally lending my money to people on these deals. How would you like to be involved with that as well? How would you like if I can show you how you can use the equity in your home to create an extra 7 to 10% returns on your money out of money that otherwise you were growing at zero? So how to create extra income. I mean, who doesn't like making an extra $500 to $1,000 a month for doing basically nothing? So you can show people how to do this, and you'll have all the education, and then you can deploy it for them. Say, hey, listen, you can invest in these deals with me. We'll be partners on it, and a lot of people do that. I've seen it happen all the time. So how to evaluate deals, like I was saying. So when you do go in, how do you read the perfect loan proposal to a T? How do you know what to look for? How do you look at things like after repair value, research properties? How do you start finding these deals? Even looking in local markets. So you got to think about things that maybe you wouldn't otherwise. What's the crime rate in that area? What is the growth? Chris Rude was talking about it earlier. Chris Rude looks for mobile home parks in areas that have good school districts. Is that very important? Absolutely, it is, especially for people in those markets that want their kids to have a good education. So that's all important when you're lending your money as well. What kind of buyers are in the area? What do the numbers look like? All that good stuff. And then we're going to get into borrower's credit worthiness. Again, private lending, you can lend, asset-based lending is lending on the deal where you don't really care. But if somebody's new at it, what is their, record of paying back loans? What is their record of using other people's money on deals? If they're brand new and they don't have a track record of that, maybe we take a look at, okay, what is their credit, worthiness in the past on credit cards or on other things like that. It doesn't have to be your determining factor, but it's good to understand that aspect of it and put it into your overall opinion. And then if they're a little more risky, maybe you walk away, or maybe you say, instead of 12%, maybe I'm going to charge them 15%, or maybe I'm going to charge them 10% and a couple points up front. So I'm protected. I still make some money. So there's a lot of different ways to arrange that and make that happen, and what you're looking at. So we're going to teach you all the details of that over the 6 weeks. So should I go for interest or equity? And again, this goes back to, should we do a partnership? Should we do a JV deal? Am I doing straight interest? Am I charging points? Are we going to have skin in the game? I'll give you an example. If you're going to do a flip and it's the person's first flip ever, maybe you charge them 12% and you're going to take 20% of the equity that they do, that they profit on the deal. So there's a lot of different ways to arrange these and set the terms. So, and all deals are different. So it's important to understand exactly what you're doing. So how to protect yourself and your cash, this is the most important part of all, where no matter what happens on that deal, best case scenario, you get all your money back in the time frame that was allowed in the terms of the contract and of that mortgage. Worst case scenario, something goes wrong and maybe you have to take over that property. So what do you do from there? What do you do with it? But the bottom line is having that protection in place where no matter what, your money and your wealth is safe and protected. And that's going to be the number one. So every step that goes along with that, filing the paperwork the right way, having it created the right way through the attorney and all of that. So protecting you is going to be very, very important. And then of course, let's not forget about, what if a natural disaster happens? What if a fire happens? What if some contractor that's having a bad day plugs something or wires something wrong and the whole house goes up in flames and the whole investment burned down? So making sure you have the proper insurance coverage on that. Again, protecting you and your money is number one when it comes to anything that we do in money school. So, and then we're going to get into different examples, running scenarios, evaluating deals that we've done in the past, and then putting it all together with the action plan on the last week, again, where you are ready to get in and lending your money immediately following this class. So who would this training coaching program be for? Well, anybody that is looking to do private money lending and you don't have the confidence right now to go out there and do it on your own, let us help you with it. And we are going to do a special introductory investment for this. It's going to be within a couple dollars, $2,497. So right under 2,500 bucks. Which is going to, again, include everything. And we'll get you a few months into the private money club as well included with that. So you can get up and you can get lending your money out immediately. So how do you recoup that 2,500? One private money loan set up the right way, you're going to make your money back 2, 3, 4 times that. On your first private money deal if it's done the right way. So it'll pay for itself. But again, the bottom line with this is protection. One contract done the wrong way, one way of looking at a deal and forgetting about something on it, hey, I've seen so many times where people lend money, the deal looks awesome, but what do they forget? They forgot holding costs. They forgot the cost of time. Okay. Because if you hold a property for 4 to 6 months, you're paying taxes, you're paying insurance, you're paying the interest. There's all the holding costs. A lot of times people forget to put that into the evaluation. So one little thing that you do wrong, or that we help you avoid doing wrong, is going to pay for this coaching all in itself. So this is a coaching program that I've personally been involved with in the past and have taught. I know Irving has taught these class many times, is work with people one-on-one. And the typical investment for something like this is around $10,000 to $15,000. So like we do with everything with Money School, we're getting you in an incredible investment because we want you to be successful. We want you out there telling other people about it. And we want you making money on your money. And that's what private lending is all about. So it's going to be $2,493. As soon as my tech team has this set up along with the private money club, again, this will go out to you guys. You'll have first dibs. I talked to Irving about it. We do want to keep our first group small. So we're going to limit it to probably 15 to 20 students. So 15 to 20 students is going to allow Irving and me to work with you throughout the week on top of the coaching. We can work with you throughout the week in case you have any questions or you need us to hold your hand through any of the steps that we're teaching you. So we're going to limit it to 15 to 20 people. And then, so we're going to give it to you all first. I have a list already going of our Money School students that I've spoken to that want into it, that I'm going to offer to first, and then we'll open it up to the rest of our community. So you guys will be part of that initial group also. So I look forward to teaching it. There's a lot of questions and answers on it. I'm happy to answer any questions if we have any, but the bottom line is we'll teach you to protect it and go from there.
Yeah. So lots of people saying, put me on the list. How do I sign up? Where do I sign up? I sent over one link for Inner Circle, like the Private Money Club Inner Circle, which is our first live event since COVID. So how are we going to do that? Are you going to send everybody a personal email? I mean, we have 70 people. You're just going to send them a personal email?
Yeah. So for the private money lending coaching, I will send you a personal email from me. So that way I'll just give you the details. If you want to sign right up, it'll have the link to sign up. If you have any questions, I'll pick up the phone and call you and we can talk about it. And then, as Chris said, with the coaching is virtual. So we're sticking with the virtual thing, but we are starting to do some live events. So the Inner Circle, Chris, you want to kind of tell them a little bit about the Inner Circle? It's the flagship, live event that we do. And
so the Money School's Inner Circle, which is now going to be called the Private Money Club Inner Circle, is an event that I've been doing for years now. And we were doing it every single quarter. It always sold out. And it was because it's a restricted event. It's high level in person. So you do have to fly to Buffalo. We'll help you with, like hotel arrangements and everything. We know all the good ones around here. And then both days, we spend 2 days. They're done right here at the office. It is fully catered. So we provide all your food, all your snacks, all your drinks, coffee, Red Bull, whatever you want. Only Starbucks coffee. So if you don't like Starbucks, we're going to have a problem. Second thing, at the first night, what we do is we go out to a really nice dinner at my friend's restaurant. We have a private room. We mastermind. We talk. It's open bar. It's all included. You just get here and pay for your travel in the event. And then we basically do the rest. So that's the experience part. But the other thing that we do is we spend literally 2 days going deep into private money lending. That's all the event is. It's basically all private money, but whether or not you're a private lender or somebody looking to borrow, each party, like I said, it's for both sides of the coin, and it is our flagship event. It always has been. I'm really excited to get out and do them live again. So that's the event. I just put the link up. There's only, I think we already have 5 registered. We only hold 12. So you can do the math. There's only 6 seats. That's it. And
are you still teaching the Burr method in there too? Building a portfolio using Burr?
absolutely. Yep. The Burr method is a big piece of that.
For me, that was a big deal, is just because I still love rentals. I know I know it's kind of up for some people right now. I'm still a big believer in long-term hold of properties and rentals. So I'm always building my portfolio, and just the Burr method is one of the best methods I've ever seen for being able to constantly add on to that portfolio. So I love that part of it. Yeah.
Well, I mean, I didn't trademark the name Burr, the BRRR thing, just to kind of abandon it. So we definitely still teach that at the Inner Circle. So if anyone is interested in that, there's the link. It's moneyschoolrei.com/inner circle. The next one I believe is in July, and we'd love to see you out here for that. We will make it an incredibly memorable experience all the way from the second you get here to the second you leave. And I'm just going to mention one other one before we do bonus round is the money multiplier experience. We are starting something awesome. It's not available. We don't have a link. We haven't even started talking about it, but because you guys are here, I'm going to mention it. We are doing an experience event. Okay. We're going to have, I'm going to tell you who one of the speakers is. It's not locked in yet, but you guys ever see the movie Rudy, about the football player that, that story of perseverance? Rudy will be here. That will be one of the experiences. The second part of the experience is this event is live at my house. It's at my house. So it doesn't get more intimate than that. You're going to basically kind of come into our world. We're going to have speakers coming out. You're going to have Chris Rude there. You're going to have Robert Sislow there teaching all about marketing. You're going to have Randy Garn. Maybe you should look him up. He'll be there. Rudy will be there for one of the days. Randy Steinhaus, I think is his name. He actually bought the old Yankee Stadium. He will be one of the speakers. And then that's all day one. We do a really nice dinner. So we do an intro dinner Friday night, which is going to be at a nice restaurant to introduce everybody. That's just a kickoff the night before the event. Day one is at my house. And then also we go out to dinner and out on the town in Buffalo. And I know a lot of people are like, oh, downtown Buffalo, what's that? It's actually pretty freaking cool. And we're going to take you to, we don't have the restaurant figured out, but it might be the original chicken wing place, even though I'm vegetarian. You guys might like that. Then day two is all experience, and it's done at a lake. So we're going to rent a boathouse, like a clubhouse at a lake. And we're literally going to spend the entire day on the lake with all sorts of activities, some water-based, some not. And that event, it's not going to be cheap. Okay. It's going to be $49.92, but that's because it's doesn't get any more experiential than that. That one's going to be in August. So you're right. You can't beat the weather here in summer. It's absolutely stunning. So those are the 2 events we've got coming up, plus the coaching and the training. We're going to give you emails on all this stuff because we're not here to just sell, but we had to let you know. So we'll give you emails so you guys can do that. So where do we go from here? You want to do bonus?
Yeah, buddy.
Nice way to write off your house. All right. So we're going to stop recording and we're going to go into the bonus round. So for all of you that joined us for day number 2, this was the tidal wave. Unbelievable information. But tomorrow is the second tidal wave. There's never just one tidal wave. There's numerous tidal waves, and we have 2 of them. And tomorrow's going to be the same. Kicking it off with Brent Kessler. Get ready. If you haven't seen the privatized banking and the money multiplier method, it's going to blow your mind. If you have seen it, you can never see it too many times. I can promise you that much because I've seen it more than just about anybody. And I'm going to end day 2 with this one. Formal education will make you a living. Self-education will make you a fortune. You are all starting to see some of these things that the wealthy do with money. You're starting to see some of the people that we surround ourselves with that have helped transform all of our lives, and we want to share them with you so that transforms your life. So I hope you guys enjoyed day number 2. And for those of you sticking around for the bonus round, we'll be right at you.